All right, guys, before we get into chapter 2, we're just going to do a little recap of what we did in chapter 1. All right. So let me ask a couple questions to you guys and see how well you fare. Are you ready?
Yes.
All right. Ready to go, everybody, right? Okay. What's the purpose of licensing law?
To regulate the general public.
To regulate the public? No, come on. We have the Constitution. Government's not supposed to regulate us.
Is it to protect the public from?
There we go. To protect the public. Purpose of licensing law is to protect the public from unscrupulous brokers and salespersons, right? And what is the real estate law or the New Jersey statutes also known as?
Title Act
4515.
Title 45, Chapter 15. So what do we call the rules and regulations of the Real Estate Commission?
Statute.
Administrative code.
The administrative code. And what are the numbers for the administrative code?
11.5.
11.5, Title 11, Chapter 5. Yep. All right. Let's see. Who is exempt from having a real estate license when selling real property?
Attorneys.
Owners.
For sale by owners.
Owners.
Attorneys when? Be more specific with that.
When it's a will.
Well, when they're operating during their normal practice of law. That's the way they'll probably word it on exams. So during their normal practice of law, but an attorney that wishes to engage in the brokerage business needs to get a license just like us, okay? Let's see. Can we sell mobile homes?
The resale of
The resale.
Resale of mobile homes. That's right, because we're not licensed motor vehicle dealers. You need a license for that too.
Right.
Okay. What are the 4 license types from highest to lowest?
Broker, salespersons, and
referral agent.
The
referral agent.
broker, salesperson, and referral agent. Which is the only license type that's allowed to charge the public for fees for services performed?
Broker.
The broker. So how do we do it?
Through the broker.
Broker.
We do it under the name of the broker
Under the
which
name of the
we're
broker.
employed. Okay.
Right. Under the
Who can you be paid by?
The broker.
broker.
Only your broker. Who can you pay?
Nobody.
Nobody. That's right. Who can your broker pay?
Anyone.
Other brokers.
They can pay other brokers when they pay out a referral fee.
Us.
Salespersons.
Any of their licensees, so we won't have to go over all the license types. Any of the people who are licensed under them, who else? They can pay someone else.
They can pay rebates to the
Okay, they can pay rebates to who?
the home buyer. Homeowners of primary residence.
There we go, the buyers of a primary residence. So they can only pay out a rebate to a buyer of a principal residence, their primary residence. So those are the 3 people that your broker can pay. Any of their agents, any of their licensees under them, another broker when they pay out a referral fee, or to a buyer of a primary residence, they could give them a rebate, okay? And we do all these things as well. We just do it in the name of the broker that we're working under, right? Or brokerage that we're working under. All right. So what does it mean to be a realtor? Does that have anything to do with state licensing, being a realtor?
No.
No.
No, it does not. So what is it? What is a realtor?
You're a member of a National Association of Realtors?
Yeah, you're a member of a trade group, a trade organization, a business group, right? That's all it is. And they call their members realtors and realtor associates. All right. Now there's some other variants of that we're going to learn about probably today as well. You know, we also have, there's not just the Realtors Association. We always find ways, even though we say we all got to come along and be the same, we all look for ways to separate ourselves. You have an Asian American Association of Realtors, you have an African American Association of Realtors, you have a Hispanic Association of Realtors, you have a Women's Council. There's so many different associations of realtors that you could join in addition to the regular one. All right. But remember, you got to pay dues for them. Okay. So, but if you want to say that you're a member of this or that as well, there you go. You could join. Okay. Now I could join any of them. Why? I don't fit any of those categories. I'm not a female. I'm not Black. I'm not Hispanic. I'm not Asian.
You're a broker?
Because you
Yeah.
have,
Broker.
yeah.
Because that would be discrimination.
Oh.
Ooh, right. As a matter of fact, me and my ex-wife, we actually started Women's Council in New Jersey. So I was actually a founding member of Women's Council in New Jersey, although I don't get any credit for it. You know, but that kind of got hijacked by a local brokerage as a recruiting method. So I just like dropped out of it. I'm not even a part of it anymore. Anyway, that's a little lesson there though, because that's something that you're going to hear about when we get to chapter 4 about discrimination. They talk about that. Even though I don't fit in any of those categories, I cannot be denied membership in any of those groups. All right, let's see. How many members on the real estate commission?
8.
8, consisting of
5
5,
brokers.
The
Have
5
had-
realtors.
5 brokers who have been brokers for how long?
10 years.
10 years.
10 years. Government
And
appointed.
One
Two
appointed by the
public-
governor. And 2 what?
Two
Community-
public community members?
Yeah, 2 appointed from the public. Okay. And they all serve how long?
3.
3 years.
3-year terms, correct. All right.
except the Government guy.
Well, any of them can be replaced by the governor at any time. Okay,
Right.
so yeah, but that one's usually replaced anytime the governor changes, that person usually gets changed, but they all serve 3-year terms. Can an unlicensed person put a sign on a property?
Yes.
Yes.
Can they make keys, copies of keys for company listings?
Yes.
Yes.
They can. Can they deliver contracts?
Yes.
Yes. They can't discuss.
Talk about them though, right? Yeah, there you go. Let's see. How old do you need to be to get your salesperson's license?
18.
All right. And how old do you need to be to get your broker's license?
18.
18.
And how long do you need to be a full-time salesperson to get your broker's license?
3 years.
3 years.
Years. And what is full-time?
Between the hours of 10 and 8, 5 days a week.
No other jobs.
Right, yeah,
No part-time job more than 25 hours.
More than
25
25 hours. Okay, so 40 hours a week between the approximate hours of 10 and 8, and not have another job more than 25 hours per week. All right. And what's full-time once you become a supervising licensee, when you get your broker's license and you're an office manager?
In the office during regular business hours.
All right, so just be in the office during normal business hours, 5 days a week, correct. Okay, so how much further education do you need to get your broker's license?
150 hours.
150 hours, which is a breakdown of 3 classes. Do you guys recall how many hours for each class?
30,
30,
30, 90.
30, 90. Okay, so you got a 30-hour class in office management, 30-hour class in ethics and agency law, and 90-hour class in core topics, which is basically the same stuff that we're learning here. All right. The brokers just get 90 hours to relearn and get re-educated of the same stuff that they already learned a while back. Because when you've been in the business now for about 3 years, you think you know it all. You need to be re-educated. Okay, takes a little time, to try to, when somebody thinks they already know it, doesn't it take a little bit longer to explain it to them again and get them right? So that's why they're given 90 hours to learn the same stuff that we give you 75 hours. Okay. Now let's see. How long do you have to get your real estate license from the time you pass the school exam?
1 year.
One
A year. A year's a year's a year and not a day more, right? And can a corporation get can a corporation get a real estate license?
Yes,
What's
Only a
required?
board member, the board member, right, can get it.
Well, a corporation can be licensed, but only if one of its members has a broker's license.
Has a broker's license.
And they would become the broker of record for the corporation. Here, let me give you an example. Let me explain that so it makes a little sense to you right there. I got a real estate company. It's called Jersey Brokers, right? My company is a corporation, right? It's licensed. Okay. I am a member of the corporation. I am the broker of record. See how that works? That's all they're trying to explain there. It sounds all more complicated than it really is. All right. Can somebody who's not a resident of New Jersey get their license here in New Jersey?
Yes.
What do they got to do?
Agree to be sued.
They got to sign a consent to be sued in the state. Correct. And if your broker goes insane, they die, they become mentally or physically incapacitated, who can take over for them?
Broker salesperson.
Anyone
Somebody
that has
has a license?
years of experience?
Okay, a broker salesperson, first you see if there's somebody there with a broker salesperson's license, somebody said that. Then if there is not, then who would you say? Somebody was saying it.
a salesperson,
What kind of salesperson?
one that has years of experience.
Okay, one that meets all the requirements in order to get their broker license, that 3-year full-time experience
Yeah.
requirement. They just haven't applied for the broker's license yet. How long do they have to apply to get a temporary broker's license?
They
One-
have 1 year.
Well, they have 30 days from the time the broker became incapacitated to request a temporary broker's license be issued to them, which will be good for 1 year. Okay, they got part of it there.
Okay.
And then what do they got to do within that year?
They have to
They
get
have-
a broker's license.
They got to make it legit. They got to do what's required to get the broker's license. They got to take the 150-hour course, pass the exams, right? Pass the state exam, get fingerprinted, etc. Yeah. I'm just trying to recap and just break it down in understandable English, instead of all the, the formal speak that they use in the book. Okay. Let's see. Oh, how much do you pay to get your license initially as a salesperson?
$160.
100 and what?
60.
$160.
160.
All right. Why so much? Doesn't it only cost $100 to renew your license?
Fingerprinting.
Yes.
guarantee.
Fingerprinting.
Well, not fingerprinting. Fingerprinting is separate. That's for the license fee
Guarantee.
the first time.
Background check and the guarantee fund.
Background check goes $50 to the background check and $10 to the guarantee fund. Correct. So how long is your license good for?
Like 5 years,
2 years?
You should give me a date.
June.
You're right.
Oh,
30th
June
normally,
30th.
but not for you guys at the beginning, right?
No,
So let's not say 2 years. So let's say, what date is it good till?
Renewed by
June
June.
30th of odd years.
June 30th of odd years, right? And if you don't renew it by June 30th of odd years, it expires when?
July
June,
1st.
July 1st, the next day.
July 1st.
All right, but before you could renew your license, what do you need to do?
pay
Take your
$100.
continuing education.
Continuing education.
Yes,
credit.
you need to.
Oh,
complete
yes, continuing
education classes. How much?
2 months before.
How much?
12 hours.
100
12 hours of CE.
Credit hours.
12 hours.
What's the breakdown of the CE?
4 ethics, 2 core.
Other way around.
2, oh,
4 core, 2 ethics.
4.
2 ethics, 4 more core.
4
Because
core.
ethics is considered a core class too, but it's a specific, you have to take that one. So 2 ethics, 4 more core, and
4
any
core.
approved class, whether it's ethics, core, or electives. All right. And when does that need to be done by? Kim, you said it
April
before.
30th.
April
2 months.
2 months
April.
before the
Before
license
April.
renewal, which is April 30th, right?
April 30th.
So that's this month. I got me 16, 17 days to finish mine. Actually, I think I got to start mine. All right.
Weeks.
Where do you find the time? You know, there's not enough time in the day to get everything done. Oh, geez. All right. And then, oh, if you don't renew your license and it becomes inactive, how long can it remain inactive and you could still reactivate it?
I saw it
2 years.
1 year.
2 years.
2 years.
Okay, so 2 years or within the next term.
Within the
Oh,
next
yeah.
term. Right,
So
right.
the next term, which is 2 years, because if it started right there from the beginning, you're gonna get that full 2 years to reactivate it. Okay. Oh, so $10 goes to the guarantee fund. What is the guarantee fund? What is the purpose of the guarantee fund?
Back all of the,
I don't know about all, depends how much money people
well,
put down, but to
some of- reimburse people who have been brutally misused or by
Yeah.
robbed. Okay,
Yeah.
robbed. There you go. Robbed. Yeah, people who've been robbed by brokers and bad salespeople.
Sorry about that. Something popped up on my computer. Now my virus thing is going. Okay. Maybe that's why it's slow. All right. Okay. So yes. So it is for to reimburse those who have been robbed or lost money due to their brokers or brokers licensees or unlicensed employees, you know, taking advantage of them or robbing them in some way. All right. What's the maximum that the guarantee fund would reimburse?
20,000.
$20,000. And what's the how much do salespeople pay into it again?
$10.
And brokers?
$20.
Okay. How long does somebody have to file a claim to claim that money from the guarantee fund?
6 years.
6 years. And what if there's a payout from the guarantee fund? What happens?
They revoke your license.
They revoke your license. Your license is revoked. All right. All right. Let's see. In rental referral agencies, if they advertise a property, how often do they need to check to see that a unit is still available?
Daily.
Every day.
Every day. And if they don't advertise it, but they just have a listing?
Every
3 days.
Correct. And if they give you money to hold the apartment, anything over what amount has to be put into the escrow account right away?
$25.
$25, correct. All right. And that was pretty much the recap of that. Oh, wait. No, we went over some other things. So I'm gonna go over a couple other things. What does the word rescission mean?
Take back.
To take back or cancel, right? Your right to cancel a contract within a given period of time.
Right.
So what is your typical rescission period for any property? Resale property, new construction, doesn't matter.
5 days? No?
7 days.
3 days, the attorney review time?
3 days, that's your attorney review period. Now, what about for new construction, either in-state or out-of-state properties marketed to New Jersey residents?
7 days.
7 days. What about for new construction for the discovery of off-site conditions?
5 days.
5 days. And what about mortgage loans to purchase real estate?
No days.
0.
Hmm.
And what about mortgage loans to refinance property you already own?
3
3
days.
days.
3 days.
Very good. Very good. All right. So that's it for our recap. All right. Let's get started now with the lesson for today. Chapter 2. Commission rules and regulations. So we're going to be learning a lot about the advertising rules and regulations of the Real Estate Commission that apply to any kind of medium that you use. All right. So at the end of this chapter, you're going to identify standards set by licensing law, commission's rules on the brokerage, explaining commission regulations and business relationships, advertising, describing violations. We're going to learn what the violations and penalties are of violating licensing law. And we're going to start off by going over as what a salesperson may not do. On the first page, we're gonna highlight at the end of that paragraph, a salesperson may not, and then those 3 bullet points that says what's on the board here. The board. I keep saying the board. Accept any form of compensation except from their supervising broker. We already learned that, didn't we? Maintain an escrow account or hold funds belonging to others. Why? Because that's the broker's job. Or work for more than one New Jersey broker at a time. We already learned that one too, right? See, there's a method to my madness, how I teach you guys. We mentioned something in another chapter. I'm going to go over it with you. I know it's going to be coming up part of the lesson. It's just now by the time we get to it, oh, you already know that stuff, you know? So place of business. So let's turn the page. Any broker who is licensed, anybody who's licensed as a broker in the state of New Jersey has to have a physical place of business. We do not have virtual brokerages in New Jersey. So every broker who's a resident of the state must have a physical place of business. And we're going to highlight on the second line that sentence. I guess that's the second sentence under main office. All right. The broker's allowed to have an office in their own home, but there's certain rules for that. Now hold on one second. People cannot just open up a business in their house, okay? So that's a given. Your house has to be in an area that's zoned mixed use, that you can have a business. You guys ever see an attorney, a chiropractor, a dentist? They have an office in their home. It's like a separate entrance, you know? That's the kind of deal that they're talking about. So it has to have, and it has to have that same rule. It has to have a separate entrance that's visible from the street. It can't be that you got to walk around the side or the back in order to get to it. It has to have a separate entrance visible from the street if the office is in the broker's home. And it has to have a sign. That sign has to have the words licensed real estate broker and have the broker's name on it. Okay. So it has to have the broker's name and the words licensed real estate broker. They usually put that on the door or the window or what have you. Now, usually they go beyond that and they put up the name of the company and all that stuff. But what's required is to have who's in charge, who's the broker of record, so the public knows who to report if there's a problem, right? So that's usually an exam question. Can a broker ever have an office out of his house?
Yes.
What are the rules for that?
Separate entrance, visible
From the street, and a sign that says,
a licensed broker and his name.
and their name. Okay. Can the office ever be in one of the broker's associates' home? Salesperson, broker, salesperson, or referral agent? Never. Okay. So that's what the next thing is. Let's see. Office management. Oh, wait, no, actually, I didn't have that written here. Something to add to the slide. Oh, there we go. See, we're always tweaking these slides up just a little bit, right? Right here. I could add another little thing in there. The office must never be in the home of any of the brokers associates, or I'm gonna put / licensees. All right. There we go, that'll work. All right. Office management. So actually, does it say that in there here anyway? No. All right. So let's, in the next paragraph, let's highlight the broker's name and the words licensed real estate broker must be conspicuously displayed on the exterior. Then in the following paragraph, you already have what full time is.
Yeah.
All right. Now, in between, we didn't highlight a couple things that pertain to license lending. It says the office can never be in a home of one of the broker's associates, because this gives way for what could be deemed license lending. For example, I told you guys that I started my brokerage before I had a broker's license. And
Mhm.
I hired a broker. Now, licensed lending would be if somebody allows me to use their license to open up a brokerage, but they're not really going to be managing it. They're going to leave it for me. It's my business. They're going to let, hey, you do your thing. You just pay me a fee and you could use my license so that you could have a legit open brokerage, right? Well, it won't be legit because that would be illegal if the broker's not actually there managing the office. First of all, they're supposed to be there when? Physically present 5 days a week during normal
5
business
days a
hours,
week.
right?
Yep.
So, and you know, when I was interviewing brokers, I had quite a few that came to me and said, I know what you want to do. Just pay me some money, give me a percentage of the total office take, and you could use my license. I know the deal. I've been around the block. And I was like, get the hell out of my office. Yeah. There's a lot of real winners out there, I tell you. All right. But that's called license lending, and that's illegal. So I figure I just bring that up to you because I don't think it's on exam, but just in case, you know, it's easy enough to explain. You know, license lending is a no-no. And that's why they don't want to have the broker, the brokerage in the office of any of the broker's associates, because it could leave itself for the possibility of that license lending hanky-panky stuff going on, you know? All right. Boom, boom, boom. All right. The office must never be in a home of one of the brokers or associates, licensees, homes. Must never be in a home to prevent license lending. Yeah, I'm gonna put that in quotes, license lending. I doubt it's on exam, but now you know it anyway.
Victor, can I ask a question?
No. Go ahead, shoot.
So you're talking specifically about a licensee's home, but what about if it's like another company? Like it's shared space?
All right.
That's a good question.
Is it the broker? Or are you referring to license lending right now?
Yes. So would it be licensed lending? So I'm clear, like you've talked about like their home, but what if it's like a place of business, right? So.
Well,
it could
any physical place of business, a brokerage, you'd have to get you got to get the permit from the city. You can't just start a business anywhere. You got to get a permit from the city that the space is approved by the municipality for whatever business use that you want. So you got to get the business permits for that. Then you need to get the approval from the real estate commission as well. Like I've seen instances where people put businesses inside of businesses, they share space. Real estate commission really doesn't want you doing that. Although I know one lady who her husband's pretty rich dentist, and she got her office. She shares an office inside of his dental practice. Like he got his office in his dental practice. Well, she got a separate sign out there right above the dental practice that it's the brokerage as well as the dental office. And then you go inside, it just looks like a dental office. You'd have to be buzzed in, go in, and then go into the office there. So she obviously only manages, she only got her brokerage license. She doesn't have agents. She got her brokerage license so that she manages her husband's properties and they don't lose money on the commissions for having other people do it. So they own a lot of like, as a matter of fact, the one building that the dental office is in, there's a high-rise luxury apartments. It was touted as when it was built years ago. So basically she does all the property management for all those residential rentals above, or is it, I don't know if they're rentals or condos up there, but anyway, she manages them. And she does real estate business on her own too, but no agents, just her and the other properties that they own too.
So she's clever.
Yeah, it's just the way to do it. Well, I've seen an instance though where you had a guy that used opened up a brokerage in the back office of a restaurant. How do you get to it? Where's the front door? Is it visible from the street? Where is there a sign out front that says this? I mean,
you got to cut through the kitchen.
Yeah, I mean, you got to follow the rules, and if you're not following the rules, it's not legit. So have I seen some wacky things happen? Absolutely. I see people getting away with stuff like this still too, but that doesn't mean that they're not eventually going to get busted,
Mhm.
because the real estate investigators do this. They got lists of all the brokerages. They know where all the brokerages are, right? And they drive around and they do investigations of things when people make complaints, or they investigate on their own. And sometimes they're just driving down the street and they see a sign for a brokerage and they say, you know what, let me pull in there and see what's doing. Let me do a spot check.
Mhm.
They do that sometimes. That happened to me the first day that I opened my brokerage. On my first day, I had an investigator come in, flashed his badge, and he said, let me speak to the broker here. I'm like, okay. I'm like, well, I'm the owner, but what's the problem? And he's like, I finally got you. I'm like, what do you mean you finally got me? I was like, we just opened for business today. And he's like, well, that's the brokerage, the sign out front, right? And I'm like, no, the sign company didn't get here. They were supposed to come here to replace that sign. They didn't get here yet. And he's like, so what's the name of the brokerage? It was a different name, but I still had I took the space of where an old brokerage used to be. And apparently
Okay.
they did a lot of illegal stuff and the investigators were looking for them for a long time. He saw the lights on. He was like, So he was like, cover up that sign. You can't be advertising under a different name. And I'm like, I don't have a crane to get up there. I'm like, they were supposed to come by, I was like, but yeah, I'm working on it, there was a strike going on with the sign company from the sign where I bought it, union strike or something. It was a nightmare. Anyway, so full time for an office manager is physically present in the office 5 days a week during normal business hours and not having another job, or the way they worded on exam, not otherwise employed. Okay.
Mhm.
And who could manage a branch office, or any office for that matter? Somebody with a broker type license, either a broker or broker salesperson's license is required for that. All right. Licenses available for public inspection. Okay, so here's a little thing. The commission requires that the licenses for all the licensees in that brokerage firm have to be available for public inspection. You guys may have gone to real estate brokerages before and seen them hanging in frames on the wall, right? That's a common way that they do it. Well, at least it used to look nice and fancy when they send it to us on the official green cards and stuff. It looked official with the water seal. Now we print them out ourselves on white paper or whatever color paper you want, So what I do is I like to just print them out instead of, it doesn't need to be hanging on the wall in the frame. I actually stopped that practice a while ago because that was a pain in the butt. Because what I found that happened is every time you get a new agent in, or you get an agent that quits and leaves, you have to pull out a ladder, climb up the wall, find their license. You can't read them from the ground. You got to find their license, pull it out, disassemble the frame. It's a pain in the neck. So another way to meet the commission's rules is print out all the licenses for all the agents in that office. You put them in a binder, like with the plastic sleeves, and just have that sitting on the front desk there. You're in compliance. It's available for public inspection. Now, if it's a branch office, all the agents from that office licenses need to be in that binder. If it's the main office, meaning that you have separate offices that we call branch offices, you not only need to have all the agents' licenses from the main office, but also from all the branch offices, you need to have a copy of their licenses in that binder as well. Okay. Anyway, that's what they mean by public inspection. All right. Trust or escrow accounts. So let's highlight the first sentence under branch office and the last sentence. Basically says who can manage a branch office. First and last sentence under branch office. Next, under trust account or escrow account, it's the same thing. It's a bank account where we keep other people's money and only other people's money. I want you to write next to trust account, next to it or above it, wherever you want to write it there. It's a non-interest bearing account. non-interest bearing account unless it's for a property management company for security deposits. So escrow accounts have to always be non-interest bearing accounts unless it's for a property management company that uses it for security deposits. Because security deposits have to be in an interest bearing account because that tenant's money, that tenant has to earn interest on their money. Let me know when you guys are done writing all that. Because I got another little note to give you. So non-interest bearing account unless it's for property management security deposits, right? And then I'll give you a separate note. Brokers must keep escrow records for 6 years. All right. Now, let's look at it from, let's go over the slide and then I'll go over what to highlight in here, okay? So brokerages have 2 bank accounts. They have to have their operating account, which is where they pay their bills, they pay their agents their commissions from. And then they have another bank account that's an escrow account. Some people call it a trust account, same thing. It's a bank account used for keeping other people's money and only other people's money for short-term deposits. All right, it is a non-interest bearing account. It's only an interest-bearing account when it's a property management company that's being used to keep people's security deposits in for the long term throughout the whole lease term. Now, it must be clearly marked. The bank account has to be clearly marked that it is an escrow account. And why is that? So on the bank's records, when you get your bills, you know, or your statements, it has to say escrow account on it. Why is that? Well, if the broker gets sued, or if they, I don't know, something happens, they want to make sure that nobody else touches the money in that bank account. They want it to be clearly known by the bank and everybody involved that it's labeled escrow, which means do not touch, this is not the broker's money. So if the broker got sued and somebody got a judgment against them, they could take money right out of your bank account. You know that? Somebody sues you and they get a judgment against you, they find out you got a bank account, they could take the money directly out of your bank account using that judgment.
Yes, they can.
Well, if it's labeled escrow account, they can't touch it because that ain't your money.
Correct.
All right. Now, licensees must give any deposit money to their brokers immediately. Why? Because your broker only has 5 days to do their record keeping and putting it in their escrow books because they're required to keep records of who gave them the money, what the money was for, how much they gave to them. They have to make a copy of that check, and then they have to deposit it in the bank within 5 days of the time that you, the agent, was given that money. All right. Some agents get this mixed up. They confuse it because they use this terminology. Within 5 days, the money needs to be deposited within 5 days of acceptance. So some agents misinterpret this as within 5 days of the offer being accepted. No, it's within 5 days of you taking the money from your client. This is why the agent has to immediately give that money to their broker, and their broker does the record keeping, and then they have to go down to the bank and deposit it. And they're not going to be running to the bank every time an agent comes to them with a check or money, right? So they're going to, I used to have a sign on my office door that said, poor planning on your part does not constitute an emergency on mine. All right. And that was for various reasons. Sometimes agents forget to request that escrow money when they're going to closing, because don't forget about that. When you got to closing, you got to come back to the broker and ask them for a check made out to whoever the closing agent is, because that's the buyer's money and they're going to have to bring it to closing. Don't go to closing to get your commission check and forget the buyer's money. All right. That's embarrassing. It happens to everybody at some point, but try to be cognizant of that fact. Do not do that. All right. But at the same token, sometimes the agent will hold on to the check that the clients give them because they said, oh, I'll wait for it to clear, you know, or don't write a check if you don't got the money in there yet. Okay. Agents should not be holding on to anything, because if they lose the check or something happens, you know, you're responsible. That's your license that's on the line. The law requires you to immediately give it to the broker. The broker has to put it in the escrow account after they do their bookkeeping. Okay. So you must know these dates and these timelines. What should the agent do when their clients give them money?
Give it straight to the broker.
And then how long does the broker have to deposit it into the escrow account?
5 days
5 days of when?
of acceptance.
What does that mean?
As soon as they get it, go.
Yeah.
Give it to
The contract
You
acceptance?
receive the money from the client.
Yep.
the client.
You as the
Okay.
agent, when you accepted the money from the client, that's when they start counting the 5 days. All right. So look, I've had agents do this before, and I've had a broker do it to me, and I thought it was kind of like a D move on his part, the way he did it. But then when I became a broker, I found that I started doing it too, you know, because it's a way that agents will learn. You know, when your agent gets money from their client, they get a check, all right, and they're supposed to give it to you right away, but they held on to it for a couple of days. And now they're giving you the check for the depositing in the escrow account. And I'm looking at it and I look at the date on it. First thing I do is look at the date on it. I'm like, it's already past 5 days. Throw the check back in their face. Go get a new one. I'm not depositing this and getting in trouble with the real estate commission. Because if the real estate investigators ever pop in your office for any reason, just to even talk, they're going to say, well, I'm here. Let me take a look at your escrow books. And these guys are like friggin' forensic accountants. They're going over the dates and they're looking at the printouts of the checks. And they're like, why did it take so long to deposit this check? You know, and the broker could get in trouble for this. Mishandling of other people's money is the #1 reason why brokers and attorneys lose their licenses. Screw with other people's money. You know, that's a quick way to lose your license. All right. So, you know, you give it back to the agent, say, go get another check. You could explain to your client why you need another one. Now, you'll remember never to do that again. If you're posed with that situation, it's an embarrassing situation. Why did you hold on to it? You were supposed to give it back. You know, so you got to explain to your client. I mean, I did it once and I went back to my client. I'm like, we're supposed to give this to the broker within 5 days. They got to do escrow record keeping and everything. So the date is wrong on there and I don't want them getting in trouble. So can you make out a new check with today's date? And here's the old one back, you know, and you kind of feel stupid doing it, you know, but you learn your lesson. You're never going to do that again because you don't want to be put in that position again. So it's very effective for the broker to do that, even though you're like, you know, it's a D move, you know, it sounds like, it feels like anyway, right? But, you know, you learn your lesson. All right. So the brokers must keep all records accounting for the funds, deposits, any withdrawals in that escrow book. Brokers must keep bank deposit slips. They can't throw them away. They put all of them in their escrow. They got to keep the original bank deposit slips. They got to make a photocopy of the checks. They have to put the notation of who gave them everything, you know. Anytime they write out a check to disperse funds, they have to say what it's for. Is it for closing? Did the deal fall through? What's going on? Was the offer not accepted and the money's being refunded, you know? And how
Are you allowed to keep electronic versions of it? Or you have to have physical copies?
you could have software that does this. But if your power is out and you don't have access to the computer, the real estate commission does not give a crap. They're there and they want to see your escrow books. You're telling me, oh, I don't have access to them now? Oh, how convenient. Fine. You know, so you better have it printed. Even though you keep it in a print in a software, you better have it printed in a book as well so that they can examine it. It must, this is what the law says. Escrow records must be available for examination, period. Okay. Brokers must keep the bank deposit slips and escrow records for 6 years. I had you guys make a notation of that in here too. But you know what, on the next page, when we talk about record keeping, here's your basic general rule. If you're just going to write it in your notes versus highlighting it or penciling it in the book, brokers need to keep everything for 6 years. Everything, all original documentation. They can't scan it and then shred the paper. They need the original paperwork for contracts and everything. They have to keep them for 6 years, everything. Everything from the commission checks written to the agents, to the listing agreements, to the anything, to the bills they pay for electricity. They got to keep everything for 6 years, with the exception of 2 things. Unaccepted offers and expired listings, which they need to keep for 6 months. All right. But I'm going to dictate that to you again in a note shortly. So commingling is prohibited. Commingling is a practice of the broker mixing their own personal funds in the escrow account with their client's money. They're forbidden from doing that. However, the real estate commission does allow the broker to keep a small nominal amount of their own money in that escrow account if it's being used to maintain the account. You know, because banks charge fees for having business bank accounts. So to cover the fees of the bank accounts, so they're not taking it from their client's money, the broker is allowed to keep a small nominal amount of their own money in that account to cover that fee. But a broker can't be like, you know what, I'm going to put 10 grand of my money in there, so I'm not going to have to worry about that for like the next 20 years. You know, you can't do that. Okay. And they have to keep in the record of the escrow book how much of that money is theirs, and deduct each month. They have to reconcile their accounts on a regular basis. All right. Written receipts are required for any cash deposits. So your clients give you cash deposits, broker has to give a written receipt about it, that they received that money. Check your office policy, because me personally, I don't allow my agents to take cash. Okay. Your cash is no good here. In the brokerage, your cash is no good. Why is that? Well, multiple reasons. What if your client gives you a boatload of cash and you get mugged? Who's responsible for that money? All right. What if some of that money they gave you contained counterfeit bills? Who's responsible for that? You know, you're going to go to deposit it in the account, and the bank's going to be like, well, these bills are actually counterfeit. They're not going to replace them with good ones. You know, and you're going to go back to your clients and you're going to be like, well, you know, some of the money you gave us was counterfeit. You know, we need you to replace that with good bills. That's drama. You know what your client's going to say, right? They're going to be like, whoa, 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 whoa. I don't know where the hell you were between the time I gave you the money and you went to the bank. I want my money back. You know, drama, drama, drama. What's drama good for, guys? It's good for TV. That's it. You don't want it in your personal life, and you certainly don't want it in your business life, right? So don't accept cash is my advice to you. Plus, there's another reason why you should not accept cash. If your clients give you $10,000 or more in cash, you have to report it to the IRS. And you know, anytime you communicate with the IRS, it has to be on a special form. I couldn't even tell you what that form is. You know why? I don't take cash, so I don't have to report it. No drama here, right? Save that drama for your mama, right? All right. I also make it a policy not to accept personal checks anymore too. Get a certified check or a bank manager's check. All right. This way we don't have to worry about checks bouncing. Because if a check bounces, if our client's making an offer on a property, they give us a check that bounces, doesn't clear. We have obligation to treat everybody fairly and honestly in the transaction. We have to reach out to the seller now and tell them, we don't have the deposit money that we said we did on the contract offer that we made because the check bounced. What do you think that's going to do to your real estate transaction? Even if it was for legitimate reasons, you know, sometimes people have legitimate reasons other than I don't have the money. You know, maybe they, you know, they have their savings account, they have to transfer the funds to their checking account, and maybe they didn't transfer, they forgot about another bill they wrote, and it was just an accounting error. Okay, it doesn't matter. How does that look to a seller who you're making an offer on their property? They're like, whoa, what the hell's going on? Does this people person have the money? You know, so to avoid that drama, that is drama, right? A needless drama, don't accept personal checks. Okay, at least that's my take on it. Your broker may have a policy that allows it, but even as an individual agent, it's a way you could avoid the drama by not taking it. All right. Not taking cash and not taking checks, by the way, is not discrimination either on anybody. All right. You get some people, you know, that we're like, well, we only take checks, you know, in the past anyway. Is that discrimination for people who don't have bank accounts? You know, people can always come up with their own excuses, you know, and that's all it is. It's an excuse, you know, because you're conspiracy theorists, whatever it is. You don't trust the government. You don't trust the banks. That's your problem. You know, people got pillow money. You know, some people, you know where that saying comes from. People got pillow money. They keep the money in the pillow. They put it in their mattress rather than in a bank. Okay. Well, that's no good when buying a house. That's no good when making large purchases, because there's all kinds of federal laws that are in place for anti-terrorism, anti-laundering, you know, all kinds of against illegal activities. We have to be able to trace where the money came from. We call it being seasoned. The money has to be seasoned for at least 2 or 3 months. We need to be able to trace where it was for the last 2 or 3 months, not just that it just materialized, you know? All right, so commingling is prohibiting or mixing those the broker's funds in the escrow account with their client's money. Written receipts have to be required for cash deposits. Funds already in the escrow account would become the broker that become the brokers must be removed within 5 days. Otherwise, it could be considered commingling. And this would happen in a case where those funds become commission. Okay, that's how the funds in the escrow account could become the brokers. And that would be always for a lease. For example, we get a listing and it is a property for rent. And we charge the landlord 1 month's rent as commission. And let me see, the landlord wants to charge the tenant first month's rent and a month and a half security deposit. Okay, so we get a tenant, we got that money in the secure, and we put it in our escrow account. We don't immediately give it to the owner of the property. You got to get the city inspections done first, and then you have to have that owner hand over the keys when they're ready, when the tenant move-in date comes. And when the tenant gets the city had the inspections and the tenant gets their keys, that's when the landlord gets the money. So we're holding on to that money until that occurs. We don't just give it to the landlord before that point. Now we're going to make out a check to the landlord for their month and a half security deposit and first month's rent in advance. And then the landlord has to give us back a check for 1 month for our commission. Sometimes we get landlords that they're like, wait a minute, instead of us doing all this checks back and forth, listen, just write me out a check for the month and a half security deposit and keep the first month's commission, first month's rent as your commission, since you already have it. Okay, it's an easier way to do it. But where is that money sitting right now? It's already in our escrow account. And now that money became the broker's. And if that money sits in there for more than 5 days, it's commingling. So the broker has to immediately remove that money from the escrow account and put it into their operating account. Everybody follow that? Okay. So that's what they mean by 5 days. So everything with the escrow accounts, 5 days in, 5 days out, right? Everything with the escrow account, 5 days in, 5 days out, 6 years for record keeping. Okay, 5 days in, 5 days out, 6 years for record keeping. All right. So let's go to the third paragraph and highlight it. Brokers are required to keep deposit funds coming into their keeping promptly. That one, highlight that whole paragraph. And then the next sentence in the following paragraph. Brokers are specifically prohibited from commingling, that sentence. And then go down 4 more lines. And we're going to highlight, leaving such money in the account for more than 5 business days may result in commingling. That's about the situation that I just explained. Unfortunately, we're just highlighting that line, and you'd have to read the whole thing to understand what that means. That's when the commission becomes the brokers. Cold coffee. All right. So they must provide accounting for advance fees to clients of $25. So basically, like if they give us money to hold an apartment or something like that, or give us money to actually this is for a little bit something different. If your clients give you money to help you with advertising the property, we have to give that client accounting of how that money is being utilized within 90 days. Now you may be thinking, wait a minute, when is the client going to be paying the broker to help advertise their own property? Well, what if it's a builder and a builder's got this whole project of homes that are being built? They have an advertising budget set aside, and they may want the brokerage to create billboards and signage and maybe a website or stuff like that that they're not going to do, but they want the broker to do it. And if that's the case, they give us money to help with that. We need to then give them accounting of how that money is being used. We can't just be like, oh yeah, we're using the money. We use the money on the on advertising. You got to break it down and itemize it. How has it been used? Okay. So it's not with your typical residential property. Your clients are not giving you money to help advertise their property. If that's the case, it's sell by owner, right? Now, any withdrawals from the escrow accounts, cash deposits or withdrawals, any cash deposit, $10,000 or more must be reported to the IRS. So that's why we already discussed that one. Withdrawals must never be made to cash. Why? Because if I make you out a check to cash, if you drop it on the ground and anybody picks it up, it's just as good as cash. It's cash. It says it right on there, cash, right? It's not made out to a specific person. So we must never, that's the broker's job. But you guys need to know it for exams, okay? Brokers must never make the check out to cash, always out to a person. And me personally, I always make it out to the person who gave me the money, not who gave me the check, but whose name was on the check that was given to me, all right? Sometimes you have relatives that will help out with the money to purchase a house or down payment, whatever you, and they give the deposit. Now, you don't make the, I've had a situation before where the person who was buying the house, they didn't get it, the deal fell apart or whatever, and we had to give the deposit money back. And they were like, well, just make it out to me, you know? So I made the check out to them. And then later on, their relative who initially gave the money called up the brokerage yelling at me, why did you give them the money back? I'm like, well, it was for their purchase. And it was, well, he's got a gambling problem. Drama, drama, drama. Now I got to deal about what kind of freaking issues these people got. So ever since then, what do? I only make the check out to the person who was on the check that I originally got it from, not the person who handed it me, not who our client was, but whoever's name was on that check. That's what's going to get made back out to avoid that drama, because I dealt with this before, you know? All right. Here's some tips that I gave you. I think I already gave these to you. Let's see. Reasons not to accept cash. If you get robbed, you're responsible for the money. Counterfeit cash, you're responsible. And you may get a visit from the Secret Service. They're the ones that investigate the counterfeit money. And You need to report to the IRS on specific forms, right? And I highly suggest certified checks or bank manager checks only, okay? Oh, money orders, I do not suggest either, okay? Try to avoid personal checks and money orders. Why? Well, money orders only go up to a certain amount, but even if it's okay amount, I still don't like the money orders because money orders, I doubt you're going to come across it, but you may. Sometimes you get buyers, they'll go to brokerages and they're actually thieves. What they'll do is it's another type of scam. What happens is people steal money orders. They're stolen money orders. And then they use those money orders to like put a deposit in on a house. And then they change their mind, they cancel it, whatever, and then they want their money back. So we as the brokers, we return them their money, their security deposit. With money orders, they won't catch on that it was a stolen money order until months later. And then the money order company will just do a direct withdrawal from the account that the money was deposited in. And now you're taking out someone else's security deposit or somebody else's down payment from the escrow account. And that's all kinds of problems. Drama, 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 right? So that's a scam. It's not a popular one, but when it happens, it hurts. So don't accept the money orders either. No personal checks, no money orders, no cash. Bank manager's check or certified funds, okay? I know it's a lot, but you know what? This is the way to avoid the drama, okay? It's not that difficult to do. You got a bank account, you get a bank check or, you know, or certified check, they'll probably charge you for, but you know, bank manager's check, they probably won't. And if they do, what's it, $3? Yeah. All right. When buying all cash, here's a little notation for you. People are not going to come to you with a duffel bag. That happens in movies. All right. So when buying all cash, we should always get a proof of funds letter from the bank. So when we make an offer on a property, they may give us a deposit right away, but how you coming up with the rest of the money? We also normally accompany the offer with a mortgage pre-qualification or a pre-approval letter. But if they're buying all cash, you don't just say all cash and be like, oh, no, cash ain't a problem. I get people like that all the time. They're like, oh no, man, cash ain't a problem. You don't got to worry about cash with me. Cash ain't no issue. Really? I don't know who you are, but super rich people, cash is an issue. You got billionaires that have filed for bankruptcy before. You know, cash is an issue for everyone. Their spending is on par with how much they make. All right. Cash is an issue for everybody. It's not that I don't trust you or I don't know you, but I don't know you. You know, so I don't need to know how much money you got. I just need to know you got enough. So you need to get what we call a proof of funds letter from your bank manager. Basically, the bank manager looks up the account. How much do you need it to be made out, the letter to reflect that you need? And then they check your bank account, make sure that you have that money in the bank account to cover it. And then they sign it, they stamp it, they make it official. This is your proof of funds letter from the bank manager proving that that money is in the account and available to that person. Okay, that's how we do all cash. Okay, and then when it comes down to closing, they're still not coming with a duffel bag full of cash. They're going to wire the funds. We never see the money. It's wired. It's all electronic. Okay. All right. Record keeping. Now we're at that point of record keeping. Brokers must keep all record. Wait, we got to finish doing some highlighting to get caught up before we do this. Top of page 17, advanced fees. Highlight advanced fees of more than $25. Then go to the line below it and highlight brokers must give the client an account of how the money is being spent within 90 days. So you only have highlighted here advanced fees of more than $25. Broker must give the client an account of how the money is being spent within 90 days. If they're giving that money to assist you with the, you know, advertising costs and such. Otherwise, we're not allowed to spend our client's money. That's an illegal act called conversion. You don't need to know that for exams though. But conversion, when the broker spends their client's money that's in the escrow account. Because when I spend your money, I'm converting it to mine. I don't know. That's best I got that they came up with that word. All right. Cash deposits or withdrawals. We're going to highlight any cash deposit, $10,000 or more must be reported to the Internal Revenue Service. That's the IRS. All right. Under permanent records, it says every broker must keep records of trust account activity for 6 years. Well, we already wrote that as a note, I guess, on the other side there. Well, I guess we didn't have to. Sorry. It's just highlighted there. And then also write see other documents, next page. Next to permanent records, right? See other documents on next page. And let's turn to the next page and see what is under other documents. Why did I reference this? It says under other documents on page 18, the broker must keep copies of all unaccepted offers to purchase for 6 months from the date of the initial offer. All copies of contracts of sale and listing agreements must be kept for 6 years. Now they go on to say, to talk about all kinds of other documents, brokerage checks, commissions, rent bills, all kinds of stuff like that. Well, brokers need to keep those records for 6 years too. So the basic rule is this. Let me boil it down to a simple line. Brokers have to keep all records for 6 years, except for 2 items: unaccepted offers and expired listings that never had offers accepted on them. Must be kept for 6 months. Which I have that on another slide. Let me fast forward to the slide really quick and see if I have that here. Maybe I don't. I just had you guys make that as a note here. Yeah, it's just on this slide I have it. So on this slide, I have brokers must keep all records for 6 years: escrow records, bank statements, contracts, accepted offers, listing agreements, bills for rent, utility, advertising, purchase receipts, commission paid to agents, expired listings that had accepted offers which fell through. They all need to be kept for 6 years, except for the following, which need to be kept for 6 months: unaccepted offers to purchase or lease, and expired listings that never had offers on. Okay. All records, contracts, listing agreements, etc., belong to the brokerage. So you as the agent are not supposed to be removing them from the office when you leave the firm. All right. Remember, all those contracts are the brokers. They're not yours. You were working for the broker. You were just their big toe. Okay. If you leave the firm, that big toe had been severed. But you don't take the heart with you. You got it? All right, now the last line under other documents, let's highlight salespersons may not remove anything from the broker's files if they leave the broker. Basically everything I got here on this slide, except this slide is just the stuff that I had you highlight. Pretty much, right? See what I mean? But my slides are custom and a lot better than anything the book manufacturer had. They didn't have anything like this anyway. All right, let's back it up again. Back to page 17. Under regulation of documents, we're going to look at sales contracts now. And we're going to highlight the first sentence, which is the first 2.5 lines almost. Every person who signs a listing contract, sales contract, or lease should immediately receive what we call a duplicate original of the document. That is, licensees must provide multiple original copies for the parties' signatures. That's what a duplicate original is, multiple originals. So when we put in an offer on a property, usually we make 6 copies of that contract for the buyer and seller to sign. Why so many? Well, we want to give one original contract with the original signatures to the buyer, one to the seller, one to each of the agents, and one to each of their attorneys. That's 6. It's just many. Okay, so that's what a duplicate original is. It's multiple original copies with wet signatures. Now, I make a note here that's not covered in the book. Digitally signed contracts, just print out another copy of it. Okay, so if you have a digitally signed contract, all you need to do is print another one. Because with digitally signed contracts, you don't have an original to begin with. It's all based off of coding and numbers and stuff, you know. In the past, these were not legal. Not until, I think it was Governor Christie signed it into law that allowed digital signatures for real estate contracts. I'm mentioning this because I want to teach you guys a little lesson here. Don't be the quickest to jump on the latest technology trends without first making sure that it's legal. See, digital signatures was the thing. There was software out there where you could do contracts with digital signatures. But in New Jersey, it was not legal for contracts. And agents jumped on this software and they're using this and they're like, I'm the latest and greatest. I got this software that I could use the digital signatures. See, no, you could use it. Look, I'm going to show you how you could use digital signatures. See, look at that. Yeah, but is it legal? Have you checked? Well, look, you could do it. I didn't ask if you could do it. I asked if it was legal. Don't jump onto the latest trends in technology until the law catches up with it. Agents were doing this, and any agent that did that was not providing their clients with a duplicate original. I know this because they didn't have an original to begin with, because an original required the wet signature. This is what I mean by wet signature, the ink from a pen where they wrote their name by hand. Okay, that's a wet signature, was required. That's the only way. Now digital contracts are legal in New Jersey after the governor signed it into law. But before Governor Christie back then signed it into law, any agent that did digital signatures was compromising their client's position in that real estate transaction. If there was ever somebody who wanted to sue or somebody who wanted to enforce the contract, can't do it. Why? Because you never had a legitimate legal contract to begin with. All right, lesson learned, right? Okay, so licensees must give a fully executed duplicate original. You must know that term, duplicate original. It will be on exams. Duplicate original for the client's time that they sign a contract, okay? Now, commissions are negotiated between the client and the broker. So at the time you go get a listing, the listing agent is the one who negotiates the commissions with the owner of the property. All right. And that would be spelled out on the listing agreement. So you as a buyer's agent, you have no say in how much commission the seller is going to pay. It's the listing agent who negotiates their fee with the owner of the property when they're selling or leasing it at the time they're getting the listing. And then whatever fee that was, whether it was 6% or 10% or 4%, that fee would then get split accordingly. We're going off of whatever fee that was. Do not get in your head the idea to make an offer on a property and then write in there, but only if the commission is raised to whatever percentage. An agent cannot get in between another agent and their client. And you're trying to do so on a contract, you're basically giving evidence that you're breaking the law on a contract. All right, so don't do that. Instead, if you have a minimum amount of commission that you're willing to work for as a buyer's agent, what you could do is have that buyer sign an exclusive buyer agency agreement, which we're going to get into that in chapter 3. You could get them to sign an exclusive buyer agency agreement that shows the minimum commission you're willing to work for. And if that total commission that that's getting split and paid out to you is less than the minimum you're willing to work for, by having the buyer sign it, you're saying that the buyer will make up the difference. Or they're going to advise you not to show properties that are not paying you that minimum. All right, we'll get into that a little bit more later though. So licensees can prepare contracts only for 1 to 4 family homes and single building residential lots, and must include a price fixing disclosure in FSBO contracts for sale by owner that we do not engage in the activity and all commissions are negotiable. All right, so that's a lot right there in that one sentence. So let's break it down. Licensees can prepare contracts only for 1 to 4 family homes and single building residential lots. Let's put a period at the end of that. Let me see, what is it? Regulation of documents. There we go. And residential lots, period. We must include price fixing disclosure in FSBO contracts that we do not engage in the activity and all commissions are negotiable. All right. Boom, boom. All right, so that's a lot right there to take in. Let's break it down, shall we? So licensees can prepare contracts only for 1 to 4 family homes and single residential lots. Why? Because anything else is considered commercial real estate and those contracts must be prepared by attorneys. I don't know if I have the room to type that in there. Let me try to type it in. If I don't, if it screws up, I don't think I do actually. Real estate brokers, insurance. Yeah, I don't have enough room here to type it up without screwing up the slide. So I just explained it to you. Licensees can prepare contracts only for 1 to 4 family homes and single building residential lots. Why is that? Because anything else more than 4 family is considered commercial. And even though we are allowed to sell commercial real estate, we don't prepare the contracts for commercial real estate. You got the understanding why? Only an attorney can prepare the sales contract for the commercial real estate. What we as real estate agents would do is we would prepare what we call a term sheet or a non-binding intent to purchase or lease commercial properties. And basically that lays out all the terms, the price and all that stuff, but that's not a contract. And we get both parties to sign it. When they agree on all the terms that are to be added to the contract, we give that term sheet to an attorney who will draw up the actual contract with all the terms that the both parties agreed to. And then when they sign that contract, then it'll be legally binding. Got it? All right. Need to know for exam. All right. Now, we must include... I found a way to include that in here. Let's see. I could just take this statement up here, make that not a bullet point, just make it another sentence. And then we could do this. Oh, no, actually, I have it already here. Never mind. Yeah. Commercial contracts must be prepared by attorneys. Agents start the process by selling or leasing commercial real estate by writing a non-binding intent to purchase or lease, also called a term sheet. I see what I'm gonna do. I'm gonna do this. Sorry, guys, talking to myself a little bit. There we go. So I did a little rearranging of the words there. Okay, so what I did is I put licensees can prepare contracts only for 1 to 4 family homes and single building residential lots. Because any more units is considered commercial real estate. Commercial contracts must be prepared by attorneys. Agents start the process by selling or leasing commercial real estate by writing a non-binding intent to purchase or lease, also called a term sheet. There we go. Now that's clear. Agents also have to include a price fixing disclosure in for sale by owner contracts, saying that we do not engage in an activity, it's an illegal activity, that price fixing. And then, and all commissions are negotiable. So this is basically talking about the violation of a Sherman Antitrust Act. So, but there's also New Jersey laws against it. So I'm not gonna just write that in here right now. So commissions are negotiable between the buyer and the broker. No contract can contain anything indicating a prescribed fee schedule. What is a prescribed fee schedule, you may ask? Tell you in a moment. All right, this is going to be a prescribed fee schedule. Let me put the whiteboard up on screen here. What is a prescribed fee schedule? This is a prescribed fee schedule. Is that negotiable? Is that commission negotiable that you see on screen? This is what we call a prescribed fee schedule, where you would have to select one of these. You would circle one of these. Which one would you circle?
N.
Oh, you would as a homeowner? I like you.
Oh, as a homeowner.
You want to pay the highest commission that I'm
No,
offering?
no, no, 6, 6, 6.
Oh, now, see, that is so easy. So so she's like, oh, no, I want to pay 6. You know, most people out there, they're like, hell no, I don't want to pay 6% commission. But the thing is, when I give you limited options to choose from like this, you're like, oh yeah, no, I want the 6. I want the 6. You see what I mean? So that's not really negotiable, is it?
No.
This is what negotiable is. A blank line. On contracts, commissions must be a blank line and they have to be written in. They cannot be pre-typed. Commissions can only be expressed as a percentage of the sales price or a fixed dollar amount. That's it. You cannot have these prescribed fee schedules like this. That's not negotiable. That's giving you limited options to choose from. So agents must, let's see, so that's what they mean by all commissions are negotiable. And we cannot have a prescribed fee schedule. I just wrote that in there. We cannot have a prescribed fee schedule. Where is it on this slide? Agents. Commissions are negotiated between the client and broker. It should have been up there. It cannot have a prescribed fee schedule. and must be expressed as a fixed dollar amount or a percentage of sale price. No prescribed fee schedules allowed. Yeah, I know that shifted things around a little bit. I'm gonna have to do an adjustment here. I'm just gonna make the title smaller because it's at a 40 font, so I'll just make it small and move that around a little bit. A lot of information on this slide that you'll see on exam. Hint, hint. There we go. All right, so I added that in here, the prescribed fee schedule stuff. All right. Next paragraph in the book, as seller, you have the right to individually reach an agreement on any fee, commission, or other valuable consideration with any broker. No fee or commission or other consideration has been fixed by any governmental authority or by any trade association or multiple listing service. All right, that is what they're talking about by price fixing. I want you to write in the margin next to that, must be added to FSBO offers. Next to that paragraph that I just read, that's the third paragraph under sales contracts, right? Must be added to FSBO contracts or offers. And I'm going to add that term to the next slide in the meantime. So you guys write that, must be added to FSBO offers.
What is it again? Must be added to FSBO what?
To FSBO contracts or offers, however you like to word that.
Thank you.
You're welcome. Now, this is the actual phrase that we have to add into the contract, the one that's written here in the book. All right, you don't need to memorize that phrase, you know, but that needs to be added into the contract. You just need to know that and remember, hey, we got to add something in there when we're putting in an offer on a for sale by owner property, because that owner never got all the disclosures that we usually give to property owners when we're getting when we get listings, because they never had a listing. They were never a listing. So they were never given all the disclosures that were required to give to homeowners about price fixing and these illegal activities that are made illegal by state and federal law. So we need to write it into the contract itself that all commissions are negotiable and we don't engage in these illegal legal actions. I'm just doing a little modification here on the other slide. Just give me one moment here. Now, price fixing is basically the practice of two agents from competing firms, not the same company, but two different agencies getting together and talking about the fees that they charge the public. They refer to this as colluding or collusion. That means collusion is when you're working together when you're not supposed to be. All right. You got two competing firms. What are two competing firms supposed to be doing for business, by the way? Let me just ask it that way to you. What are two competing firms supposed to do when trying to get business? They're trying to get the business away from each other. They're trying to get the most of the business, right? You're supposed to be competing. You're not supposed to be working with each other to try to set an industry standard on pricing. You're supposed to be trying to get the business away from the other business so that you get all the business. And how would you try to get the business away from another business? Anybody?
Offer better services.
Lower your fee.
Lower the fee. Yeah, everybody's going to say, oh, we got the same services as the other one. Now what? Lower the fee. When companies compete with each other on price, that's good for the public. Sucks for us, good for the public, right? So when we don't compete, we're colluding with each other, trying to set an industry standard on pricing. It's anti-competition. So this is a law put into place to prevent anti-competition activities. They want us to be competitive because when we're competitive against each other, we drive down the prices for the market. And so that is good for the homeowner. They pay less commission when we compete with each other, right? I'm almost done here. Just give me one more second. All right. I was just copying over that entire paragraph into my notes on the next slide here. So just took me a moment to do that. Sorry. And now I'm trying to adjust the font so it fits. All right, come on.
Is that paragraph that you just added in our book?
It is. The third paragraph that I had you write, add to FSBO offers. Under sales contracts. You see it?
Yep.
So that's what I was just typing into the next slide, you know. So I'm always trying to reference it, and sometimes I skip it, I miss it by mistake because it's not in the slide. So I just added it to the slide. All right, so if you see the next slide here that I put about disclosure to FSBOs about price fixing. When preparing contracts on for sale by owner properties that never had listing agreements or disclosures provided, we must inform the owner that we do not engage in a legal practice called price fixing. This means our commission or allocation of markets. This means that our commissions are not set by any governmental authority, trade association, or MLS. And this is the actual disclosure that must be added. So let me put here, actual disclosure added to contracts. As seller, you have the right to individually reach an agreement on any fee, commission, or other valuable consideration with any broker. No fee, commission, or other consideration has been fixed by any governmental authority or by any trade association or multiple listing service. That disclosure is basically saying that we do not work with, we did not engage in an illegal practice called price fixing. Engaging in an illegal practice called price fixing. Okay, that term price fixing, add it to your definition list. Without a doubt, you will see it. Price fixing or allocation of markets. What is allocation of markets? Allocation of markets is when you're talking to the competition, and instead of saying, hey, here, let me talk about it all. Price fixing is this. You and I work for different companies, different real estate agencies. And we go out together and I'm saying, hey, listen, make sure that your agency doesn't charge less than 10% commission to anybody that comes in for a listing. And if we're the two major agencies in the area and neither one of us will charge less than 10%, the consumer is not going to be able to list their property for less than 10%. See, that's anti-competition. It's not good for the public. It drives prices up rather than down. When we compete, the prices would come down. Now, allocation of markets would be this. If we're still in that meeting and I say, hey, listen, your agency will get all the properties on that side of Main Street and my agency will get all the properties on this side of Main Street. So it could be by geography, or it could be by price. Hey, listen, your company will get all the properties below 400,000. My agency will get all the properties above 400,000. So if anybody comes to us and the property is valued beneath 400, we're going to refer them to you. If they're over 400, you got to agree to send them to us. You're divvying up the marketplace somehow, either by geography or by price. Okay, it's all illegal, and so that's all referred to as either price fixing or allocation of markets. So price fixing is an agreement between competing firms to establish an industry standard on commission rates charged to the public. It's prohibited by federal and state laws. The federal law is called the Sherman Antitrust Act, and it prohibits the price fixing and allocation of markets. Okay. It's listed on page 51. All right. Go to page 51.
Okay.
All right. On page 51, you're going to do some highlighting here for, first of all, next to the title, antitrust laws, write Sherman Antitrust Act, just like I have it here on the slide. Sherman Antitrust Act. All right. And then in a second paragraph, you're going to highlight the entire second paragraph, but you're going to underline the word price fixing. Illegal price fixing occurs when brokers conspire to set prices for the services they perform rather than letting those prices be established through competition in the open market. I thought I had that definition on the slide. Oh, I do. It's in chapter 3. Okay, so for this chapter now. Here. So that's actually pretty clearly worded right there. Real estate licensees, we're going to highlight this, continue highlighting this. Real estate licensees must disassociate themselves immediately from the slightest discussion of commission rates with any member of a competing firm, and underline the words competing firm. I'm just making a note for myself to later replace this slide altogether with the one that I have in chapter 3, which is much better, which you guys will see because we didn't get to chapter 3 yet. But I have a better wording in it. But this is the actual disclosure that's given. So what number slide is that? That is number 11. Okay. So go down to the 4th paragraph. And The fourth paragraph says individual firms, however, may establish their own fee schedules and allocate sales territories between salespersons. So your office can set whatever fees that you're going to charge the public. You may have a policy that this is a certain fee that you have. It could be your strategy. That's fine, as long as you're not working together with competing firms to try to set a fee or strategy, okay? Highlight, violations occur when competing firms agree to act together in these matters, and underline the word competing. Your office can have training on how you go about charging commissions. You guys can do role playing with each other within the office. That's fine. It's when you have different companies that are working together to try to set that pricing standard. That's when it becomes an issue. Now, the penalties for these acts are severe. Under the, now highlight, Sherman Antitrust Act, under the Sherman Antitrust Act, people who people who price fix or allocate markets may be found guilty of a misdemeanor crime, punishable by a maximum $1 million and 10 years in prison. That's a hell of a misdemeanor, ain't it? $1 million fine and 10 years in prison. And that's for an individual. If a corporation, an association, or any trade group are involved, or MLS is involved, the fine is actually up to $100 million. That's the research that I found. However, that may not be totally rigid, because I found something in the news recently. There was actually something in the news last month. I don't know if you guys ever heard about this. You guys hear about the price fixing, what was going on in the chicken market?
No.
So there's a supplier that provided a lot of chicken to, I forget if it was for, I think it was for KFC. And there were chicken suppliers that were engaging in price fixing. Most of the major chicken suppliers were engaging in price fixing activities that kept the prices of chicken up. But only to certain groups like KFC. And one of them, I think it was Puritan's Pride. They were the first one to admit to the guilt in engaging in that activity. And they were fined $104 million, I think it was. So, and they agreed to pay it, $104 million. And that's just the first of many to come. So I think the price of chicken may be going up just because of the lawsuit judgments now from them trying to make more money off the price of chicken, you know? So as far as the consumer is concerned, we're getting screwed either way, you know? Because you think they're going to eat that cost of that, or you think that they're going to build it into that loss into the cost of the price of chicken, you know? All right. But either way, it's price fixing when the industry colludes with each other. The different suppliers are working with each other to set an industry standard and don't charge them less than this amount. Well, they were found guilty on it. And the first one fell already. All right. They paid a fine of 104 million, which is more than 100 million. So that $100 million price cap that I said for a corporation may not be totally rigid, but now, this Sherman Antitrust Act is the same. It's not just about real estate is the point I'm getting here. It applies to any industry. You guys ever see that? I'm not sure if it was a History Channel or one of those historic type documentary series channels, you know? You ever see the one about, I think it was called the Industries of Titan, the men who made America? And it was about the Rockefellers and all those super rich, you know, that in oil, railroad, steel industry, and all that. The last industry that they were able to break down was Standard Oil. And the way that they broke it down is they used the Sherman Antitrust Act. the company was so big, they broke it down into 32 different companies because they say that they were price fixing. How were they price fixing? Well, what they would do is you'd get a big company that's doing very well. They would buy out the competition's company. They would buy the company. And then they would set the standards. Since I own all the companies, I could set the prices on all the companies. So all the companies would not charge less than a certain dollar amount. Isn't that antitrust? Now, the argument there was, it was a pretty interesting argument though. Hey, I'm the owner of the property. I could set the prices for my own business. But the thing is, what he was doing is, anytime a company came in that competed and priced it lower, he would try to hurt them by getting their suppliers or whatever, any distributors to charge higher. They would work together, hurt that company so that they were forced to sell, buy them out, and then raise the prices on it. This is what they did. This is how some of these families are still super rich today. You know, the Rockefellers and all those folks, you know. It was an interesting program if you guys never seen it, by the way. Sherman, it was like a 10-part series. So you guys have that highlighted what the fines are and such. And I have that here on the slide as well. Prohibited by the Real Estate Commission as well. Violating the Sherman Antitrust Act is a misdemeanor crime punishable by a maximum $1 million and up to 10 years in prison for an individual. And penalties can be higher for corporations, trade groups, etc. Obviously, as I just showed you, for corporations, I just gave you an example of one that paid $104 million fine recently. This was just last month or a month or so ago. All right, so let's back that up now. Guaranteed to be on exams, both exams. Sherman Antitrust Act. You must know what it prevents, because they could paint a scenario like this for you guys on exam. Two real estate agents go out to lunch together. Two real estate agents are friends. They go out to lunch together. They work for competing firms. And one of them begins talking about the fees for the services they charge the public. What should the other agent do? Call the police? Report them to their broker? Report them to the Real Estate Commission? Or walk away?
Walk away.
Walk away. If you separate yourself from the issue, it doesn't become an issue. So that's why they say real estate agents should immediately disassociate themselves from the slightest discussion of fees or rates with members of competing firms. All right. And what is the possible fine on it? Up to 10 years in prison and $1 million, right? Up to a $1 million fine. Okay, so back to page 17. See, this is what I mean by I jump around, because we mentioned it on this page. I wanted to fully explain it instead of just glance over it. All right. And now when we actually get to it in chapter 3, you guys will already know it. So we can get through it a little quicker. All right, so agents must, okay, price fixing. Written offers must be forwarded or presented to owners within 24 hours. So anytime a written offer comes in, that offer needs to be not necessarily presented because the owner may not be available. What if they're on vacation? Well, we could at least forward them the offer by email, right?
Correct.
We have to do that within 24 hours. Okay, that's real estate licensing law requires that. All written offers have to be forwarded within 24 hours. Need to know for exam. All listings that we get have to be entered into the MLS within 48 hours. Licensing law requires us, if we get a listing and it's available for us or any agent in our office to show, must be available for agents from other brokerages to show as well. That's how we treat each other fairly and honestly. So when we get a listing, we must, the law requires, not only the law, the MLSs have their own rules about this, that they want the paperwork and they want the listing entered in the MLS. Otherwise, they'll fine you. So you could get fined by the MLS if you violate the law. You could get fined by the real estate commission as well for violating the law. The MLS does not fine you for violating the law. They fine you for violating their rules. Sorry, I misspoke there. The real estate commission will fine you for violating the law. Now, the only person who could direct you not to put the listing in the MLS would be the owner of the property. But then we got to cover our butts. And how do we do that? Well, everything we do, we get in writing. So if the owner tells you not to share the listing with other brokers, they only want you to try to sell the property or your agency to try to sell the property, we cover our butts by getting them to sign our CYA form, which is called the Waiver of Broker Cooperation Agreement. Waiver of Broker Cooperation. So how soon do offers need to be forwarded to the owner?
24 hours.
And how soon do listings need to be put into the MLS?
48 hours.
Unless
48.
Unless the owner
Unless
signs the
they're
written,
instructed not to. by the
Directed
owner.
not to.
unless who?
the owner.
Unless instructed by the owner
Unless the
not to.
owner directs you not to. And then we got to cover our booties by having them sign some kind of a document. What do we call that document?
Waiver broker cooperation.
The Waiver of Broker Cooperation Agreement. I'm going to show you guys an example of an actual form, the Waiver of Broker Cooperation, because they don't have one here in the book. I'm sorry. They don't have the form in the book, but they have the wording that must be included on that form. So you guys can make your own form up of this because it's hard to find. I have an old one here, which I'm putting up on screen right now. You guys see it here up on screen? This is an old one. It's from the Middlesex County MLS. Well, they don't call themselves Middlesex County MLS. They rebranded themselves to CJ MLS now for Central Jersey MLS. So I'm going to read this and go over it with you in just one moment. But let me see. So the Waiver of Broker Cooperation, where is that? Okay, if you go to page 18, on page 18, the next page, they actually have on the very bottom of the page, it says listing broker and seller as the principal. You see that?
Yeah.
In the last paragraph, the second paragraph, in the second paragraph underneath that, the second sentence, I want you to highlight. Anytime it says seller, cross out seller and write owner. Anytime an owner directs a broker not to cooperate, the licensee must have the owner sign a Waiver of Broker Cooperation form. Now, you are not to introduce this form to the owner unless they request it. So basically, you're not to introduce the idea of them not cooperating with other brokers. That has to be brought up by them. And then, and only then would you bring up this form and introduce this form to them, because this is our CYA form to prove that they're the ones that requested it. You follow?
Yes.
Sometimes you get agents out there that try to get their secret pocket listings that's only available to them. And the way they do it is they shove this form in front of them and give some cock and bull story with their fast talking and say, here, just sign here. This is what this form does. It says that all offers can only go through me, and it's to protect you. And in the meantime, it's not. Let's read the form. So here's the actual form. Highlight the title here. It says Waiver of Broker Cooperation, and then put a box around it, which continues on to the next half of the entire next page as well. So that entire thing is the actual form. You see it from where it says Waiver of Broker Cooperation all the way to above, everything above broker and buyer as principal on the next page. That's all that form. But instead of reading it from the book, I'm going to show it to you from what's on the screen in front of you. So let's look on the screen. I'm going to show this to you because it has some additional stuff on this form. I kind of like this form that they have here because they also quote the law where it says it in the law and the commission's rules. So let's see, it's, we put down the listing information and you see, it says in all bold, I understand that cooperation amongst my broker would produce wider exposure of my property and may result in it being sold or leased sooner and at a higher price than would be the case were my broker not to cooperate with other brokers. By the way, what does it mean when it's in all bold and all capital letters? If it's online, for example, that means they're shouting at you, right?
Yes.
All right. So it says, I further understand that when my broker cooperates with other brokers, I could still have all arrangements for the showings of the property and all negotiations with me or my attorney made only through my listing broker's office, should I so desire. So doesn't that debunk the BS excuse that the agent would normally give if the person actually read the form?
Yes.
You know, so the agent that talks quick and says, oh, this is what that does here, just sign down there, you know, and they could screw over their client like that. Now, however, despite my awareness of these factors, I direct this properties to be marketed only by the efforts of the listing broker. The listing is not to be published in any multiple listing service. I will only consider offers on this property which are obtained by and will only allow showings of this property to be conducted by the listing broker or their duly authorized representatives. So only the people from that office. The listing broker is hereby directed not to cooperate with any other broker. Now, by signing below, the parties hereto confirm that no pressure or undue influence has been exerted on the owners as to how the property is to be marketed by the listing broker. The owners further confirm receipt of the fully executed copy of the listing agreement on this property. What do we call that when we give them a fully executed copy?
Duplicate original.
Duplicate
A
original.
duplicate original. We gave them a
Sis, I
duplicate
was gonna
original.
say that.
Yep. And and of this waiver of broker cooperation, because they're supposed to give this, you're supposed to give this document to them too. You're not just supposed to have them sign it and then you take it. You've got to get, anytime you have them sign anything, you have to give them a duplicate original of whatever it is that they're signing. Contracts, disclosures, anything. Okay. Law requires it. Okay, and then they put their date, owner sign, owner's names, owner sign, listing broker signs, or their duly authorized representative, which would be you. Now, I like this form because it goes on with more information. It says upon sale and transfer of the title of this property, access to property information will no longer be restricted. Let's see, this is a reprint from the commission's rules, the administrative code, Title 11, Chapter 1, right? Title 11:5-6.4 covers obligations of licensees to the public and to each other. If you guys want to look this up, you can look it up in the back of the book, right? Remember I told you it's printed in the back of the book? You want to see what the rules actually say? So under section F, so 11.5.6.4 section F, it says, unless directed not to do so in writing by an owner. Wait. So who can direct us? Who's the only person that could direct us not to cooperate with other licensees?
The owner.
Only the owner. That's an exam question, guys. Every licensee shall fully cooperate with other New Jersey licensees, utilizing cooperation arrangements which shall protect and promote each other's interests of the licensee's client or principal. They're talking about you getting paid your commission. Collusions and discrimination with respect to commission rates and splits are prohibited by the New Jersey Administrative Code, NJAC 11:5- and 7.5 and 7.6. All right. And then they show you where it says it in a law. That's why I like this form. This form actually quotes the law on it as well. So it says, the obligations to fully cooperate with other licensees include requirements that the listing brokers notify the MLS to which listing is to be submitted of having acquired the listing within 48 hours of the effective date. So wait, when do we got to put listings in the MLS?
48 hours.
And the administrative code says that. Okay, think it's on exam? It is. The offeror transmit their principal all written offers to the listing submitted by licensees to the firm within 24 hours of receipt. Hey, didn't I just have all of this stuff on this one slide?
Yes.
Yes,
Isn't this one slide packed with exam questions?
yes.
All right. Now, place no unreasonable restrictions upon showing the property. So as a listing agent, you're not allowed to do that. Listed with them to prospective purchasers who are working through their cooperating brokers. So because they're working with another agent, you can't make it harder for them to show your listing. You can't make them jump through hoops. If it's available for you to show, it must be available for other agents to show as well, is the point. And so in a requirement that all appointments for showings must be made through the listing broker's office, though, is not considered to be an unreasonable restriction on the showing. You know, you got to call them to make an appointment. You can't just go to the property. Now, all requirements imposed by obligations to fully cooperate shall be complied with on all listings unless the client or principal with the full knowledge of all the relevant facts expressly relieves the listing broker from one or more of those requirements in writing. So basically, if the owner directs you not to cooperate with other agents. So such writing shall be signed by the owner and made as an attachment to the listing. So this waiver of broker cooperation form, you have to send it into the MLS along with the listing, even though you're not going to be putting it into the MLS. Then it won't be a posted open listing, okay? But you still need to transmit all listings to them, and then it just won't be listed. Such writing shall be made available for inspection by other brokers upon request. What? You guys see this?
Yeah.
What does that mean? That means that if I call you up because I want to show your listing to one of my clients because they've seen the sign on the property, but you tell me that it's an office exclusive listing, they signed a waiver of broker cooperation, they don't want us cooperating with other brokers, only our office can show or put contracts in on this property. You can say, I could then say, well, send me that waiver of broker cooperation. I want to see it. This requires them to send it to me as proof because they should have had it signed by the owner at the time they got the listing. And if they don't have it, they have to let me show it. All right. You know what? I'm going to do something for you guys. I'm going to take this waiver of broker cooperation
And put it in the journal.
yeah, I'm going to upload it for you into the, because it's an older form and you may have difficulty finding it. I'm going to put it in the shared supplemental folder or one of those folders online here. Let me see. So here's the shared, I'll put it in the supplemental materials folder. Okay. I'm going to add it in there. Contracts, disclosures, and there you go. It's added. You see it's there now. Waiver of broker cooperation, Middlesex MLS. Now you could take this and you could take it and take all that wording and put it on your own form and make it custom so it doesn't say Middlesex County MLS on it. All right. Unless it has some kind of copyright notice on it. Let me put that there. Or you could reproduce something similar. Okay. Well, I don't want to screw with copyright laws or anything like that, you know. But anyway, I put that up there. And that's that. So let's go back to the slideshow. So see, sometimes sharing the forms with you guys gives you a little more information and a little more insight. I like the fact that it also pointed out the laws that dictated that you have to forward the offer within 24 hours, that the listing has to be entered into the MLS within 48 hours, unless the owner directs you not to, and then you need to get them to sign a document called the waiver of broker cooperation. And then if the other buyer's agency wants proof that you had that waiver of broker cooperation, you have to send it to them.
Victor,
Yes.
So just a question regarding, so let's just say as an owner, you sign the waiver of broker cooperation and for, I guess, an exclusive with like a large agency, right? And then, I don't know, like 4 weeks later, you decide as the owner, then you want to put it on the MLS. So how, is there another form to?
You tell the agent, I want it on the MLS.
But
I
is
wanna
that
I wanna
also
cancel
a
that.
form? Is that a different form?
You don't need a form for that. You could just say like, you could say, hey, cancel that, or you could put it on paper. Here's my request to do this. You could make up a custom form if you wanted to for that. But it's basically just the owner saying, hey, I want it on the MLS now. I don't want it exclusive anymore. Okay. Hold on a second. I get a request here. There you go. All right. All right. Next thing. The buyer, seller, landlord, tenant can choose whether or not to incur the cost of hiring a lawyer. You know, you don't need a lawyer in real estate transactions. But if they don't want a lawyer, we must have the document called the Opinion 26 notice signed by the parties involved, advising them that they have a right to hire a lawyer. Because we don't want them later on saying, oh, I'm not using a lawyer. And then later on saying, well, you told me I didn't need one. So the law requires us to have them sign a document that says, we advised you that you do have a right to hire a lawyer and use a lawyer. All right. This has to be sitting on top of the contract of any contract prepared by licensees. What kind of properties can licensees prepare contracts for, and what kind of contracts can we prepare?
Non-commercial contracts.
1 to 4 family homes.
Yeah, be more specific. 1 to 4 families and single residential lots. More than one lot is considered a tract of land that requires, that's commercial real estate, okay? So 1 residential lot or 1 to 4 family house, okay? And so what kind of contract can we prepare for those kind of properties? Sales or lease contracts is what I'm looking for. Sales or lease. So don't just focus on sales contracts. So what we just read here says any contract prepared by licensees, what needs to be sitting on top of it as the cover page?
Duplicate original.
No. Sitting on top of the contract. Duplicate original is just a copy of the contract with original signatures.
Where you stipulated whether they can have a lawyer or not.
Right.
What do we call the form? I need to know what the form is.
The Opinion 26
Yeah.
notice.
All right. I want you guys not just to know that you got to put something there. I need you to know what it's called for exams. Okay. Not going to pass the exams unless you know these terms. So the Opinion 26 notice is the document that informs people they have a right to hire a lawyer, and it must be on top, sitting as the cover page, sitting on top of the contract of any contract prepared by licensees. Does it need to be the cover page of a contract for strip mall for sale?
No,
No.
Why not?
because that's commercial.
Because yeah, that's commercial. We don't prepare commercial contracts. A lawyer's already involved because lawyers prepare the contract. So we don't need to have a notice on there saying you have the right to hire a lawyer, because you already know that because a lawyer prepared the contract. Right? Kind of redundant, ain't it? So there you go. Without a doubt, another exam question. You guys see why I'm focusing a lot on these couple of paragraphs? Because if we actually focus in on the words, this is stuff that we're going to be going over in depth on in other chapters, but they got it all kind of clumped into just a couple of phrases. I could have just read them and glanced over them real quick, but these are all exam questions packed into one area. And I put them on one slide conveniently for you too, by the way. All right. So the Opinion 26 notice. Now the book will only refer to it as the notice. Okay. So let's see, where does the book put it? We got to get a little caught up because this stuff is all over the place here. All right, let's do this. On page 17, go back to page 17. 1, 2, 3, fourth paragraph. I want you to highlight licensees can prepare sales contracts only for 1 to 4 family homes and single building lots. The sale or rental of commercial or industrial property or business is accomplished on a letter of intent. And then the contract is prepared by an attorney, right?
Mhm.
All right, next paragraph. You're going to highlight the commission requires that all sales contracts prepared by licensees contain an attorney review clause, giving the buyer and seller the right to consult an attorney who may disapprove of the contract within 3 business days after delivery of the signed contract to both parties. So after you give them their duplicate original, I'm translating this. After you give them your duplicate original, you have 3 days to start attorney review. If you don't start attorney review within 3 days, business days, the contract becomes legally binding as it is, and neither party can make changes unless the other agrees, unless the other side agrees. Okay, next paragraph. You're going to highlight all written offers must be forwarded to, I know it says sellers here, they always do that. I like to write owners because it also pertains to leases, not just sellers, right? All written offers must be forwarded to owners within 24 hours at the time of listing. Owners of property must be furnished with a copy of the Attorney General's memorandum regarding the New Jersey law against discrimination, or in other words, we call it the LAD, L-A-D. All right. So that's something else that we're going to go over the LAD in the next chapter. Let me see. I don't think I have a slide here about that. All right. Take a look. Yeah, I don't have a slide for that here. That's something in chapter 3 we're going to go over. Chapter 4. The Attorney General's memorandum. I think we're going to go over in 3 and 4 actually. Attorney General's memorandum. Let me just give you a quick rundown without having it in a slide for it here though. You guys know who the Attorney General is? Not the person, but the position. You know what that position is? An Attorney General. It's the highest law enforcement officer in the state. Every state has a state Attorney General's office, and then our federal government has the Attorney General, which is the highest law enforcement officer in the country. So our state Attorney General, the Attorney General's memorandum. What is a memorandum? It's a fancy word for a notice, right? So this is a notice coming from the Attorney General's office, the highest law enforcement officer in the state, that basically tells people that you have to give this to the owner at the time you get the listing. It tells owners, property owners, that if you're offering a property for sale or rent, you can't discriminate according to state and federal laws. And then it goes over the details of those laws. All right. So what's the document you have to give to owners at the time you get the listing? The Attorney General's memorandum. You don't have to give this to buyers or renters. You only give it to the owner. Why don't we give it to buyers or renters? Would you guess? It's pretty straightforward because they could discriminate all they want. If you're a buyer or renter, you could choose where you want to live and who you want to live near. If you are an owner of property offering it for sale or rent, you cannot discriminate on who you're going to rent it to or sell it to. It's the bottom line. People have freedom of choice. You could live where you want, you could buy where you want. Of course, if you could afford it, you know. But if you're offering a property for sale or rent, you cannot limit who can buy or rent based on discriminatory factors. Make sense?
Yes.
All right. So we're going to go over that again. Chapter 4 is the discrimination chapter. But they mentioned it here, so I just figured I'd bring it up. All right, let's see what else we have. If a real estate broker is also licensed as an insurance broker. Oh, wait, now let me stay in line with what they got here. So let's finish up this page 17 all the way down the bottom. The New Jersey Supreme Court has ruled that buyers and sellers of residential real estate may choose whether or not they want to incur the cost of hiring a lawyer. If they choose not to hire a lawyer, real estate brokers and title agents may provide certain assistance in the title closing process, provided that the broker gave the mandatory notice, to the buyer and the seller, advising them of their right to hire a lawyer. This notice must be attached as the cover page to any contract of sale prepared by licensees. So let's see what to highlight there. Highlight mandatory notice to the buyer or seller advising them of their right to hire a lawyer must be attached as the cover page to any contract prepared by licensees. It's not just contract of sale. It's any contract prepared by licensees for sale or rent. Granted, most people don't use a lawyer to review a rental contract, but they have the right to. So what needs to be the cover page of any rental contract, residential lease contract as well?
The opinion 26.
Opinion 26 notice. And what is the purpose of the opinion 26 notice?
Make sure they know they have a right to an attorney.
There you go. All right. Now, the book here is only referring to it as the notice. So I want you to write a note in there, either above or below that, that highlight. Opinion 26 notice, page 174, because there on page 174, you can see a sample of it. I'm giving you the cross-reference. Opinion 26 notice, page 174, advises parties of their right to hire a lawyer.
Is this on page 20?
174. Oh, no, we're on page 18 right now. I'm sorry. Right now, we're on page 18. I just
Okay.
gave you the cross-reference of page 174. You were asking where we are right now, right?
Yes.
Okay.
Thank you.
Yeah, we're on page 18 at the top of page 18. Okay. Underneath that, the first two lines there, we pretty much highlighted, and we wrote above it or below it, opinion 26 notice, page 174, advises parties of their right to hire a lawyer or an attorney. Now, it's on page 174. I'm going to open up the document here since we mentioned it. Opinion 26 notice. I'm going to show you what it looks like in real life. Form that you will be using that needs to be the cover page of any contract that you prepare. Only it does not say opinion 26 on top of it like mine does here. I wrote opinion 26 on here. I typed this here. For some reason, I don't know when they did it. A couple of years back, they removed the word opinion 26. It just says notice on the top of it now. So I typed this in here. It does not normally say that. I wrote it on there. I like to have my forms be accurate, so I wrote that on there. So on page 174, if you guys are looking at this form, following along with me, why don't you write the words opinion 26 above the word notice? Because try Googling the word notice and see what comes back. A lot of irrelevant stuff. If you search opinion 26 notice, a very specific New Jersey form will come back, this one. Okay. So let's actually go over the form. It covers a couple things. It says the law requires real estate brokers to give you this following information before you sign this contract. It requires us to tell you that you must read it all before you sign it. The purpose is to help you in the purchase of purchase or sale. Now, Is it really? Is the purpose to help you? It could be. I'm not going to say that these attorneys who made this law are being disingenuous. But let me explain to you how this law came about. Okay. The road to hell is paved with the best of intentions sometimes, but sometimes protection rules were created out of greed. A lot of states do not use real estate do not use attorneys in real estate transactions unless there's a problem, and then they pull in an attorney. And so the southern part of New Jersey operated like that for years. A lot of agents still do, where they don't use an attorney in the real estate transaction unless a problem comes about. Now, we in the north central part of Jersey, we always use attorneys. We ask people first thing, who's your attorney? You know who your attorney is going to be. So in other parts of the country, some states and southern part of Jersey, it's pretty common that agents don't use attorneys in the transaction. And one real estate agent had an epiphany. They're like, wait a minute, because north central part of Jersey always uses attorneys. Because I'm an agent that's taking a more active role in the transaction, I'm actually doing a little more work, the work that an attorney would normally be doing. By doing this extra work, aren't I actually saving that client money? Aren't I saving them the cost incurred by hiring a lawyer by doing this extra work? So he said, I got an idea. I'm going to put it in my advertisements. So he either created postcards or a mailing of some sort, and he started mailing it out to people in his advertising. And you know the real estate agent advertisements you guys always get, postcards or whatever it is, the solicitation. Well, in there he added something that, as your real estate agent, I take a more active role in the real estate transaction that could save you the cost incurred by hiring a lawyer. Now, this landed in a lawyer's mailbox, and the lawyer was like, oh, hell no. We can't let this happen. This guy's taking money out of my pocket. Or at least that's my interpretation of what happened, okay? It could also be this. Well, he's actually putting his client in risk and in danger by doing this. So they really should have a lawyer looking out for their rights. Okay, now you decide which one the attorney was really thinking, okay? I'm just giving you the two different approaches there. So this attorney had this mail that went out, and now he was like, how could we stop agents from doing this? That's what the end result was. How could we prevent agents from advertising to people that you don't need a lawyer? Because lawyers are there to protect you. You know that, right? So they came out with the idea of proposing a law. Who makes laws, by the way?
Politicians.
Politicians pass the laws. Who actually writes them? They have attorneys write them.
No, but-
Attorneys. Yeah.
Okay, politicians have attorneys actually doing the writing of the law. So this attorney actually created the idea of the law. He wrote how he wanted the law, gave it to the politicians, and got their ear and said, you know that a lot of agents are out there making these solicitations, and they're actually putting the public at risk by not informing them of what their legal rights are. And this could be very dangerous for them. And the politician was like, really? You mean nobody else knows about this? I could be the superstar that proposes this law? Sure can. He's like, okay, let me get your paperwork. I'll propose it. And they passed a law. And thus came about this form now that's required by all real estate agents to have as the cover page of any contract that we prepare. So now let's look at this contract, this form that goes on top of the contract, and see exactly what it says with my little ad lib to it for a little bit of humor. Okay. So The very first step is the disclosure of agency relationships. That's that checkbox saying who we represent. We have that on every disclosure and every contract that we use. It says, as a real estate broker, who are you representing? Well, if you're preparing this contract, that means that you're representing the buyer. The buyer's agent's always the one that prepares any purchase contracts. Okay, so that's what number 1 does here. Now, number 2 starts getting into the purpose of this opinion 26 notice. It says, you will not get any legal advice unless you have your own lawyer. Neither I or anyone from the title company can give legal advice to either the buyer or the seller. Okay, that makes sense. If you do not hire a lawyer, no one will represent you in legal matters now or at closing. Understood. Neither I nor the title company will represent you in those matters. Yeah, we kind of got it already, don't we? Now, the contract is the most important part of the transaction. It determines your rights, your risks, and your obligations. That it does. Now, signing it's a very big step. All right. A lawyer would review that contract and to help your feeble minds better understand it. That's my ad lib. It doesn't say feeble minds in there, but you're getting at what how I'm explaining this, right? And to help negotiate its terms. Wait a minute. Don't we as the real estate agents negotiate the terms of the contract? All right, so basically what he added in there was a lawyer can help you understand what it is that you're signing. All right, I got that. Do I need a lawyer though?
No.
Okay, but you better not tell anybody that they don't because of this law now. It says the contract becomes final and binding unless the lawyer cancels it within the following 3 business days. If you do not have a lawyer, you cannot change or cancel the contract. Wait a minute, what's this next word?
Unless.
Oh, so you can change or cancel the contract. So it says, unless the other party agrees. Well, I tell you what, even if you have a lawyer, the lawyer cannot change the contract unless the other party agrees as well. The only thing that the lawyer can do is cancel.
Okay. Okay.
Neither can the real estate broker or the title company. Okay, so I didn't get a whole lot out of this that attorney's doing to help me out, right? Another important service of a lawyer is to order survey and title. Wait a minute. Can the real estate agent order survey or title, or could the home buyer order it themselves? Can they reach out to a title company or a surveyor and buy one? Why do you need a lawyer to do that? See, they're just trying to push their services here. Now, I got nothing against lawyers. I'm just saying a lot of legislation we get is needless. All right. And a lot of times laws are passed because somebody says there should be a law. Or in this case, I am suggesting a little bit that there could be a little greed involved in there. Yes, I am. I may be wrong, but you never know, because I gave you both aspects of the way you can look at it. It's up to you. A lawyer would also prepare the documents needed to close title and represent you at closing. Let me give you a little tip here. That means they just print them out. And I'm going to tell you something. Since the Obama administration created an agency called the CFPB, the Consumer Financial Protection Bureau, it was supposed to simplify the closing process and the documents that are used. It actually complicated them and made them a lot more confusing. So now attorneys, they don't prepare these contracts, these closing papers anymore. They push it on the title company to do. So on that line right there does not apply anymore. So in most cases, I should say, a buyer without a lawyer runs special risks. Only a lawyer can advise a buyer about what to do if a problem arises. Well, that's true. We're not allowed to do that because it would be considered legal advice and we'd be practicing law without a license. Even though we can give advice, we just should not, because once somebody's under contract, only a lawyer can give advice. If you're giving advice to people after they're under contract, you're practicing law without a license. Now, the problems may be about the seller's title. Well, then issues can be handled by the title company, who also have lawyers on their staff, but okay, let's not go there. The size of the property or other matters that affect the value of the property. I mean, we could have a title company address that issue. We could have a surveyor address those issues. But really, we get attorneys involved as well. All right. So basically, as you guys can see, this is basically trying to encourage a buyer of why you really need to hire a lawyer. Okay. That's the purpose of the Opinion 26 notice. You know, the funny, interesting thing though, you know, don't try to buck the system and tell people, hey, you don't need a lawyer, but I got to give you this document. Don't do that. Just tell people, who are you going to use as your lawyer? Because chances are the other side's going to have a lawyer, and you don't want to get them undermined by the other side having a lawyer and yours doesn't. Okay. So just ask them, who are you going to use as a lawyer? And just say, please make sure they specialize in real estate. Don't get a litigation attorney to do a real estate transaction. Even though every attorney took a real estate 101 class as part of getting their attorney's license, their license to practice law. A general practitioner, a doctor, every doctor takes different kinds of anatomy courses, right? But does that mean that they can now operate on your brain or your heart, or do they have specialists for these things? It's the same thing when it comes to law. And when you get litigation attorneys in place, I've had litigation attorneys kill real estate transactions because they don't have the temperament for a real estate transaction. It's not just knowing what the documents are, what the process is. It's knowing that your client really wants this property. And so you're going to try to negotiate the most favorable wording that's to be added into the contract, but not at the detriment of your client getting the property. Okay, so it has to be amicable to both parties, both sides. If you get a litigation attorney in place, what do litigation attorneys like to do? I want to win the case, my way or no way, right? That's not the real estate attorney's job. Their job is to negotiate the most favorable terms to both sides, right? Or the most favorable for their client that's also acceptable to the other side, okay? That's their job. And I've had attorneys do this, where I told my client, make sure you get an attorney that specializes in real estate, Nope, they got their friend that they went to college with that became an attorney. And he got in there and, you know, like a bull in a china shop, you know, my way or the highway. Also not sending me letters of the attorney review process. So I had to call up and say, hey, I haven't seen any attorney review letters going back and forth. Where are we in the attorney review process? So I know where we can, should I start now getting the home inspections and all? And they're like, oh no, that deal was killed. I'm like, killed? What do you mean it was killed? Oh yeah, they wouldn't agree to the wording I wanted in the contract. You think you may want to let me know about that? Does the client even know about it? Oh, I'm going to call them and let them know. You're going to call them and let them know. You're supposed to be getting their approval for this. So I called them really quick. I hung up on the guy and I called the client really quick. And I was like, remember when I told you to hire a lawyer that specializes in real estate? By chance, did you still want that property? They were like, yeah, we want it. Were you aware that your attorney killed the deal because he didn't get the exact wording that he wanted in the contract? No, we were not. I was like, well, if you still want that property, I suggest you get on a phone with them and you tell them to piece that contract back together and do whatever's necessary to get it back together. And then please also advise them to do this because he's not cooperating with me, but you're his boss. Can you tell him to include me in all correspondence between attorneys so I know what's going on? Okay, and they did. Needless to say, that attorney was pissed at me, but I don't care. What's my job? To represent my clients. And I can't represent my clients if I don't know what the hell they're talking about between attorneys, right? What changes they're making, right? If I don't know, how am I expected to do those changes, right? So anyway, that's the little story there. Do never advise people, or I'm sorry, never recommend an attorney to anybody, okay? You never recommend any service provider. You could provide a list of ones that you've worked with before that your clients have used for convenience purposes, but never recommend. because anytime you recommend somebody, they're going to be pointing the finger. Oh, this is the one that you kept pushing on me. This is the one that you recommended. Now, I tell people, listen, you can use any attorney you want. Here's a list of vendors and suppliers, such as attorneys, inspection companies and stuff. This is for convenience purposes. A lot of our clients used them before and they were happy. If you use any of them, you have issues with them, just let me know. We'll remove them from our list, okay? I don't personally recommend anybody because past performance is not a guarantee of future performance, you know? And that's the way I try to avoid any liability, okay? But yet still kind of get them to use the good service providers that I know, all right? So that's the way to do it. And you know what? It is, we're at lunch, so I'm going to, so just to recap here, anytime we sign any kind of a document with somebody, contract, disclosure, whatever, we got to give them a duplicate original of that contract or disclosure. Commissions are negotiable between the client and the broker. They can't have any prescribed fee schedules, has to be a blank line expressed as a percentage of the sales price or a fixed dollar amount. Licensees can prepare contracts only for 1 to 4 family houses and single residential lots. Anything else is considered commercial real estate, and those contracts need to be prepared by attorneys. If we're going to be putting offers in on for sale by owner properties, because we didn't have a listing and they didn't go over all the disclosures about paying commissions and getting authorizations for that and all that, we have to make sure that we put in there a disclosure that we're not violating the Sherman Antitrust Act, and the fee that we're wanting the owner to pay us as commission is negotiable. Any written offers need to be forwarded to the owner within 24 hours, and any listings have to be entered into the MLS unless the owner directs you not to. Then we got to cover our butts and get them to sign a waiver of broker cooperation agreement. All parties involved in any kind of a transaction, buyer, seller, landlord, or tenant, for residential properties anyway, we need to have the opinion 26 notice as the cover page of any contract for sale or lease. That just notifies people of their right to hire an attorney. They don't need one, but we need to advise them that they have the right to have one. All right. And let's see, the last one here we didn't get into yet. If the broker is also licensed as an insurance broker, can they sell insurance to somebody that they're also selling a house to? Yes, they can, but they have to give them a disclosure separate from the contract. Can't just be a checkbox on the contract that could come pre-checked, that if that box is checked, you're going to buy insurance from me. They have to have a separate disclosure that lets them know that they don't have to use your services for insurance as well as real estate, and they could get the insurance from anyone they want. So they have to confirm that in fact they do want to get insurance from you as well. That's within 5 days before the closing. That's all that's all about. Okay, so let me see. Next slide. This is the price fixing one. Okay, CIS form. So we're on page 18 under broker business relationships. All right, so CIS stands for Consumer Information Statement. We need to pay attention to this. We're really going to go over this in chapter 3, but CIS is the first document you give to anyone you intend to do business with. It's only required to be given for residential property, but it doesn't hurt if you give it to anyone. You know, it's the first document you give to anyone you intend to do business with. So when is it given to them? First thing, before you even have discussions for them about why they want to move, what their financial situation is, or what their motivation is to move. Before you enter into any of that discussion, you have to notify them according to Title 11, Chapter 5. Before any discussion or motivation or financial situations initiated, first thing is when you have to give it to them. Okay, so what is the CIS form? It's a disclosure of agency relationships. You guys recall what the disclosure of agency relationships looks like? It's a checkbox. It says, I represent the seller, not the buyer. I represent the buyer, not the seller. I represent both parties in the transaction, seller and buyer. Or I represent nobody in the transaction. I'm acting as what we call a transaction broker, who is just a manager of the transaction. They're doing the same thing as the other agents are. The only difference is they do not claim to be representing anybody, and therefore they do not owe any legal responsibilities to the person they're working with. All right, so it's only required for residential transactions. You got to give it to seller, buyer, landlords, and tenants. It's not required for short-term rentals less than 125 days for residential or for commercial properties. All right. Now, if you choose that you want to customize the way the CIS form looks, there's an example of it on page 43 and 44. You cannot change the font size. The law specifically says that the font has to be a minimum of a 12-point font size on the text, okay? They specifically say that in the law. So the consumer information statement, if you're going to change it, like the one that you see in the book here on page 43 and 44, that's smaller than a 12-point font size. That's not legal to use because they shrunk it down to fit within the margins of the book, okay? But the CIS form, all it is, it's a disclosure of agency relationships. I like to refer to it as a definition sheet. It tells you what a buyer's agent is, what a seller's agent is, what a disclosed dual agent is, and what a transaction broker is. And then there's a checkbox there that says, as of now, how I intend to work with you. Okay, it's not a contract, should not be considered a contract. It's just a disclosure. Okay, and it even says so on the form itself. And I will pull one up so that I could show you. Even though you have it there in the book, page 43 and was it 43 and 44? This is the CIS form. Okay. Consumer information statement. Nothing fancy. It looks like just a bunch of text, right? It's actually a two-page document. So the other side of it, you flip it over, it looks like that on the other side. But check this out. If I were to put this on legal size paper and turn the paper sideways and print it, because if you turn it sideways, it's on legal size paper, you could turn it sideways and then print this out. And then you'll have 2 more columns. And those 2 additional columns that when you fold it, you'll get a different front and a blank back. And that means that you could customize the cover of it and customize the back. I've done this before where I customized the cover and had the shape of New Jersey up there and said consumer information statement about the agency relationships. And on the back, you could put the agent's photo, your company's logo and contact information and customize it up a bit. But if you do that, just make sure that you cannot shrink this font size to be anything less than 12 points in size. And so it just describes to people what the agency relationships are. And you see right here, what does it say down the bottom on the second page here, the page with the signature side? I want you guys to highlight that in the book. It says, you may obtain legal advice about these business relationships from your own lawyer. This statement is not a contract and is provided for informational purposes only. Look, if you start sticking forms in people's faces before you answer any questions from them, they're going to be like, whoa, they're going to back up. It's the laws of, every action has an equal opposite reaction. You stick something in somebody's face, they're going to back up, right? So if your first reaction is to stick a contract or form in their face, they're going to back up. Whoa, I don't want to sign any contracts. Well, hey, wait, hold up. Look, this statement is not a contract. It's intended for informational purposes only. And then you say, but I need you to sign it to show that I've given it to you. The law doesn't require them to sign it. But I tell you to always cover your butts. You could give them one copy that's not signed, but you got to say, hey, you got to initial or sign my copy at least. To acknowledge, highlight this on the right upper hand side. acknowledgement of receipt of the consumer information statement. By asking them to sign, you're just asking them to acknowledge that they've given you a copy. That's it. Okay. Now, the same one is used for sellers and landlords or buyers and tenants. And here, from the example of a buyer or tenant, I would just write it here. I put down my name of my brokerage here, and then I have them sign. Declaration of business relationship. I put my name, I put the name of my brokerage, and then I check off how I'm working in this transaction as of now. I intend as of this time to work with you as a, and you check only one. Seller's agent only or buyer's agent only. Seller's agent and disclose dual agent if the opportunity arises. That's when I first meet somebody, that's what I'm going to do. If I'm going in for a listing, I'm going to say seller's agent and disclose dual agent if the opportunity arises. Hey, Mr. and Mrs. Seller, you think that it would be all right that if our agency brings a buyer in? Well, yeah, that's what they're hiring you to do. Yeah, but our agency wouldn't be able to represent the seller and the buyers in the transaction unless you give us permission to. And it's not necessarily me, but it could be another agent from my office that's bringing the buyer in. And if they do, and they're representing the buyer, then our agency is representing both parties in the transaction. So if another agent's already representing a buyer, if you don't give us permission, then we can't introduce that buyer to your property because we can't represent both parties in the transaction unless you give us permission to. Does that make sense? Just full disclosure. It's not necessarily me that's going to be working with both parties in the transaction, although it could be. It could be another agent from my office. We're both representatives of the same company. And so therefore the agency, it's not the agent representation, it's agency representation. So the agency is representing both parties in the transaction. Remember, I told you that all the agents within the office, you guys are just appendages of the broker, right? So you're all work together. You're all part of one being. Think of yourself as one. You know, you work under the same agency umbrella, the same roof, okay? Even though that other agent never met your seller, guess what? The agency is representing them, and all the agents in that office represent that seller because they're all representatives of the broker, and that broker is representing the seller, right? Or buyer, or both. So I always check off that I'm representing one or the other because I always represent my clients. I'll never work as a transaction broker. I always work as an agent, whether it's a seller's agent, buyer's agent, or disclose dual agent, because I'm representing both parties in the transaction and I'm going to disclose that fact. But as of right now, I intend to only work with you as a seller's agent. But if the opportunity arises, our agency will represent both parties in the transaction. Okay, that's my intent as of now. And then I date it. Okay. Now, in addition to that, I can't just work as a dual agent now and have our agency representing both parties in the transaction just because I disclosed here that that's my intent as of now, if the opportunity arises. Now, if the opportunity arises, I would have to have that seller fill out and sign an informed consent to dual agency, which now gives me implicit permission to work as a dual agent. This is an informed consent to dual agency. You see it says seller underneath. There's 4 versions of this. There's one for a seller, one for a buyer, one for a tenant, and one for a landlord. All right. So we call this the informed consent to dual agency. This one's for this is the same one that is in the book, by the way. Not sure what page it is, but it's in the next chapter where they have to now give us implicit permission to work as a dual agent. Okay. Getting a little bit too far into this because this is chapter 3 stuff really, but I want you to get the basic idea. So there's one for the seller. There's one for a buyer. There's one for a tenant, and there's one for a landlord. Look, here's the one for the buyer now. See that? It says buyers. Informed consent to dual agency, buyer. Okay. So there's a separate form for each one of them. both of them are not signing at the bottom. It's just the buyer signs this one. The other one, the seller only signs, right? And it tells them basically what being a dual agent means and what any risks or obligations are of either parties and what they can and can't do, okay? We'll get into that more when we get into chapter 3. So let's get back to the slideshow here. So CIS consumer stands for what?
Consumer
Consumer
information.
information statement.
And what is it informing the consumer about?
Discloses your role.
Yeah, it discloses the different ways that we could work with them. And as of now, how our agency plans to work with them. Okay. And when do we give it?
First thing.
And who do we give it to?
Buyer, seller, landlord. tenant.
Anyone we intend to do business with for residential properties. Okay. All right, that's it. But that'll be on exam and you need to know it. It will be on exams, I should say. You need to know it. So under broker business relationships, I put a highlighted box around that first paragraph and I wrote on the side of it, CIS form, page 43, 44, giving that disclosure of where it's at. You see how I wrote that on mine? I just put a bracket around it and I wrote CIS form 43 and 44. And this is what the CIS form does. It breaks it down. It says you could be a seller's agent, a buyer's agent, disclosed dual agent, or a transaction broker. Seller's agent, the agency only represents the seller. Buyer's agent, the agency only represents the buyer. Disclosed dual agent, the agency represents both parties in the transaction. And we can't do this without their implicit permission. So we're going to have them sign an informed consent, giving us informed consent to work in that capacity. Okay. Because undisclosed dual agency, if your agency is representing both parties in the transaction and you never got the permission of the parties to do so, that's illegal. Okay. We just got to let everybody know there's nothing wrong with this full disclosure. Who's our agency representing in the transaction? One party or the other. The reason why it's important to know is if we let that person know up front that our agency is representing the other party in the transaction as well, they're not going to come back at us later. Oh, I wouldn't have told you something because, you know, there's that possibility that you could go back and say it to the other person. Even though if you're working as a dual agent, you're actually prohibited from anything that somebody tells you in confidence. You cannot disclose it to the other party. You got to keep your mouth shut about it. If you're representing both parties in the transaction, you got to be loyal to your client's interest. But if you're representing both parties in the transaction, well, you can't put one party's interest above the other. You have to remain neutral then. That's the only downside to working as a dual agent for either the buyer or seller. Because normally an agent, if they find out something that could benefit their client, they have to go blab it back to their client. But if you're representing both parties in the transaction, you got to keep your mouth shut. You cannot get any, because you're representing both parties. So if you blab, that means that you're going to be disclosing something that somebody didn't want you to, you know?
Yeah.
So you got to remain neutral in that regard. Okay. It's actually not that difficult to be a dual agent, as long as you could keep your mouth shut. Really? Okay. So, you know, I know some people say that, you know, hey, well, that got to be kind of tough to do. No. Can you keep a secret? I mean, I know you're trying to represent both parties in the transaction, but if they tell you something in confidence, like they're willing to accept a lower price, you can't go to the buyer and say, hey, they're willing to pay less. Okay. You're siding with one of them. You're like, okay, so you got two friends, you got two best friends, or is there one better than the other? You know, now you're making that conscious decision that, I like this one more than this one, so I'm going to side with them. That's basically what you're doing, but for a business transaction here. The reason why I'm talking about friends and stuff, because anytime I start talking about these agency relationships and business relationships and marketing, I always refer to them as relationships as well. They are relationships, kind of like our personal relationships. So anytime you think of these business relationships, try to equate them to personal relationships you have with your loved ones. You have that significant other, right? You want to have true, full fidelity to them, right? So you have, you go back and you're honest with them, and you completely disclose everything to them. All right. Now, if you've got two significant others, okay, you got to keep your mouth shut about some things. All right, it'll help you, I guess, in that regard, even though you shouldn't really be doing that. But there's some things that apply, and it goes to everything from advertising to disclosure of agency relationships, that if you try to find the similarities between them and our personal relationships, our intimate relationships we have with others, you're going to start treating them a little bit differently. You're going to understand them a little bit better. Okay. You guys will see what I'm talking about as this class progresses, because I start talking to things like, if this was your significant other, what would you do? It's the same kind of situation. You'll see what I mean. It'll mean a little more. All right. So here are some of the common forms and disclosures that we use in the real estate business, because people say, well, can't you just make a list of all the forms? Well, I could make a list, but they wouldn't always apply, because different transactions have different situations. You're not always representing both parties in a transaction. You're not always, so informed consent to dual agency is not always needed. This lead paint hazard addendum, you don't need it if the house was not built prior to 1978, which we didn't get into. So here's some of the common disclosure forms that we give. CIS, first document you give to anyone you intend to do business with. It's a disclosure of agency relationships. If your agency is going to represent both parties in a transaction, now you need their permission to do it. So this is the permission form, called an informed consent to dual agency. The Opinion 26 notice is the cover page of any contract prepared by licensees, telling people they have the right to hire a lawyer. It's used for residential purchases or leases. The Attorney General's memorandum, that's given to owners and only the owners of property at the time we get the listing. It informs them about all the anti-discriminatory laws that are out there and tells them that they can't discriminate. Okay. The lead hazard addendum, which we didn't go over yet, any property has to be first filled out by the owner. All parties in the transaction need to fill it out if the property was built prior to 1978. Okay, because in 1978, they banned the use of lead in building materials. Well, at least in paint and in pipes and in solder and in most building materials, and on flashing for roofs. And when we get to chapter, I think it's 9, we start talking about hazardous materials used in construction. So we'll go over this one again, but that's another form. Needs to first be filled out by the seller, the owner, because they're disclosing whether they have any knowledge of lead paints or lead pipes or any other lead hazard in the household. They're not required to inspect for it. They're only required to disclose if they're aware of any lead hazard in the home. And then they give that form to the buyer or renter to sign, which the very first thing that the buyer or renter is initialing off on is, I've received and reviewed all the information provided above by the seller. So obviously the owner needs to fill it out before the buyer or renter, because how are you going to have the buyer or renter fill out something that says, I got all the information that's provided by the owner above, when they didn't even fill it out yet? Okay. If this form is improperly filled out, or if it's missing from a transaction folder, where the property was built prior to 1978, minimum fine, you're looking in $11,000 territory and above and up. Okay. And your broker's not going to want to foot the bill for that fine. All right. So your broker may be riding your cases a little bit at the beginning when you're getting started, trying to make sure that you got all your paperwork together. Okay. Understandably so, right? So don't get all bent out of shape when your broker's like, seems like they're riding you. They're doing it for a reason. They're trying to train you and teach you. Okay. Hopefully they're riding you. If they're not riding you, that's a bit of a problem in its own, because they really don't give a crap. Where's my money? You know. All right. Waiver of broker cooperation. What is this? This is that form that needs to be signed by the owner when they tell you not to cooperate with other brokers, right? It's just another slide I have for that. Exclusive buyer agency agreement. This is a, why do I have this all in here? Let me take a look, see if this is in this chapter. Nope, it is. Look at that. All right, we're talking about working with sellers and buyers and both, right? What if you're only working with a buyer? Look, if you're only working with a seller, what is our contract that we sign with them that says that they're not going to cheat on us? Remember I said, think of it as a relationship. What's the contract that an owner signs? If you get a listing, they hire you to market that property. What's the contract that they have you sign that says that they're not going to cheat on you? And it doesn't matter if they do, they got to pay you a commission if they sell it while it's listed with you. It's called a listing agreement, right? So that's a give me. That one's easy to figure out. But if you're working with buyers or renters, is there anything that would prevent them from working with other agents too? No. Would you want to work with somebody? Here, let me rephrase it another way. Would you want to start a relationship with somebody and they tell you from the get-go, by the way, I'm going to be cheating on you?
No.
Okay. So
No.
well, here's what I mean by
so.
thinking of these business relationships the same as kind of like these personal ones. So would you want to work with a buyer or a renter that says, by the way, I'm going to be working with other agents and I may not go through you, even though I'm going to use your services? I may not put the contract in with you. I'm going to use you to show me homes, but you're probably not going to get paid on it because I'm going to maybe use another agent. Would you want to do business with that person?
No,
Probably not.
Yeah, I probably
No.
wouldn't either. All right. So how would you know if they're working with another agent or not?
You won't.
Well, there's a good way you could at least start to try to find out.
Yeah.
How would you do it if you were in a relationship with somebody?
Hire an investigator.
You gotta do some research.
Okay.
But ask.
How about you just ask them a question? Are you cheating on me?
Oh, well, okay.
All right.
Yeah, because that always works.
Well, I said, how would you start it? I didn't say this was going to be all end all. Okay.
I don't think any woman starts by asking.
Yeah,
Well,
but well, you know what? That's why there's a lot of problems between men and women, you know, because our relationship, we don't communicate enough. We need to communicate. If you communicated more, you know, that wouldn't be a problem. You know, maybe you don't have a problem with your spouse cheating because you're cheating too, and you guys are both okay with it. You know, that's fine if you're both aware of it and you're good with it, you know. But see, I'm talking about relationships can be different too, okay? But I'm saying if you have an open dialogue, at least you guys can address those issues, right? So the same thing with a buyer, right? If you're working with a buyer or a renter, don't you want to at least know and ask them? They may not be honest with you, of course they may not, but at least you could ask the question and put it out there. And then what I would do is I would have them sign a document, a contract that says, I'm not working with anybody. Don't you wish that you could have your boyfriend sign a contract that said, I am absolutely not cheating on you and I definitely will not?
I need that contract.
Is that letter the letter of intent?
A letter of intent. There you go. Well, no, this is, okay, so we have an exclusive buyer's agency agreement that says you are going to be exclusively working with me as your buyer's agent for these certain areas that we're going to stipulate. Because I may not work all over the state of New Jersey, even though my license allows me to work all over New Jersey. I'm not driving all the way down to Cape May or all the way up North Jersey showing homes. You know, I got my certain geographic area that I work in, you know. So I may write down the areas on this form that I will be your exclusive agent. But if you're looking in other states or different areas of New Jersey that I don't cover, then you can work with another agent in those areas and I'll be cool with it. Okay. As long as we're aware of it, we spell it out from the beginning of the relationship. This way, everybody's working on the same wavelength and is aware of what's going on. It won't be as bad, right? It's worse when you get shocked and find out that they were cheating on you later, right? I mean, because at the beginning, you have the option to say, okay, I'm going to go into this knowing full well that you may be cheating on me. Or you could say, you know what, not for me. Right? It's the same thing with this business relationship. Okay, if you're going to be working with other agents, then I'm not working with you. Or you could say, I'll work with you and you could only work with other agents in these areas that I don't cover. Now, if you don't agree to that, then I'm not working with you. Okay, that's the way that I go about doing it. But you see how I associated it to relationships, so you get a good basic understanding of it. And so you would want to have something like that in writing with relationships. It would make all right, no problem, Elizabeth. It would make it a lot more solid of a relationship that you're getting involved in here, and you would have it spelled out. And there's a couple reasons why I say this is very important for you to do. But I'm going to tell you straight out, most agents do not use these exclusive buyer agreements. Just like most of you, when you get in relationships, you don't just ask them, are they cheating on you? Or, you know, or lay out the terms of our relationship from the beginning. You know, you know, if you laid out the framework of what you're expecting from somebody, couldn't you save a lot of time in a relationship?
A lot of time.
But it's a little uncomfortable to talk about, isn't it?
Yeah.
You know what? I'm getting older.
Not for me.
I don't think it's uncomfortable at all. You know what? I go with this attitude, pardon my French here, shit or get off the pot, you know?
There it is.
So let's lay it on the line. This is what it is. Take it or leave it, you know?
Yep.
This is what you got, right? Take it or leave it, you know? Do the same thing in a business relationship. It may be a little bit uncomfortable at the beginning, but once you get a habit of doing that, you know what? Your life is going to be a lot more stress-free, and a little more secure in your relationships that you do enter into. Because, well, first of all, for the business though, we're signing a contract. I'm going to show you that contract. How about that? Would you like to see it?
I have a question. Like, at what point do you like bring this out? Because I know the other one, you do it when you first intend on doing business with them, but at what point would you bring out?
When I first start working with a buyer. So first thing I do is I'll give them that exclusive buyer's agency. I will give them the CIS form, show you the different ways that I could work with you. And as of now, I intend to work with you only as a buyer's agent, but a disclosed dual agent if the opportunity arises. Do you think that you may be interested in seeing one of our company's listings? Your answer will probably be, well, I don't know. I don't know your company's listings. Well, I'm not going to be able to show you any of our company's listings unless you agree to it, because look, our agency is already representing the seller because we got the listing. And if you want us to represent you in the transaction and show you one of our company's listings, we need permission to represent both parties in the transaction. Okay, so I'm just being open and upfront. Hey, we're working with both parties in the transaction. As long as you're aware of it, you can make that decision of if you want to go with it. Okay, so what's the downfall of it? Well, I can't tell you if the seller is willing to accept less money on the house. I could just say, make your best offer. Right? Now, I could help guide you in what the offer should be by giving a CMA for you. And then here's the price range of what the current market value is on the property, the CMA comparative market analysis, showing you what the property is worth, the price range at least. Then you could make your informed decision that way. But I can't give you guidance on how we can get this property as cheap as possible. Whereas if I was representing you only as a buyer's agent, I could try to come up with strategies and everything, how to get this property as cheap as possible, because I don't represent the other party in the transaction. So I'm not trying to put one party's interest above the other. I have to remain neutral when I'm representing both parties in the transaction. Okay, because otherwise, if you're working with only one party, seller, I'm trying to get them as much money as possible. Buyer, I'm trying to get it as cheap as possible, right? If I'm representing both parties, I just treat them fairly and equitably, and I tell them, listen, here's how much your home is worth, how much you want for it. We got an offer, and I'm also representing the buyer on it. Do you want to take it or leave it? What do you want to do? When I'm making an offer on behalf of the buyer, I say, well, I'm representing the seller too. So only thing I could do is I could give you the CMA that'll show you what the property's value is in the current market. So what kind of price do you want to make on it? You want to go full price, a little bit less? What do you want to do? Okay, and it's their decision to do. Okay.
Okay.
Sorry.
Why did you say most agents don't use it? I know you said it could be uncomfortable, but I mean, from a business standpoint, why don't they use it?
Okay, from a personal standpoint, how come you don't ask people these probing questions when you get into a relationship?
I tend to ask difficult questions, so that's
okay,
why I
okay.
don't understand not using it.
Okay, so then you would probably use this form. Okay, it is as simple as that. Agents feel uncomfortable talking about their commissions and their relationships. You shouldn't. It's your business. This is your business. You know, I can understand a little more emotions involved in personal, but in business relationships, it's a business, you know? Don't take it personal. This is a business, you know? Look, I'm working for you, and if I'm working for you, I expect to get paid. Now, you as the buyer, you don't pay me the commission. The seller always does. But I don't want you to be jerking me around, having me show you around properties, doing all this research for you, and then putting an offer in through your sister who's got a real estate license, or your girlfriend or something, you know? That's pretty messed up. Okay, but I'm not going to have a conversation all adversarial like that at the beginning with somebody. So I'm just going to say, all right, well, next up is I'm going to have you sign this exclusive buyer agency agreement. And one of the first questions on here, actually the second, the first part is you put all the buyer's information, your brokerage firm, and the different areas that you're going to be working and showing them. Now, over here on this form, it says municipalities. On this form, it talks about the municipalities. You see that right there? But in New Jersey, the most densely populated state in the nation, you could split into 3 different municipalities, you know? So I like to write down the county names that I work in, that I will represent you in. And any other place, you're free to work with another agent if I won't go there, okay? Or if that's not my main area. But I will write down the county names. And then look at the very first question it asks after that. Does buyer have a business relationship with another broker? Does the buyer have a business relationship with another broker? Yes or no? Are you coming into this relationship and you're already married? Isn't it asking the same thing pretty much? So ask the question if you want to know the answer. All right. A lot of agents, especially new agents, they don't want to risk losing the business. But let me ask you a question. Were you really in business? Did you ever really have a shot if they were already married?
No.
Okay. Were you really in business with this person if they're already working with another agent? Probably not, but let's ask the question and find out, because then we could do follow-up questions. If they check off, yes, I am working with another broker, then I'll sit back and I'll be like, well, then why are you here? And I won't say anything until you answer. That uncomfortable silence can be very powerful in getting answers, right? So, well, then why are you here? If you're already working with another agent, why are you here? I'm waiting. Okay, and get an answer out of them. You know, don't start answering it for them. Wait for an answer. Why are you here? Now, if they start saying, well, because I didn't like my agent, they're not communicating with me right. Okay, so then break up with them, right? And then we could start a relationship. All right. And so what I'm going to do now is I'm going to have you sign a piece of paper. Look, blank piece of paper. I want you to write on here, address it to the agent that you are in a relationship with right now, and tell them, as of now, I'm breaking up with you. Now, don't put that wording down, but you get it. You know, say, I am no longer going to be working with you as of today. I will find another agent to work with. Sign it, date it, and then you guys fax it over to that other agent to make sure that they get it. And then count 3 days, 1 day, 2 day, 3 day, and then you could start working with them and not worry about any claims from the agent that you did anything inappropriate. Because licensing law says it's illegal to solicit the business of another broker. Now, it's easy to figure out if they're working with another broker because if from a listing, from a sales perspective. But what if you're representing a buyer or renter? You need a form like this. Can they lie? Sure they can. But at least we could try to build some evidentiary chain here, showing that at least we put forth the effort to find out. You got it? And this will also help if that other agent, if they actually do start working with you, and now that other agent makes a claim, hey, you took away my client. Did you send them to me to show you the properties? And then they put the offer in with you. Is that what happened? And I'll say, well, no, because this person came to me and actually said they were already working with you, but they didn't like you because you were not helping them. So I told them, if before I could work with you, you got to fire the other agent. Otherwise, I'm not working with you. So they fired you. I waited the 3 days and they started working with me. And now I showed them a property. I put a contract in it. You got a problem with them? Bring it up with them. You want to file a complaint against me? You're more than welcome to do so. Now they would, if that agent wants to file a complaint because they think that they're owed the commission and they think that I did something inappropriate, they would have to prove it. And they would have to, they would have to prove it quick. They'd have to file a complaint quickly. Because if they don't file the complaint quickly, the longer they wait and the more work I do with this client in the transaction, the more I become what we call the procuring cause of the transaction, the one who procured the sale and would be legally owed the commission. The procuring cause of a sale is the agent who did the most work leading up to the sale to cause the sale. And therefore, they're the one that's owed the commission. So if one buyer, if one agent showed the buyer the property and another one put the offer in, the buyer's agent, the agent that showed them that property is the procuring cause as of this point. But now that that agent who put the contract in gets it signed, goes to attorney review, it's out of attorney review, they order home inspections, they order appraisal. The more work that they get done in the transaction, the more they become the procuring cause. You follow? And that initial buyer's agent that just simply showed the property may not even find out that they're working with another agent, period, ever. Or if they do, they may find out about it too late. Okay. But if you do, if that's you, you're that agent, you got to file that complaint as soon as possible to try to ensure that you're due that commission. So the good way to start it is, listen, I had an exclusive buyer agency agreement signed with my client. When exactly did you come in the picture? How did you come in the picture? Okay. So at least I have some evidence when we're filing complaints. Do you have one of these? Right. Now, who do you file these complaints with if you feel that you're owed the commission, that other agent directed somebody to use you like that?
The real estate commission?
Nope. And I'm going to ask you why, and I'm going to have you answer the question why. What is the real estate commission's job? It's to enforce licensing law. What is the purpose of licensing law? It's to protect the general public from unscrupulous agents. It's not to listen to arguments between bickering agents over commission.
Right.
So who does
Right.
listen to that stuff? The Realtors Association.
Realtors Association.
So you would have to file that complaint with the
Yeah.
local Realtors Association. And that complaint is actually called a procuring cause complaint. Because you're saying that you're the procuring cause of the sale and the other agent's saying that they are. It's not easy to prove. Because it's at the end of the day, who's owed the commission? The one who can prove they did the most work leading up to the sale. But that's difficult to do. But if I had an exclusive buyer agency agreement signed from the beginning of my relationship, isn't that some of the evidence that I could show at the beginning? Yeah, I was working with them. They said they weren't working with anybody else. When exactly did you get in the picture? All right. That now, because I have this sign doesn't mean that I'm absolutely the one that's owed the commission, but it'll help. You understand? It's like asking somebody the question at the beginning of a relationship, if you know, and they could lie, but you know, it'll help if you at least ask the questions, right? So it's the same kind of scenario, kind of like relationships. You see how I equate it to relationships? The things are very similar. It is a relationship, but it's a business one. Now, declaration of business relationships, you're going to put down here your name, then your brokerage's name, intend as of this time to work with you as a, and you're going to check off buyer's agent only or buyer's agent and disclose dual agent if the opportunity arises. You're going to put the term here. How long is this a working relationship going to be for? Okay.
Victor, where are you?
I'm just showing it on. Oh, you guys aren't. Okay, I'm sorry. I'm here.
Yeah.
I'm showing. Okay, here.
Okay.
Thank you. Sorry about that. Thought you guys were seeing this. Okay, so once again, this is the exclusive buyer's agency agreement. You put the buyer's information here, the name of your brokerage, the municipalities that you're working or representing them in. I don't put down municipalities. I cross the word municipalities out and write counties and just write down the county names that you represent the person in. Or you can make your own custom version of this form. You don't have to use this one. You know, this is just the one that the Association of Realtors created for our convenience, right? And so I kind of have a modified version of this one I use. Do you have a business relationship with another broker? Yes or no? Okay. The declaration of that business relationship, you're going to put down your name and your company's name, your brokerage's name. And then you're going to check off one of these. You're representing them as a buyer's agent only or buyer's agent and disclose dual agent if the opportunity arises. The term of your relationship, okay? How long is it going to last? But you wish you could specify that. All right, so the term of the agency shall commence on, what's the start date of your relationship officially? And when is it going to be good to? And it's renewable. All right.
We need this in real life.
Yeah, we do, right? We'll be married for 3 years. And then if we feel like the relationship is going good, we can renew. Otherwise, we go our own way and don't need to divorce. But they don't have that. They don't have that. Yeah, so I could see how that could be useful. See, you see it. You hit the nail on the head. Some of these business relationships can also cross over into our personal ones, if that was a thing, you know. It's going to expire on midnight 3 years from now. No, so, but we could put here, I always put this down, I put 1 year. Okay, so I'm working with a buyer. I hope I find you a property in less than a year, you know, but I'm going to say that our relationship will last 1 year. If we go longer, then I'll need to re-up this, but it's not really necessary. I'm still owed the commission either way. This just says that you're exclusively going to be working with me. And in the event that any property I showed you, you put an offer in with another agent, you still owe me that commission. Mr. or Mrs. Buyer. Okay. Now, you may have a little tough time collecting it. You probably have to end up suing them to get it. You know, they're probably not going to volunteer that cash up. But having some kind of contract signed with a buyer kind of a little scary, right? They signed a contract. I have to stay with my agent. I have to use them. So hopefully by using this, it'll work in your benefit. Is it going to be a be all end all that they're absolutely not going to cheat on you and that they can't get away with not paying you a commission? No. But why not use something like this? You know, if I had you sign a contract that we're going to be in a relationship, otherwise you owe me a boatload of money if it ends before a certain date. You're going to want to stay in that relationship at least until that date, even if you got to fake it a little bit. Yeah, maybe. All right. So the brokerage fee. Oh, this is probably why a lot of agents don't want to get into it. Agents usually don't have a problem saying, hey, are you working with another agent or not? All right, screw them. You're going to work only with me now. Okay. They don't got a problem doing that usually. This is usually where they got a problem. This is the minimum I'm willing to work for. And you, Mr. or Mrs. Buyer, do not pay the commission. The seller always pays the commission. But that commission was negotiated between the listing agency and the seller. Now, if they split that with our agency, now if they didn't get a high enough commission split, they got a low commission fee that they charge the seller. And then I'm only getting part of that. That may be less than what the minimum is that I'm willing to work for. You guys got to set a price on your services. And if that's less than what I'm willing to work for, Mr. or Mrs. Buyer, are you willing to pay the difference? Now, is it a fair question to ask? I may even I may even say that to the buyer. Isn't that a fair question? So here, this is the way I do it. The brokerage fee is always paid by the seller. You don't have to worry about it because you never pay it. The seller always pays the commission. It's basically split. That's negotiated between the seller's agent and the seller. And then that's fee is split between the buyer's agency and the seller's agency. Now, the minimum commission I'm willing to work for is 2%, and I still got to split that with my broker. Would you agree that I'm not trying to take advantage of somebody? I'm not trying to get rich off of one transaction asking for 2%?
Yes.
All you guys, you guys agree?
Yes.
Yes.
Okay.
Yeah, that's pretty low.
All right, I asked that to the buyer, and I make sure that they answer me. See how I just probed you guys? You weren't answering. I said, "Isn't that fair? Isn't that fair? Would you agree that that's fair?" And you guys are like, "Yes, yes, yes." And somebody even said, "Yeah, that's very low." Okay, so good. Thank you for agreeing with me. It is kind of low, but that's the minimum I'm willing to work for. So you agree? I'm asking for a fair amount, right? So if they're not offering that fair 2%, maybe they got a 3% listing and they're only offering 1.5%. Mr. and Mrs. Buyer, are you willing to pay the other half? Because you said 2%. You agreed with me. That's kind of low, but that's a fair amount. But that's the minimum I'm willing to work for. Are you going to make up the other 0.5%? Or do you want me to filter out the properties, not show you those ones that aren't offering that minimum commission, which we kind of said it is kind of low. And you know what? I would suggest that you would filter it out, because I wouldn't want you to pay any money that you don't need to pay. Most listings out there would pay that minimum commission. But if you're going for a for sale by owner, maybe they don't want to pay it, or maybe the listing agency got a really low fee. Why did the seller agree? Why are they paying such a low fee? Say what's on top of your mind. Don't be shy. They're cheap.
Save money.
They're cheap. They're cheap. They don't want to pay a lot of commission. I understand it. I can understand cheap. You want to pay as little as you can. But listen, if you're not even paying 2% to a buyer's agent who wants to come in, that's cheap. And if you're that cheap in paying that commission, Mr. or Mrs. Buyer, What do you think is going to happen when you get under contract with them and you do a home inspection and you find out there's issues? Do you think that they're going to want to do all the work that's needed?
Nope.
Or you think they're going to be
No.
cheap about it?
Yeah, well.
You see
They
how
may
I'm
just-
making you guys
they
answer
may
that?
back out.
I'm letting
They
you
may back
answer
out.
that. You should
Yeah.
let them answer that. Don't answer all the questions. Let them participate in the conversation and let them answer that. And then you'd be like, see what I mean? You're getting them to agree with you and you're
Mhm.
getting them to justify your argument. I don't have to do all the talking. I'm just gonna say it in a way that's understandable by all of us. You're gonna be like, yeah, I can see where you're coming from here. So do we want to make an offer on this and you're going to pay the difference, or do you just not want to see these properties because you know it's going to be an issue? Now, there's another reason why I say it's very important for us to do these exclusive buyer agency agreements with this commission issue. And a lot of agents are bashful talking about their commission. But if you do this, this is going to sound like it's out from left field, but it could prevent you from getting accused of discrimination too. You may be thinking, how the hell does money have to do with discrimination? What does your commission have to do with discrimination? Let me paint you a picture, if you would allow me to. We're going to go to this whiteboard here, and we are going to paint you a picture. And that picture is going to show you how having an exclusive buyer's agency agreement could save you from a discrimination suit. By the way, in order to be, before I get started here, let me explain. In order to be found guilty of discrimination, a discriminatory act only had to occur. The person does not need to prove it was your intent to discriminate against them. It could have been the furthest thing from your mind. But if a discriminatory act had ended up being, if I could explain and show that a discriminatory act had occurred, even though that wasn't your intention, guess what? You're still guilty of discrimination. Okay, so we're talking about commission, and now I'm turning it into a discrimination thing. Watch. Let's just say that your client said that they had certain specifications that they were looking for in a house, in a certain price range and all that. And you find all these homes that meet their criteria, right? Now, a lot of agents, they start, when they look at homes and they're looking in the MLS, their eyes kind of drift down to what's the commission? How much am I going to be making on this baby? You know? Now, when you do that, whose interest are you putting first?
Yours.
You're putting yours. You know, your commission should be regardless. You shouldn't be looking at the commission. And if you had an exclusive buyer's agency agreement filled out, then you wouldn't be looking at the commission because you know you're going to get your minimum either way, right? So there's one way to try to avoid it by having that exclusive buyer's agency agreement filled out. So a lot of agents, what they'll do is they'll go through the listings that they're going to show to their clients, and they're going to be like, their eyes drift to the commission. They're like, oh, hell no, I'm not showing them that one. Next. Oh yeah, I'll show them that one. That one's good. I'll show them that one. That one's good. You crazy that that's all they're offering? No way, you know? And so their clients may not even know that some of these properties are getting filtered out and they're not seeing them. All right. Now, that's not discrimination. That is simply an agent putting greed in the way, right? They're putting their own interest, which is a violation of your fiduciary duties, your legal responsibilities that you owe your clients. You got to put your client's interest above all others, including your own. So that's not discrimination. It's just a violation of your fiduciary duties, but it's also breaking the law, licensing law. Okay. Now, let's say that all these properties that you're showing them that meet their criteria and also are paying a decent commission. If they could paint the picture that they're all on one side of town and all these other properties that also meet their criteria, you have not been showing to them that are on this side of town. How come you only showed me these properties on this side of town, but not the ones over here? They meet all my criteria. Why didn't you show me them? What's the agent going to say? Oh, because I'm putting my own interest first. I seen how much money I was going to make on them. Well, you know what? You're guilty of violating the law there, without a doubt. But that's, I can't say which one is better. They're both violating the law. If this person can prove that you've been showing them, you've been avoiding showing them properties on this side of town, you've been only showing properties on this side of town, and you've been not showing them any of these that also met their criteria on this side of town, it can be construed as steering. Steering is a illegal discriminatory practice, trying to get somebody out of a different neighborhood. You say, I think you'd be better off in this neighborhood. I think you would like it better over here. Now, it's not always somebody's actually just saying that. They could actually be doing that without saying it by limiting your options and simply not showing you the available properties there. Now, in this case, this agent is effectively doing that, but discrimination is not the reason. The money is. But when it comes to discrimination, you don't have to prove intent. You just need to prove a discriminatory act had occurred. So guess what? That agent is guilty of discrimination. Now, what's their argument going to be? No, I wasn't discriminating. I swear I wasn't discriminating. I was just looking at how much money I was going to make. Oh, so you're putting your own clients, your interest above your clients. What are you going to say? You're damned if you do, you're damned if you don't. You screwed up, right? Because you were putting your own interest first, okay? So if you had an exclusive agency agreement, hold on a second. If you had an exclusive buyer's agency agreement in place and you did this, you could be like, yeah, none of these properties offered the minimum commission. But you know what? That is okay. You know why? Because I had the conversation with my client and they directed me not to show them those properties that were not offering the minimum commission. And if I could prove that these 3 properties over here were not offering that minimum 2% commission that I said I was willing to work for, I'm in the clear. I won't be convicted of discrimination. And I'm not violating my fiduciary duties to the client because I had the conversation with them about the commission that I was willing to work for. And they actually signed on this piece of paper, the exclusive buyer's agency agreement, that the minimum fee I was willing to work for. And then what I would have to do is on mine, mine's a little custom. You would actually have to write it down here. Write it in here and have them initial next to it, unless you made it part of the contract itself. That says that you give them an option where they could check off an initial next to it that says, do not show me properties that do not pay the minimum stated commission above, or I am willing to pay the difference. Okay, by doing so, you're protecting yourself 100%. Oh, remember about having that, sending that other agent that firing notice and waiting 3 days? Well, you put in here how long this agreement is going to be for. Well, look at this. The term of the agreement up here, how long it's going to be for, and then it says, or 3 days after written receipt by a buyer's agent of a written termination notice from the buyer, whichever shall occur first. Okay. So even if somebody has an exclusive buyer agency agreement, somebody can fire you still. They don't want to work with you no more. It's their option, right? All we could do is try our best and to protect us, to protect our clients, and to try to prevent other agents from inching in on our clients and our territory, right? All right, so there we go. That's that. All right. That's chapter 3 stuff, but they're talking about it here. So I just went a little step further and explained it a little bit more. Hope you didn't mind learning things a little bit earlier. All right. So exclusive buyer agency agreement, you should use it. Do you have to use it? No. Should you use it? Yes. It helps establish our agency relationship. It shows it explains what duties we owe the buyer, and it explains that we have fiduciary responsibility to them. And it also helps establish evidence in the case that another agent, we have an issue with them trying to steal our client and we're trying to prove who's owed the money. The procuring cause is a term you need to know for exams. What or who is the procuring cause? It's the agent who did the most work leading up to the sale. They're effectively the cause of the sale. Therefore, they're owed the commission. So when two buyer's agents are in dispute as to who's owed the commission, who's owed the commission? The one who can prove they did the most work leading up to that sale, to be the cause of that sale. But as we already discussed, it's difficult to prove, right? All right, moving on. Brokers and salespersons, you guys will be independent contractors. What does that mean? That means that you're responsible for paying your own taxes, your own insurance. Your brokers, when they pay you the commission, they're going to give you the gross pay. You guys ever have a job in your lives? You probably got a check. And you're probably very disappointed when you've seen all the money they took out. And you said, I wish I got the gross. I only got the net. Net is after expenses. Well, guess what? Now you're going to get paid the gross. So you're going to have to remember to put some money aside to pay your taxes at the end of the year. Now, how can I lessen that tax bill? Keep track of all your expenses. You could offset your income by keeping track of your business expenses. We call these write-offs. Hey guys, you know the fee that you paid me to take this class? Is that a business expense?
Yes.
Then you can write it off on your taxes. Keep track of this. Look, if you guys go no further than this class, say you don't even finish this class and you drop out. It's a failed business venture, but nonetheless, it was a business expense and you can write it off on your taxes still. Okay? Same thing with the testing, same thing with fingerprinting, same thing for licensing fees, same thing for MLS fees. You guys gonna need a new cell phone to conduct your real estate business, or maybe a new laptop, or maybe an iPad or a tablet or something.
Maybe some clothes.
Are you gonna, nah, clothes you can't do anymore. No. Clothes or dry cleaning, you used to be able to, yeah. Check with your tax professional. I'm going to stop right there. I'm not going to start getting into explanations of all the little things, okay? Check with your tax professionals about what you can write off and what you cannot, okay? You see what I just did there? I tried to avoid misrepresentation. And what's the best way to avoid misrepresentation? I referred you to the experts that specialize in that.
Yep.
That's actually an exam question. What's the best way to avoid misrepresentation? Refer people to the experts. You guys are going to be in the real estate business and you're going to learn a lot of stuff. You guys, over time, you guys are going to learn how to write stuff into contracts. When you see attorneys doing it for so long, you know how they write it in. So you could actually write some of these things in the contracts. You're going to learn about how to write things into contracts. You're going to learn about inspection conditions and issues, and if something's not wrong or if something's wrong, or how to fix it and what to do. And, you know, but are you a licensed New Jersey home inspector? Should you be giving people that advice? No. Are you an attorney? Should you be giving them legal advice? No. Are you a licensed, if people want to know where all the sex offenders are you the police? Are you the county prosecutor? Do you track them? No. So you should probably instead refer people to where they are if they're interested in where they are. You know, different thing. You always, how is this going to affect my taxes? Well, you should talk to your tax professional about that, your CPA or your tax preparer, right? Even though I have some knowledge about these things, because over time you learn stuff, am I really the expert in those things? No. So if I'm not getting paid extra for that advice, and I'm also not really authorized because I'm not licensed to do so, I'm not the expert. My job as a real estate agent is not to be an expert in everything. My job as a real estate agent is to know who those experts are so I could guide you and point you in the right direction of where you can get the answers to your questions. That's my job, okay? Don't be a jack of all trades, master of none.
Yes,
I hate those people.
yes.
All right. So let's see, the broker and your relationship between you and your broker. This is basically going to talk about your employment agreement that you're going to have signed with your broker. Now, if you're not an employee, if you are an independent contractor, if you're not an employee, you're an independent contractor. Employees get what, W-2 forms at the end of the year for taxes? You guys are going to get 1099 miscellaneous.
Mhm.
Wait, actually, I'm sorry. The Biden administration changed that this year.
Oh,
Yeah, I just found out. It's no longer a 1099 miscellaneous form you get. It's a 1099 NEC. It stands for non-employee compensation. I don't know where they're going with this, but but it's scary.
it is.
All right. So your independent contractor agreement has two sections. There's a sample independent contractor agreement that most brokers throughout the state use, but some have their own custom employment agreements with their agents. The one that's in the book here does not include the addendum A and addendum B that's talked about here below. At least that's what I call them. I call them addendum A and addendum B. These are add-ons to the contract that discuss your commission rates. Okay. So the real estate commission requires your independent contractor agreement have certain things must be in them, whether you're using that standard one that most use or you have your own custom one, your broker has your own custom one. It has to include the compensation rate paid to the salesperson while they're employed at that brokerage firm. For me, I labeled mine addendum A, okay? That's the first add-on. Now, compensation can be stated in a lot of different ways. It could be, you could get paid by the hour, you could get paid based on commission. There's a lot of different ways that this could be based, okay? The brokers promise to turn over money due to the salesperson within 10 days after the commission is received or as soon as the check clears. How soon does your broker have to pay you your commission in a real estate transaction?
10 days.
Or
10 days.
as soon as the check clears?
Mhm.
Yep, because sometimes, rarely, but sometimes it could take longer than 10 days. If that's the case, the broker doesn't have to pay you a commission until they get the money. All right. The rate of compensation paid to the salesperson after their employment is terminated. Wait, what? Okay. Let's just say that you quit, but you were working on a real estate transaction. It didn't close yet. You can't take that transaction with you to the next brokerage firm. Who owns that transaction? The broker, right? So the broker is going to have to assign another one of their agents to finish the work on that transaction till it closes. Now, if you were that agent that the broker assigned to finish, would you do it for free?
No.
No. So this is why the broker cannot pay that agent who quit the full commission that they would normally get on that transaction. They would only get a percentage of the normal fee that they were supposed to get because they had to pay a different agent to finish it. So this one's going to be a little more complicated. Addendum B is a little more complicated because it's based on how much work still had to be done on the transaction, what percentage of the agent's normal fee that they would still be paid. Now, some brokers don't want to be dealing with trying to figure that all out. So on your employment agreement, they'll just write, you quit any transaction you didn't close yet, you don't get paid on, okay? Others will say, well, if this much work is left to be done, you get paid this percentage of your normal transaction. If this much work had to be done, then you get paid this rate. If this much, and they get into it and it gets a little more complicated. It is a headache. So I can understand why some brokers say zero, you leave, you get nothing, no zoop for you, okay? And there has to be a provision, of course, that any changes made to your employment agreement, both parties have to agree to those changes. It's like contract law, right? If you got two parties to a contract, after the contract is signed, can only one of them make a modification to it? No, the other side has to agree to it as well. All right. So those are the requirements from the Real Estate Commission for any independent contractor agreement for us. In addition to that, brokers must provide to the agent a written account of all money due to that salesperson when they leave the brokerage firm within 30 days of their termination. So when you quit or get fired, your broker has to look at all the transactions that you were working on that have not yet closed and figure out how much money you're due. And within 30 days, they have to give you this form, this accounting of how much money you could possibly still make on each transaction if those transactions still close. Okay. So there's a couple things you need to know for exam. Okay. When does the broker have to pay your commission? Within 10 days or as soon as the check clears. What does the broker got to give you within 30 days of your termination? Accounting for any outstanding transactions. Okay, pretty much. So let's go highlight those things and do some writing down here in the book. Okay, so at the end of the first sentence under broker salesperson, it talks about the independent contractor agreement. Just write page 34 at the end of that, because that's where you could find a sample of it in the book, minus the commission and stuff. Okay. After the first bullet point, you don't got to write anything there. I call it addenda A. Other brokers may not call it anything. Highlight the second bullet point that shows that the broker promises to turn over monies due to that agent within 10 days or as soon as the check clears.
Mhm.
And after all the bullet points, the last sentence in that paragraph above advertising, highlight that sentence that talks about that they have to give you accounting within 30 days of your termination. Okay. I like how my sprite is invisible. Can's green. It's got a green screen behind me, so it's using that green screen technology. You don't see the green color. All right. Next up, advertising. A lot of stuff for this section. Hold on one sec for me, guys. Just gonna put on my thing. All right, I'm back. I had to go put my fan on. All right, so let's see. New Jersey Real Estate Commission regulations about advertising apply to all forms of advertising media, whether it is the internet, television, radio, what have you. Social media, print magazine ads, what have you. You have to follow all the advertising rules. So the purpose is intended to let the public know who exactly they're dealing with and other details depending on what you're putting in that ad, which we're about to go over. So all advertising has to comply with both federal as well as state laws. Now, here's another custom slide, of course, I made. All ads must state the brokerage's name, not the broker's name. Let's highlight that in the third paragraph. Let's highlight all ads must indicate the name of the brokerage company, followed by the term realtor, realtist, real estate broker, or real estate agency. You should also highlight the title, advertising, and write study entire section, which goes over to the next page too. A lot of questions on exam out of here. Hint, hint. So Any questions for me so far about what I just had you highlight? Come on, you could muster up one question out of that.
What's a real test?
There you go. That's what I was
That
looking for. All right. So what's a realtist? I never heard of a realtist before. Well, a realtist is a member of that African American Association of Realtors I was telling you about. It's actually not called an African American Association of Realtors, but that's its main purpose, to be an African American Association of Realtors. They actually call themselves NAREB, National Association of Real Estate Brokers, which is basically an African American Association of Realtors. If you go to their website, you could see what their whole business purpose is. Okay. Real estate, let's see. So the term realtor, realtist, real estate broker, or real estate agency, or have the realtor's logo. This is the realtor's logo. I posted two of them here, one in black and one in blue. This is what the realtor's logo looks like. Okay, you guys ever see this before? It looks like that. That's a trademark, registered mark of the members of the National Association of Realtors. Which, by the way, how do you spell realtor? It ends in an OR, not an IR, not an ER, but an OR. It is realtor, not realtor. See, when you say realtor, you could think ER or IR, and now you misspell it. And now I feel so sorry for you when you look like an idiot in your ads. You're a realtor and you don't even know how to spell it, okay? So I've seen agents misspell it. This is why I'm stressing this point out. I don't want you to look stupid, okay? Realtor, okay? So the brokerage's name must be in larger type and more prominently displayed than your own. So let's highlight in the next paragraph, the fourth paragraph. An ad that includes a salesperson's name has to also include the name of the real estate company in larger type or more prominently displayed. The salesperson's full first name and last name must be used, but a nickname may be added. Yes. So if you have a foreign name that's difficult for Americans to pronounce, or if you have a name that you rather go by, well, you know what? You have to use your real first name and your real last name in your advertisements without a doubt. But you could put like in between. You don't have to use your middle name. You could put there instead a nickname that you prefer to be called by, or an Americanized name that some people use, you know, and just put it a little bit larger than your name and like quotes around it, and people will know that's what you want to be called, you know. That's allowable, but you cannot just delete your first name and replace it with an Americanized name or a nickname. You have to use the real first name and the real last name, guys, okay? Okay. So licensee's name has to appear exactly on that license, with the exception of any middle name or nickname, which does not have to be used. Okay. Salesperson's websites. Let's see. Yes. In that same paragraph, if you have your own website, you have to have a link back to your brokerage's website if they have one, and they should. All right. But this is, the book writing is not assuming that they do have one. So instead, they say you have to have a link back to your brokerage's website or their phone number listed. No. If your brokerage has a website, you have to have both the phone number of the brokerage and a link back to the brokerage's website. Now, I suggest, in order to be compliant with the rules, but not losing that captive audience, on your website, make your company logo clickable. That would take you back to your brokerage's website on a page that is for your profile on the brokerage's website. And on your profile page on your brokerage's website, have a link back to your website. Okay. I know it sounds like a circular thing to do, but I'm trying to show you a way so you don't lose that captive audience. If somebody mistakenly clicks on it and gets taken off your site to your broker's website, they'll at least know how to get back to you. And let's see. So let's highlight that. The phone number of the brokerage office, or clearly, let's see, a salesperson's webpage must display the phone number of the brokerage office or clearly indicate a link to the brokerage's webpage. Now, if you put a phone number in any ad, business card is an ad, postcards, anything, you cannot just put a bunch of phone numbers. You have to write next to the phone number what it is to. Is it a fax? Is it a cell? Is it the office? You must never use the term home office. Tell me why.
You shouldn't be in your home.
You're not allowed to have a home office.
Mhm.
Who can have an office in their home? Only the broker, never one of the broker's associates. You guys remember that? And it has to have a separate entrance visible from the street. Remember? Okay.
Fine.
So there we go. That's why. Now, let me give you a little bit of practical advice too at this time. Sometimes I see agents out there, they want to be so reachable with the modern technology out there. They want to be reachable. So they're like, here's my office direct. Here's my cell phone. Here's my personal number. Here's my home number. Here's my office fax. Here's my personal fax. Here's my company email. Here's my personal email. Here's my company's website. And here's my website. Imagine all that on a business card. It gets so busy. It's so busy. I'm going to refer to you back to this simple bit of advice. KISS concept. You know what the KISS concept is, right? You know what KISS stands for? Keep it simple, stupid. Because if you make things complicated, your job as salesperson, if you make things complicated, I've tested this as a broker. I've tested this. I had plenty of agents and we did like street fairs and all kinds of stuff. And I had stacks of business cards and I made sure that I had equal amounts of everybody's business cards there. You get a lot of old school agents, they don't like putting pictures on business cards. And some agents like putting pictures on business cards and some have more information than others. And I put them all up in there and I lined them all up over there. And I actually counted how many business cards at the end of the day people took from each one of them. And first of all, in modern days today, guys, you have to have your picture on a business card. If you don't have it, people just don't take the cards. They really don't. They like the imagery. They like the graphics. It could even be a caricature of yourself. It could be a caricature, not even like your real picture. It could be a drawing of you. They will grab that more than one with no picture on it. All right. So just my bit of advice from sales perspective. Okay. To do that. And then minimize all the information that you have on there. You don't need to have 50 forms of ways of people to get in touch with you. Because if I put down 10 phone numbers that you guys can reach me on, you're probably not going to call me at all. Okay. It's just a simple rule of advertising. People make split-second decisions on what they're going to do right away. Don't believe me? Look up books on branding and marketing. You know, if I say Tide, you guys have an image in your head really quick of their logo or their colors? If I say Coca-Cola, do you? Or Pepsi, do you? That branding works, okay? Now, if I put down 50 different phone numbers and 50 different ways to reach me, you're going to be like, your mind just got like obliviated. You're like all over the place and you're like, all right, I'm not focused either. Thank you for not focusing me. Your job as a salesperson, focus people, give them a call to action on how to reach you, okay? Have about one phone number that if it doesn't call or when people call it, it rings all numbers, you know? All right. By the way, good slides to study from because it's all the highlights, just the highlights. Continuing with the advertising. Property ads must specify the municipal location where the property is located. So let's highlight, all ads must specify the property's municipal location. Now, on the next line, in the next sentence, we're going to highlight phrases such as in the vicinity of are prohibited unless the body of the ad also contains the exact municipal location. And then I want you to underline the word unless. Because this sometimes screws people up when they see a school exam question. All right. What do all real estate property ads have to have? The individual property ads, not the whole real estate ad, but each individual property ad, which could be included in one page ad. The municipal location where the property is located. The municipal location, what is a municipality? It's like the name of a town, city, town, township, borough.
Mhm.
Here's an interesting factoid for you guys who are interested in such stuff. Do you know why they call them cities, towns, townships, boroughs, or other variants? They're all municipalities. Why do they give them these strange different names? I hear answers from people all the time. A lot of times it's just people don't know about the other ones, but they're always like, oh, it's not a city unless it has a certain population, or it's not a city unless it has a hospital in it. That's not true. I live in the city of Linden, New Jersey. Linden doesn't have a hospital in it, and it's a city, right? So why do they call them cities, townships, boroughs, and they're all municipalities? It's the form of government structure that they chose to run that municipality. You want to learn more on government structures? Just go to Wikipedia for types of municipalities. And it may be a little bit, this is interesting stuff for real estate nerds, okay? You may not want to do it, but it's interesting if you're curious about things like this. You know, that's me. I'm curious about stuff. So I'm a wealth of useless information like this. Okay. Put me on Jeopardy one day. All right. Municipal location doesn't need to be included if the property is under a heading in the ad for that municipality. For example, if you have a magazine or a newspaper or a website that has a titled section, Edison, all the properties under that title are in Edison. So you don't have to put Edison in each individual property ad again. It's redundant. That's what the exception is that they're talking about, okay? If in an ad, you mention membership in an MLS, let's highlight this as well. The full name of that MLS must be spelled out. There's more than one MLS in New Jersey, by the way. And that's if that ad is 20 lines or more, or is wider than one column. Then you would have to spell out the full name. Basically, if the ad is large enough, you know, like if you got a half-page ad, full page ad, if it's on a website and you got the room, you can't just say MLS. You see here, I have a generic logo on the screen here of the MLS. This one is one where they combined the realtor's logo to it, but just this, if you were just to focus in on this part, you see that this is a generic MLS logo that a lot of people do. It just says multiple listing service above it. All right, that is a generic MLS logo. MLS is a service, but different MLSs actually have names to them. You have Garden State MLS. You have Central Jersey MLS, formerly Middlesex County. Hold on, I think on the next page, I got a list of them. Yeah, here. You got Garden State MLS. You got Central Jersey MLS. You got Monmouth Ocean County MLS. They call it MOMLS. You got Southern Ocean County MLS, Hudson County MLS, Trend MLS, NJ MLS, and Cape May County MLS. So there's a lot of different MLSs. So just by generically putting in the ad, I'm a member of the MLS. What MLS are you talking about? So basically, the Real Estate Commission's rule on this is anytime you add anything extra into your advertisements, you need to be clear about it. So full disclosure is required. That goes for state and federal laws for all kinds of issues. So we're going to go into these MLSs in a moment. Let's just finish up on this advertising stuff here a little bit more. Ads that refer to a home warranty have to state if that, wait, is that something extra you're adding to the ad? If I say home warranty available or included, do you have any additional questions as a consumer?
Of course.
Sure you do. How much is it? What does it cover? Who's the insurance company? Is it mandatory? Is inspection required? Who's paying for it? Right? Yeah. So anytime you put anything extra in the ad, full disclosure is required. This is just another example of that. So if an ad refers to a home warranty, in that ad, you must state if the warranty is mandatory, if inspections required, who's responsible for paying the fees, etc. So full disclosure is required if offering anything extra where the consumer may have additional questions is the basic rule of thumb to go by. Okay? Let me actually write that in there. Rule of thumb to go by. God. Where are we? Advertise now. Rule of thumb to go by. Dooby-dooby-doo. There we go. Rule of thumb to go by. There we go. All right, now buyers rebates. Rebates. Who can we give buyers rebates to? We already discussed this, right? I got to even turn away from this. Who do we give buyers rebates to?
We don't. give-
Owners of primary home.
Buyers of a primary residence only, if our broker allows it.
Mhm.
Okay, so buyer rebates mentioned in ads have to disclose to the buyer that they're responsible for paying any applicable income taxes and advise them to consult with a tax professional in regards of receiving that rebate. Because I don't know your tax situation and I'm not a tax professional, so I can't give you any information about it. I could just refer you to the expert. So if we're ever offering a rebate in an advertisement, you're going to be advertising that you offer buyers rebates, you should put in that ad that they're responsible for paying the taxes and they should consult with a tax professional. So where is that? Bottom of the page, 20. Any ad, we're going to highlight this, any ad offering a rebate to the purchaser of residential property must disclose the buyer's obligation to pay any applicable taxes and advise the purchaser to consult with a tax professional. A lot of exam questions in this section. I'll tell you. I am telling you. If you're listening, I'm telling you. All right. So, next, we're going to stop the book here for a second, and we're going to go over these MLSs because I created the slide to show you about different MLSs. And because I talked a little bit about different MLSs, you may be thinking, well, why do we have so many MLSs? What's the differences in them? Can I join them? Do I have to join them? Do I pay for them? How much are they? What's the deal? Why do we have so many MLSs? I thought there was just one MLS that you put the listings in. Well, I'll tell you this. Every MLS, which is a multiple listing service, we think of it more of a system, like a computer system these days, where what we do is anytime we get a listing for a property for sale or rent, we put it into this database that we call the MLS. And that's how we share our listing inventory with each other as real estate licensing law and the administrative code requires. Unless unless the owner directs us not to. And then we got to get them to sign a waiver of broker cooperation agreement, right? So every single one of these MLSs, here's a picture of New Jersey and all 21 counties in the state. Every one of these MLSs has a listing for all 21 counties and all 550 municipalities throughout the state. But different MLSs are primarily used by agents in different areas of the state. Even though every single one of these MLSs have a listing for all 21 counties and all 550 municipalities. For instance, when I started in real estate, I started working up in Essex County. I started working in West Orange. And I lived in Linden. I started working in West Orange though. So I was only a member of the Garden State MLS. I worked in Essex. Garden State MLS is primarily used by agents in Union, Essex, Morris, Sussex, Warren, Hunterdon, Somerset counties. So all of this is Garden State MLS. So what determines what MLS is primary for what area? Whatever most of the agents are using in that area. Why is this important to know? Let's break it down to that. Why is this important to know? Not for exams or anything like that. Exams just require that if you get a listing, you got to put it in the MLS within.
Oh,
48 hours. 48 hours. All right. So they don't say what MLS you got to put it in. So you'd be compliant if you put it in any of these MLSs. But if I'm a member of Garden State MLS that covers all these areas, and I'm a member of Central Jersey MLS, formerly just called Middlesex County MLS, guess what its primary area is? Just Middlesex County. They renamed it because they're trying to get a wider area of coverage called Central Jersey. You have the Monmouth Ocean MLS, which covers both of these areas, except for the Southern Ocean County, which is covered by the Southern Ocean County MLS as the primary. Hudson County MLS is up here. So the Hudson County MLS is covered by Hudson County, except for this northernmost strip up here. That is actually part of NJ MLS. NJ MLS covers the northernmost strip of Hudson, Bergen, and Passaic. How would you know that? Well, you wouldn't unless you were an agent that works mainly in that area. Trend MLS covers Mercer, Burlington, Camden, the southwestern part of the state, and Atlantic. And then you have Cape May County MLS, which covers Cape May. Okay, so those are all the MLSs that are currently used in New Jersey and what their primary areas of coverage are. So why am I wasting your time in telling you this? Because I'm not wasting your time. What MLS covers Union County? If I get a listing that's in Union County somewhere, what MLS would I put that in?
Garden State.
Garden State. But could I put it in Middlesex County MLS?
you can put it in any.
I can put it in any. Now, would I be doing right by my client if I put it in the Middlesex County MLS? Would most people who are looking for a house that's somewhere in Union County, would they be searching the Middlesex County MLS for a house that's in Union County?
No.
No.
No. So even though I'm being compliant with the law, I'm not serving my client right, because most people are not going to be looking for that house there. This is a way that I could get a secret pocket listing with obeying the law, but it's being tricky and it's not working in your client's best interest. And I would advise against trying to do such a thing too, because you still could get in trouble in legal ways pertaining to that if somebody found out that's what you were doing and that was your intent. That's all I'm trying to say. Make sure you put the listing in the right MLS. Now, what if the house is in Woodbridge? What MLS would I put it in?
Middle, no.
Central.
Is that Middlesex County?
Yeah, yep, the Central Jersey, or formerly known as Middlesex County MLS, because their primary area is Middlesex County.
Yeah.
Now, what about, isn't Union County very close to Middlesex over here? A lot of these people in this area are always crossing back and forth in this area, the Woodbridge, Union County area. You know what?
Yeah.
Maybe there's some agents in Union County that have clients that would be willing to look in Middlesex County, but a lot of the agents in Union County don't have membership in the Middlesex County MLS because they don't do that much business there. Would it make sense to also put that listing in the Union County MLS?
Yeah, both.
See, that's when it would make sense to put it in another MLS that's not primary for the area. When it's close by and those areas kind of overlap, and you think that you could get buyers from there. I wouldn't only put it in Union County's Garden State MLS. I would also put it in the Middlesex County Central Jersey MLS. I'd put it in
And that's
both.
okay?
That's perfectly fine. You could put it in all the MLSs if you want. But remember, anytime you put a listing in the MLS, the broker has to pay a fee to enter that listing into each MLS. Garden State MLS, I think it's currently $35 to enter a listing. You know, Middlesex County, I think it's about the same. Garden State, I think used to be $15. I think it's like 35 bucks now. I forget. Anyway, different MLSs have different charges. So the broker's going to get a bill for it. So hopefully you're selling those houses too, and not just collecting listings, because that's costing the broker money. Right? Oh, now let's address the next question. Should you and can you join every MLS in the state? Well, let me see. If you're going to be working in Middlesex County, does it make sense? Are you going to be getting listings in Cape May?
No.
And if you did get a listing in Cape May, are you going to be driving down there for doing showings? Every time somebody sees the sign on the front lawn, are you going to be, or the front sand? Are you going to be driving down there every time to show them the property?
Absolutely not.
Hell no. That's a 2.5 hour ride at least, right?
Exactly.
On a good day, going like 90 miles an hour, right? And that's one way. So what are you gonna do? You're gonna drive all the way down there, put a for sale sign on the property, come all the way back almost 5 hours later, your back is killing you. You're like, oh shit, I can't wait to get home and go to sleep, take a nap, and then ring, ring, I'm almost home. Yeah, I just seen a sign on the front lawn over here. Can you show it to me? Yeah, I'll turn right around and I'll be there in a couple hours. It doesn't make sense to do that. See, this is why, even though your license allows you to take a listing anywhere in the state, should you, is a different story. You'd probably be better off and service your clients better if you gave that as a referral to an agent that only works in that area and is more familiar with that area. They're more likely to sell that property and advertise that property in areas where buyers that are looking in that area will look. And you're a lot more likely to sell it quicker, and then earn money. Isn't that the whole idea of getting in real estate here, to earn money? Use your time more productively. I know you're new agents and you would not turn down a listing anywhere. I just showed you an example why it doesn't make sense to. So you're better off giving it as a referral. Can a salesperson send referrals, or do you have to be a referral agent to send referrals?
What was the question?
Can a salesperson send referrals, or do you have to be a referral agent to send referrals?
I think you still can.
You have to be
Any
a referral
licensee
agent.
can send a referral. The only difference with referral agents is they can only send referrals. Salespeople can work with people, listing properties, selling properties, but they can also, and they should, send referrals. Especially in a case like this. Doesn't make sense for you guys to be running around all over the state like that. That's crazy. Okay. Work in a geographic area where you could get the most work done. Get the most use of your time, and very good. Unless you guys are private pilots and you fly down there, then you can maybe enjoy your flying and you could get there quicker and back, right? Then I can understand it. Then I can understand it. Hey, I only mentioned that because I just thought of this one guy I used to work with. He's a kid. He was literally a kid in college, but he got raised by his parents who flied. They had a Cessna, a small Cessna private plane, and they taught him how to fly as a kid. So through real estate, he got involved in real estate while he's in college to help him pay for his college. And he paid for his entire college in like his first year in real estate. And he was like, shit, I can make a lot of money. Now the guy's got a BMW. Now he bought himself a Cessna. He wants to buy himself his own plane. He bought himself a plane, you know. It's like, this kid was hustling though, you know. I mean, you can make money in real estate, but you really got to hustle if you want to make a lot of money. And this kid was hustling. Thing is, he was treating it like a business. He wasn't just like going to the office and waiting for the broker to give him business, you know. The kid was no business. He'd come in, he wouldn't bullshit with you, you know, sit around and just shoot the breeze, you know. He'd be like, I got to run. You know, he's like always going somewhere, always doing something. Now he looked like a kid, but this was a time that I was working at this brokerage where the broker required that if you were in the office, men had to wear suit and tie, women had to be in business dress attire, you know. And this kid, he'd always be running people around in the summer and everything. And he's like, you know, wearing a t-shirt. He comes in and he's like, hey, where are you going? No, you can't be in the office unless where's your shirt and tie? He's like, I ain't got time. I got to meet client. He's like, no, you're in the office. You have to represent the office. You got to put on a tie, you know? So the kid, the broker had an extra shirt and tie he gave to him. He looked like he was wearing his dad's shirt. It was the funniest thing. In the meantime, this kid's hustling and making money hand over fist, you know? It just shows you, even though he looked like a baby-faced kid, you know, you can make a lot of money in this business if you treat it like a business. His clients saw that he treated it like a business and was serious about how he represented them, that he made a lot of money. You know, don't treat it like it's your own party and private resort. Don't put your nose up in the air. Oh, I got my real estate license. My shit don't stink now. You know, don't act like that, guys. People can sense a jerk off a mile away and they're not going to want to do business with you. All right. Here's another little tidbit of advice, not on exam, but very useful. Not meaning to be sexist or anything like that. Ladies, I know you dress and you look hot and all, but I'm telling you, dress business attire appropriate. Don't dress like you're going out clubbing. All right. Men, same advice for the men. Don't dress like you're going to the beach wearing Bermuda shorts and flip-flops. I've seen this. You know, it's a hot day. They're going out and they're doing that. You know, that's funny. I've seen this happen. And the reason why I'm telling you this, you know, ladies, you can look good. You know, I'm sure the guys appreciate it. But the only problem is when you're working as a business and you're selling a property, you're showing properties to a husband and wife. Tell you what, that wife, she don't want to catch her husband checking you out. And if she does, she's not going to want to work with you. She's going to want to find another agent that her husband cannot get his eyes off of, okay? All right, I'm just giving you a little practical advice of things that I have seen, and my chat window is blowing up right now.
You know what, Victor?
Yeah.
I'm so glad that you covered that because I saw a young lady on social media advertising that she had just gotten her real estate license. And I promise you, I thought she was selling a suit or her attire to say club. And she was gorgeous. But I said the picture did not represent the fact that, okay, you're doing actual real estate. It just didn't make any sense.
I know you. Well, the thing is with social media, sometimes people get lost in their messaging of advertisement. They mix it up with their own personal social media.
Mm-hmm.
You know?
Yeah,
You know what I'm
exactly.
saying? They get lost. I mean, I see some of them and I'm like, wow, is that like a dating profile? She's hot, you know?
Right,
and it's like,
right,
hey,
right.
what are you selling?
Yeah.
Yeah, are you selling yourself or are you selling your services here? You know, I mean, it's there's nothing wrong with looking good, but come on, you got to keep it business appropriate when you're treat it like a business is all I'm saying, you know. And there's good reason for that because you can't control what's going on in other people's heads. Okay. And you really don't want to be showing to a couple and you know, and have the wife, the girlfriend, the fiance keep on smacking her man because you know, he keeps checking you out. You know, I mean, some things are beyond your control. You can't help that. You know, you could be wearing a smock and guys will be checking you out, you know, but you know, if you dress business appropriate, at least they're not going to be blaming you for it. They're going to be like, no, she's a good agent. She's treating it like a business, you know. But if you're looking like smoking, you know, they're going to be like, you know, let's find another agent. We don't have to work with that one. Okay. So I'm saying, and I can't tell you how many times I see guys, you know, look with they're wearing, because it's a hot day. I understand the suit and tie thing. It gets crazy. So, I mean, I like to have suit and tie when you're working, but if you're in, it's a hot day, I allow business casual, you know, maybe a collared t-shirt, you know, on hotter days, you could have them that are a little bit cooler, or maybe a regular t-shirt that's branded with company logos and stuff, you know, it's more business attire appropriate, you know, but don't go out with the shorts and stuff like that. And the flip-flops, are you crazy, man? Flip-flops, construction sites and, you know, muddy places. And, you know, it's not really, you know what? You could get along with people and build that business rapport with them. Rapport is a word you're going to hear a lot. You know what rapport is? Anybody ever hear that before? You know what it is? You know what it means as far as sales goes?
It's like building trust.
Yeah, it's building trust like that. Building trust and relationship like that. It's hard to do. Okay. It is a skill. Somebody calls you up over the phone. I'm just looking for the house. How many bedrooms, how many baths? And in that little bit of time, you're trying to not only provide them with the information they're looking at, you're trying to get them in the door. You're trying to find out what they're looking for. You're trying to be helpful, give them more information. You're trying to sound happy, cool, helpful, not bitchy or arrogant or rude, you know, and you're trying to do this all at one time. So it's a matter of your voice inflection, what you're saying, and all this you're doing it is a skill that you have to learn. And look, I've went to seminars over this. Here, you want to see a basic little tip? Get a mirror, not to be vain. When you're on the phone, get a mirror and look at the mirror before you get on the phone and smile into it. Make sure that you're sitting up straight. You're not slouched over. Make sure you're sitting up straight. Because is my voice different now when I talk like this versus if my voice is down and I'm talking like this? You could see it's just not as loud. It's not as prominent and it's not as powerful. It could even sound kind of frumpy on some people, like, oh, when's the day gonna end already, you know? Versus if you're like this and you smile first, force it. Force that smile. And when you get that smile out, listen to my voice. Does my voice sound different when I smile? You know, you can't help it. It's your body. It's just the way that it reacts. This is something they teach you in sales classes. Either stand up when you're on the phone or sit up straight and smile and then get on the phone. Hello, you know, and there's a lot of other tips I could give you, like mimicking, but you got to be careful about that. That's a pro move, mimicking people, because if you do it wrong, it could come out like you're making fun of them. You know, some people have different accents. You know, some people talk quiet and they're very mousy. Some people talk really loud and they're boisterous and they don't even realize they're doing it because that's just their personality. You know, you get people that have an accent, a Southern accent, an Indian accent, you know, whatever. Sales classes actually teach you to mimic the person a little bit. Mimic their volume, mimic their speed that they talk, even mimic their accents. But you better be careful with that one, because if they catch you, If they catch you, they're gonna be like, wait a minute, are you making fun of me? You know, so don't do it. Don't overdo it. It's slight. If you do it slight, it actually makes them feel more comfortable talking to you because you're the same, you know. People who talk quiet and mousy like other people who talk quiet and mousy. People who talk slow like other people who talk slow. They don't want those fast talkers. Blah, 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 blah. What are you trying to sell me? You know, but other people who talk fast, they don't want a slow talker either because, you know, come on, get to the point. Come on, my mind is moving faster, you know? So it's just a sales thing. It's called mimicking. All right. But be careful when you're using it. You get caught, you better find a way to apologize and be like, I'm sorry, I wasn't meaning to make fun of you. And that I can't, you know, just try to dig yourself out of it. Yeah. But it actually works if you actually try it. Try it with your friends, try it with your family before you get involved in business and see if you could get people to do things that you want them to do. I mean, this isn't a class to be manipulative, but just try it. It's human psychology. It's basics of human. Just try it out. Anyway, moving along. So those are all the MLSs in New Jersey. But one thing about these MLSs is they're primarily residential. Now, in all of these MLSs, you could put listings for residential property, for land, for businesses for sale, for commercial property. But if you're working in the commercial industry, you're probably not going to be a member of any of these MLSs. You're going to be a member of one of these. These are the primarily commercial MLSs. CoStar, LoopNet, this one's CIMLS, that's commercial industrial MLS. This is the only one that's requires membership in a realtors association, so therefore licensure. These two, CoStar actually owns LoopNet now. They bought them. It's the largest commercial MLS in the world. There was another one that came out that was becoming a real good competitor for them, but CoStar sued them and ran them out of business early, which was a shame because CoStar is friggin' expensive. The cheapest plan, if you guys want to get started in commercial real estate, you better know that you want to be in commercial real estate and start with a commercial brokerage, not one that dabbles, okay? And then you'll get access to tools like this that you can maybe work with your broker's login before you buy your own. Because you know how much the starting plan to get started with CoStar is? The cheapest one, last time I checked, the cheapest plan in CoStar was $325 a month.
Wow.
Yeah. So if you're going to get started in commercial real estate, you better be sure about it because the tools ain't cheap. All right. Why are they so expensive, you may ask? Well, let's back up a second. These residential MLSs, you're paying for access to put the listings into the MLS. Okay, and you need to be licensed. You need to have a real estate license. And for just about all of them, you also need to be a member of the Realtor Association in good standing, meaning you paid your dues and you completed your Realtors Code of Ethics training class, which you need to complete every 3 years now. And that training is free. When you guys first get your licenses, you're going to have to complete that course, I think, within the first 60 or 90 days of you getting your license, okay? Or gaining membership in the Realtors Association. All right. So only licensees can become members of these residential MLSs, which you could also put commercial properties and businesses in. You as a licensee can only join one of these MLSs if your broker's a member of that MLS. Let me repeat that. You could only join an MLS if your broker's a member of it. Now, whichever MLS is primary for your office, you must be a member of. All the others are optional. Okay. For instance, if you're in Union County, you're probably Garden State's going to be your primary MLS. You must be a member of that. If you want to join Middlesex County, you could. But your broker has to be a member of it first. Okay, just keep that in mind. So You think that may be a job interview question you may want to ask brokers? Guess what? Remember those job interview sheets that I put out there for you? Guess what? I have those questions on there. So in that shared Google Drive. Oh, that's not it. In the shared Google Drive, screening question in a supplemental materials folder, I think I put it. Okay. See, I separated them and I added them here yesterday. This is part of the new student package, but I separated them to interview questions. Okay. And in that interview questions section, I have questions like this. What MLS is the broker a member of? You know, these are some of the questions that I added into there for you. Now, if you remember the commercial MLS, what are you getting in the commercial membership? Okay, to get access to the shared Google Drive, I sent everybody an email. So I sent you guys, I'm just replying to a chat message I got. I sent everybody an email so you guys can, with it. Oh, you got it? Okay. All right. So on that shared Google Drive, you have access to all that stuff, not a problem. The sample interview questions. Now with the commercial MLSs, you do not need to be you don't need to have a real estate license to join them. You just got to be willing to pay that $325 plus a month in order to join it. All right. So a property owner can join this themselves if they wanted to. Now, why is it so much more expensive? Why are you paying all this money for a commercial MLS versus a residential? Look, Garden State MLS is about, you're going to pay about $170 every 6 months for membership. Middlesex County MLS, it's about $480 a year. Monmouth Ocean MLS, that used to be the most expensive. They used to charge agents $600 a year for that. Now they cut the price in half. It's $300 a year. And then the prices for the other ones, you got to check with each one. But those are the ones I'm a member of. Sometimes I'm a member of Trend, because sometimes I get a listing down there in Princeton, Trenton area. And then I'll join it and drop the membership when I don't need it no more. Okay. Commercial MLSs, what are you paying for here? Commercial MLSs, you're not just paying for access, you're also paying for information, for data. So you're paying for data information model, whereas residential MLSs, you pay for access. They have such things as radius searches. You could search based on the demographics of the people in the area, based on their things like income, relationship status, ethnicity, religion, if it's an owner occupant or a renter, if they have children or not, all kinds of factors like that. You could also do radius searches based on street traffic patterns. How many cars drive by this address every day? See, a lot of this information, if this was in the MLS, in the residential MLS, it would be considered discriminatory. You cannot do searches in the residential MLSs based on the demographics of the people that live in the area, based on their income, relationship, their ethnicity, their religion. You know, you cannot search based off of that. That is discriminatory. So why do the commercial MLSs allow it? You guys ever watch a show on TV called Bar Rescue?
Yeah.
John Tapper. You know, he goes in there and he finds these failing bars. And these people actually reach out to him because they have these failing bars and they're trying to rescue them. Thus, Bar Rescue, right? Come on in, John, help me. We know that you're a leading professional and you had all these successful bar businesses. Help us out. So he'll come in and he'll examine the situation. He'll evaluate the business. Why is it failing? Let's see what you're doing and how you're running it now. You guys seen this program. And then at some point he'll come in and he'll say, okay, so how am I going to help? Well, he rolls out this map, right? He pulls out this big map and a blueprint and he's like, well, this is where you're located. And here's a 1 mile, everything within 1 mile, 3 mile, and a 5 mile radius of where we are right here. And he's like, the demographics of the people in this area, they're either blue collar, they're white collar workers, their income level is in this range, they're mostly singles, they're mostly college kids, they're mostly families. So they have what kind of idea of a business would work in this area. Without knowing the demographics, you couldn't properly place a business. For businesses, that information is essential. It's not discriminatory. It's essential if you want to have a successful business. You got to know who your audience is in the area, right? And gear it accordingly. So that's why sometimes you see them say, so many thousand cars drive by this location every day, and they're missing out on you because you got this crappy signage and lighting out front. Okay, where does he get that number from? The MLS. Okay, now the MLS subscribes to other databases and data sources that they make available to their members that aggregates that information. They don't just get it from the DOT, Department of Transportation. Sometimes CoStar has people going out and you guys ever drive down a highway and see like a piece of rubber laying across the road, kind of like with the old fashioned gas stations, you know, every time you drove in, the bell rang, you know, anytime you drove over that piece of rubber, it went ding, 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 ding. There's actually a sensor in there and it's a counter. So every time a car drives over it, it's counting the tires that are passing over it. And that's how they get their car counts. Okay, it could be done by the DOT, it could be done by commercial CoStar or other data aggregators for people who need that information. Knowledge is power. Knowledge is a way to make money. Okay, selling this information, you can make a lot of money, as proven. All right, so that's enough about the MLSs. Any questions about them or no? No. Okay. So Regulation Z, moving along. Regulation Z. We're on top page 21, second paragraph. We're going to highlight an ad may not indiscriminately promise financing. And then I want you to write above that, Regulation Z, just like I have here at the top of the slide. Let me see that you could see the slide. Yep. Regulation Z. Page 259-261, 259 to 261. So you're writing Regulation Z, page 259 to 261. Now it says, an ad may not indiscriminately finance. If I'm offering something indiscriminately, what does that mean? I'm giving it to everyone, right? So when you talk about financing in an ad, you must discriminate. You have to say to those who qualify or to a qualified buyer. Because if you don't, that means you're indiscriminately promising financing to anybody who sees this ad. All right? That's what they mean by indiscriminately. Don't think discrimination, okay? I mean, discrimination is not a bad word. The way that your first impulse is you think of like racial discrimination and those negative terms of discrimination, right? But the word itself, discrimination, what does that mean? It means selective, right? So in this regard, we're offering financing only to those people who qualify for it. So you have to discriminate. Now, Regulation Z is a federal law. It does not apply to real estate. It applies to anybody who offers financing for anything, car industry, anything. Anybody that talks about financing in an advertisement has to comply with this federal law, Regulation Z, which implements TILA, the Truth in Lending Act, that requires full disclosure when talking about financing in an advertisement when certain triggering terms are used. Ooh, triggering terms, another term to understand. What's a triggering term? All right, well, these are the triggering terms that if you see these terms used in ads, then full disclosure is required and you have to follow Regulation Z rules. If an interest rate is mentioned in an ad, if you mention a payment amount, get into this house for $1,700 a month, if you talk about a down payment amount in an ad or the term, like 360 months, 30 years, those are terms, is the length of the financing, right? So if these are the 4 triggering terms that if any of them are used in an ad, full disclosure is required. So what's full disclosure? You have to say to those who qualify or to a qualified buyer. And in addition to that, you would now have to fully disclose all the terms and would require disclosing all the terms. The APR, which is different than the interest rate. APR stands for annual percentage rate. It factors in all those one-time non-reoccurring fees associated with getting the financing. Like if you had to pay for an appraisal to get a mortgage loan, do you have to pay for an appraisal before you could get a mortgage loan? If you had to pay any application fees to get that loan, those are non-reoccurring fees. But are they fees associated with getting that loan? Yes. So if you were to add them into the interest rate over the life of the loan and then break it down to the annual basis, it'd actually tick up the interest rate just a little bit. So the APR is always just a smidgen higher than the interest rate that's advertised. But I like to refer to it, even though it's formally called the annual percentage rate, I like to refer to it as the actual percentage rate or the effective rate that you end up paying if you were to factor in all those costs. Okay. Now, you would have to disclose the APR, any down payment amount if required, and the term. Now, if you do not do this, penalties for violating an administrative order of Regulation Z is $10,000, not up to, it's $10,000 for every day that ad is out there in the public domain violating the rule. And up to 1 year in prison. Now, so $10,000 per day for violation that the violation continues, plus any attorney fees, every day the ads in the public domain. Willful violation is a misdemeanor, punishable by $5,000 fine and up to 1 year in prison. All right. So what's the violation for penalty violating administrative order of Regulation Z? $10,000 per day. What is Regulation Z? It requires full disclosure and truth in financing and advertising when talking about financing in an ad, when certain triggering terms are used. What are the triggering terms? And if any of those triggering terms are seen, full disclosure of all these items is required. If you don't do that, $10,000 per day. Regulation Z triggers what law or implements what law? TILA, the Truth in Lending Act. Okay, so that's one question, possibly. Triggering terms is what you call the words in an ad that would require the full disclosure requirement. That's another question, possibly. What are the triggering terms? That's another question, possibly. What is full disclosure? You have to say to those who qualify or to a qualified buyer, and the APR, down payment, and the term. And what is the fine if you fail to do any of these? $10,000 per day. So 1, 2, 3, 4, 5 possible questions from this, right? Don't mean you're going to get 5 questions from this, but they could ask it in 5 different ways. So you'll get at least 1 or 2, guaranteed, on both exams. Do me a favor, go to page 259. You see how I have all the details specified and pretty clearly on this slide?
Yes.
If I were to have you study from the book and just highlight stuff in the book, it covers 3 pages. It spans 3 pages. And it's still not clear to a lot of people. So let me have you highlight the stuff over here on 259, 260, and 261 relating to this that we just went over. But I think it's a lot better to study this slide. Add this slide to your notes. So on page 259, we're going to highlight the first sentence there, the Truth in Lending Act, which is implemented by Regulation Z. Then on the last line in that paragraph, we're just going to underline, because I'm not sure if this is anything on exam, does not apply to cash transactions or business commercial loans. It only deals with financing residential stuff, as far as real estate's concerned anyway. Then we're going to highlight the next sentence, or not the next sentence, but we're going to highlight Regulation Z requires that the borrower be fully informed of all the finance charges. So full disclosure. Then the last sentence in that paragraph highlights the rules do not apply to home equity loans, HELOC, reverse mortgages, and land loans, mortgages secured by dwellings not attached to the property, like a mobile home. The next paragraph, we did not go over this yet, and we're probably not going to go over it right now, but I want you to put a highlighted box around the entire paragraph. This is something we're going to see several times called TRID. You know what TRID stands for? The reason I drink. You know who taught me that? A speaker from the Real Estate Commission. They said that this law is so freaking convoluted, it's causing me to drink. So TRID stands for the reason I drink. These are these rules that the CFPB, that new agency that President Obama put in place, it's supposed to make things easier, made things more of a headache. And you know, you got the Real Estate Commission, the oversight people saying, "Oh my God, that's bad." Anyway, I'll read it right now for you, but I'm not gonna go over full explanations other than just reading it. It says TRID rules require delivery or mailing of early disclosures about the proposed loan within 3 business days of a completed loan application. Until disclosure has been made, the lender cannot charge any fees except for a credit report. A loan application is considered complete when the prospective borrower provides the address of the property, the loan amount requested, their income, their estimated property value of the property they want to buy, and the names of all the borrowers along with their social security numbers. An acronym to remember that is aliens. So basically, when the aliens are present, you've met that requirement. We'll learn about that in the mortgage chapters. I'm not going to go over that now. All right, there is a TILA RESPA disclosure guide, and there's a website link for it at the bottom of the next paragraph. Just highlight that website link. And then we're going to turn the page. So all that stuff is just that we went over so far, just talks about this. Now, this does not apply to loans. Let's see, go to the 3-day right of rescission and highlight the last sentence. This right of rescission does not apply to residential purchase money first mortgage loans. What's a purchase money mortgage? Read it backwards. Mortgage money to purchase. So any loan used to buy real estate. Okay. Now go to advertising. Second paragraph, we're going to highlight Regulation Z applies to all credit advertising if any one of the following triggering terms is used. And then I highlighted the first 4 bullet points there. I skipped the next 3. And I highlighted the following 3 bullet points right after where it says, for example, full disclosure would be necessary if any of the following terms would be used. And then I drew an arrow connecting the 2 highlighted sets of bullet points. Here, I'm going to show you on screen. Here, let me stop the screen share so that you can see my video in full size. And what did I do? So I did this. Can you see it? Oh my God. Can you see it?
Yeah.
The first set of bullet points, and I skipped the next, and I drew an arrow to it. So the first set of bullet points is the rule. And then that following set of bullet points that I have it drawing an arrow to are examples of the rule. That's all that they're doing there. And that's why I just want to show you that. So for example, amount of percentage or down payment amount. They give an example would be 30-year loan available. Number of payments or payment periods. Well, that would be 30-year loan. I read it backwards. Amount of percentage or down payment required, only 5% down would be the example. Or if you mention a payment amount or charge, payments for $1,432, including principal and interest. Okay, that's an example. If you see anything in an ad like that, you need to comply with Regulation Z rules. All right, next thing, the next page, 261. You see under penalties, highlight the penalty for violation of an administrative order enforcing Regulation Z's $10,000 for each day the violation continues. Now, you probably don't need to study this, but I highlighted it in my book anyway. Willful violation is a misdemeanor punishable by a fine of up to $5,000 and a year in prison or both. All right, and then we could go back to, we're done there highlighting that. That's all the stuff that you need to know, but it's still like, if you have that highlighted in a book and you're only studying that, it may be a little bit harder to get, whereas, you know, being just on this slide's pretty direct. I explain it. Regulation Z is a federal law. It implements TILA, the Truth in Lending Act. It requires full disclosure when talking about financing in an ad if certain triggering terms are used. What are those? It doesn't apply to commercial loans or cash transactions. The triggering terms are interest rate, down payment amount, down payment, or the term. Full disclosure is to those who qualify, to a qualified buyer. You have to use one of those phrases and disclose APR, down payment, and the term. Okay. First of all, there's no reason for you guys to talk about financing in an ad. You guys just put up the sale price. We're asking $400,000 for the house. Okay. Why are you talking about financing in an ad? Are you offering financing? Are you a mortgage rep? No, but you're in sales. And sometimes agents get these bright ideas because they see other people doing it. I've had a broker that required me to do this before, or he suggested that a lot of agents do this. He said, you know how, I'm trying to mimic him because he did it with an accent. Yeah, this guy always spoke with a strong accent. Anyway, he said, you know how, it was a habit, sorry. He's like, you know how charities get people to donate money for the cause? They don't just, you know, try to get you emotionally involved, but they try to show you how cheap it is, how little it is to get started. For as little as the price of a cup of coffee a day, you could feed a child for their lifetime, you know, something like that, right? You guys remember those phrases like that in commercials, right? So then people are more willing to open up their wallets and their pocketbooks and give, right? So why not do that in real estate? Get into this house for as little as so much per week or so much per month with your monthly mortgage payment. But the thing is, if you talk about a payment, isn't that a triggering term? It is. Now you better make sure that first of all, that payment or amount is really a legitimate offer. You didn't just pull that number out of thin air. It's actually a legitimate financing number. So you got to check with a mortgage rep, and you need to keep on file that this is actually a legitimate offer from a financing company. And in order to get it, what would the APR be? What is the amount of down payment they require? 20% down? Is this for a 30-year mortgage with a 20% down payment to those with a, to those who qualify? What does that mean? It could mean they have to have a minimum credit score of 840 or something. Who the hell knows, But you got to have all of that stuff documented, all right? So you have to have a legitimate thing. So in your fine print now on your advertisement, you could put all this stuff. You guys watch TV? You guys ever see car commercials on TV? They're new car dealerships selling cars. They flash up on screen this beautiful car with the commercial, and then they say the cost of the car, and then they say you could get into this with down payment as little as blah 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 blah, with a monthly payment of blah 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 blah, and you got the speed talker that's talking super fast while the print flashes up on screen that's almost the same color as the background, so it's barely legible. But you know what? They're meeting the requirements of the law, okay? Because if they don't, what's the fine for them?
$10,000 a day.
It's the same for them, because this is a federal law that deals with all financing, not just for real estate financing, all financing. So anybody who advertises, if they talk about financing in an ad, this federal law applies to you. It doesn't matter if you're selling widgets, whatever a widget is. Okay. I spent a bit of time on this because it's definitely going to be on exams. And this is one of the things that people have a hard time grasping, but it's really not that difficult when I paint it out as a picture like this. Okay. Now you guys are like, I got it, move on. I know, okay. That's good. I'm doing my job. All right. Highlight in the next paragraph, no advertising or sign may indicate that a property is sold until the sale has closed and title ownership has been transferred. You guys ever see a sold, and write page 349 under the words sold there. What is on page 349? Oh, no, you're, that's after the word title. Sorry. Yeah, 349 has to deal with that word title. If you wrote it under the word sold, just put a little arrow to the word title. Okay. Anyway, I'm going to go over that in just a moment. Let me first talk about the sold issue. All right. You guys ever see a sold sign rider on a real estate sign?
Yeah.
It's you have the company's real estate sign, and they put a little rider on there, sold. Okay. Let me see if I could give you visuals here, because I got some pictures to show you. Signs everywhere. The signs. Let's see. Sorry, I got a lot of signs here I'm going through to show you. I'm trying to find a sold one. Damn, do I have a sold sign right here? A million signs here. I don't think I got one sold. Yeah, I got signs like this. Anyway, a sign rider is something that gives additional information about the property. But if you're going to put a sign rider on there talking about the status of the property, it better be accurate. Truth in advertising, right? Remember when we were talking about the rental referral agencies? I mean, take a look at this. I mean, I got a bunch of signs. I got a bunch of pictures of signs. I don't know why I don't have a sold sign rider here, but look, here's an example of a wacky one that I found.
Oh, what?
I have no idea. Yeah, good to know. Not haunted. All right, whatever. Yeah, there's a lot of wacky signs that agents use out there. Take a look at this one. Hope this doesn't open it up as a separate window. Yes, it does. Now here's another one. Agents sometimes do it for humor purposes, but be careful when you do that.
Oh my God.
Love Shack baby? What the hell is this agent thinking? Is that funny or is that creepy? Please don't include the sheets. All right, whatever. Anyway, you guys get the idea. There's a lot of weird signs that agents use. Okay, so if you have a sold sign rider on a property, that is indicating the status. When has a property been actually sold? When is a property actually considered to be sold?
When the title has been transferred?
When title's been transferred. What is title? Title's another word for ownership. Jesus Christ. I'm sorry, guys. I'm going through a bunch of signs I have here. Apparently, they're a bunch of goofs because they're goof signs that people found. You know, you could get agents all the time. They have sign riders that are just basically simple for sale signs, like this. All right. It could say for sale on there as a rider, but that's if they don't have it on the sign itself. Sometimes it's just a company real estate sign with the branding, and whether it's for sale or for lease, they would put a separate sign rider up. Sometimes agents put up these sign riders to show the status of the property, whether it's sold or pending or what have you. Now, you should never use the term, the one that says pending anymore. Here, I'm gonna see if I can find some of them in here, but I know I got some goofy ones in here too, so just bear with them, you know. For sale by owner. Here's an example of a wacky one, right? Must sell, lost job, can't pay mortgage, wife left, took dog, house a gem, except for the asbestos, best offer. Probably not the best way to sell your house. I could understand his humor and frustration. I don't get that one. All right. For sale by owner, by appointment only. Here's that same house with another goofy sign rider on it. Indoor plumbing. Hey, are you a comedian or are you a real estate salesperson? These are signs fails. But here's some ideas of agents. Look, here's a couple over here trying to sell. You know, they come up with these goofy gimmicks. Hey, whatever, I've seen it before. It works sometimes for people, sometimes not so much. I'll get to that one later. There's another dopey one. Mice included. Free pizza with purchase of house. Is that allowed?
No,
Why?
because you're kind of bribing.
So why, you can't bribe people?
Well, you're not offering it to everyone.
It
That's
must
the
be
thing.
non-contingent.
That's the thing. If you're ever going to offer anything for free to the public, it has to be genuinely free and not contingent upon them doing business with you. So if you're offering free pizza, you got to offer it to everyone that sees that sign, not just the person who purchases the house. That's the answer. That's correct. All right. Let's see what else we see here. See, this is an example of how commercial billboards usually look, although usually they're up for sale. Not for sale. Buy my house. It's not a dump like the Sotheby's up the street. I guess they had a bad experience with a real estate agent. House for sale because my neighbor is a douchebag. All right. Desperate. This is why we need a real estate agent involved in a transaction. We take the emotion out of the transaction and we make them, we depersonalize them. We make it a business transaction. I give up, market wins, buy car, will throw in house. Yeah. I want to insult, I want to sell, insult me with any offer. These are real signs, guys. Okay, Here's some sold sign riders you may see: foreclosure, short sale, price reduced, owner financing. So you guys could buy sign riders like this, or your brokerage may have them. Waterfront property, acreage, how many acres, how many bedrooms. You may want to brag about if they got a lot. I'm gorgeous inside. That's a nice one. That's a good teaser to get people to want to see, right? I'm gorgeous inside.
I like that.
Me too.
You know, this one you're not allowed to use. Real Estate Commission does not want you using this one. Sale pending, or just pending. All right. I own side riders like that. I threw them in the garbage already because you're not allowed to have them. Why? Well, a sold transaction, you cannot use a sold sign rider until the property's actually sold. That means that they closed on it and there's a new owner. If you guys have ever seen a sold sign rider on the property, they better have closed on the transaction already. But have you ever seen a sold sign rider on a property and that sign's been up there for like a month? Anybody ever see that? It's been up there for a long time and it has sold sign rider on it. I bet you an agent is doing this illegally. They slapped a sold sign on there. They may have put the property up on the market for sale and they got their own buyer. They could just have an offer that's not even under contract yet. And they slap a sold sign rider on there. What would the purpose of that be? To try to prevent anybody else from showing an interest in the house.
Yeah.
So that
Yeah.
agent can close, getting both ends of the deal. Whose interest are they putting first?
Theirs.
Their own. I mean, first of all, on that one, the seller should be questioning that. But an agent is not allowed to do that because that does not reflect the status of the property accurately. The home is not sold until the closing of title and there's a new owner on the property. And now they would have to check with that new owner, that buyer who's now the owner, to get their permission to leave their sign on that property with the sold sign rider on it. Now, why the hell would a buyer want to let the other agent in a transaction put their sign on their property and have it up there? They were working against them the whole transaction. Unless it was the same agent that represented the seller and the buyer in the transaction, then I could understand it. But even then, I would go in and approach that seller, that owner now, the new owner, and ask them if I could keep my for sale sign up there with the sold sign rider, just so the neighborhood can see that I sold the property. Okay. I can't foresee that new owner wants me keeping that sign up there for months on end, maybe for a week, right? So if you've seen it there for weeks and weeks on end, I bet you something is wrong with that transaction. Something is going wrong. It's not sold. All right. Now, we're not allowed to use sale pending because what the hell does sale pending mean? Instead, we should use under contract. Okay. Do not use sale pending. Sale pending is very subjective. Look, I get a listing and I put the house on the market for sale. Sale's pending. Pending I find a buyer that makes an offer that's acceptable to the seller. What does that mean? Sale pending. Are you under contract? Did you just list it? I mean, see, it's so subjective, you cannot use it. However, you're allowed to use sign riders like under contract. What does under contract mean? It means that an offer was accepted, it went to attorney review, it's out of attorney review, and now the buyer and seller are in a legally binding contract together. They're under contract. That's what that means. Coming soon listings, be careful with those. I'm going to get to that one in a second. So under contract, sold sign riders, under contract, do you have to use sign riders? No. Actually, I suggest that you don't use them. Sold or under contract. Why? What license are you trying to get?
Sales.
Salesperson, right? So why don't you learn a little bit about sales? Agents who slap up sold sign riders are under contract because they want to show the community that they sold it. Really? I'd rather not have it there. I'd rather just have the sign up there and have buyers call me. because then I could possibly turn them into buyers of other properties. And I could tell them over the phone that that property is no longer available, that it's been sold. However, what are you looking for? Maybe I could find something else in the neighborhood that meets your needs. You know, I could show you any property that's out there. It doesn't matter who it's listed by. If you just slap a sold sign rider on there or under contract, people just won't call. You're chasing away business. Why the hell would you chase away business? Can you see it from my perspective?
Absolutely.
All right. So there's so many agents that do this. Don't go just doing what other agents are doing because they've been in the business for a while and they know what they're doing. So I should probably follow the experts and do what they do. There's a lot of agents out there that are idiots. There's a lot of agents out there that don't do business the right way. So don't play follow the leader for a schmuck, you know? Learn to do things the right way. Learn, innovate, do things on your own. Just make sure that what you're doing is legal, okay? And there's nothing wrong with it. And then you have to keep your ads positive. A sold or under contract, in the eyes of a potential buyer, is that positive or negative to them?
Negative.
Why?
'Cause they don't want to see something that's sold or under contract. They want to see something that's available.
Bingo. Isn't that common sense? It's really common sense. But common sense ain't so common. Feel me? All right. So, what was I going to show you? Oh, hold on one second. I got to show you something else before we move on a little bit to the next thing here. Oh, sorry. Yeah, we'll address the so sold. So what does sold mean? Sold means that there's a new owner, right? And sold can only be up there if there's a transfer of title had occurred. So what is title? I had you write down page 349 here in the book. Because they mentioned the word title, my OCD will not let it go by without explaining to you what the word title means. So guess what? I made a whole slide up just for it. What is title? Go to page 349 for a moment, because some of this stuff is on page 349, but my slide is really good.
Ownership.
Title is a word that means ownership. There's no document in real estate called title. So it's just a word that means ownership. Now, how do we transfer ownership of real estate? We do it by a document that we call a deed. A deed is a document used to transfer title. All right, so a deed's a document used to transfer title, but it's not proof of ownership or evidence of title. All right, so there's two ways we could say this. One, the straightforward way. A deed is a document used to transfer ownership, but it's not proof of ownership. And I'm going to say it another way that sounds a little more learned. Jeez, what's going on with all these weed blowers out here? A deed is an instrument used to convey title, but is not evidence of title. Which one sounds more professional?
The second.
The second one. What wording do you think they're going to be using on exams?
The second.
The second. The first one I say just so that you get a basic understanding. The second one is saying the same exact thing, right? Instruments, another word for document. Conveys, another word for transfer. Evidence is another word for proof. I should have highlighted here. Ownership, title is another word for ownership. Evidence is another word for proof. Here we go. Title is another word for ownership, right? So it's saying the same exact thing in a more learned sounding way, right? So when you guys talk to your clients, you could say, yeah, a deed is an instrument used to convey title, but it's not evidence of title. You know, the 4 evidences of title, ooh, that sounds like an exam question, doesn't it? It is. So on page 349, 349. Page 349, evidence of title. Highlight the words at the end of that first paragraph, evidence of title. And then you're going to highlight, there are 4 generally used forms of title evidence. And then highlight each one of those 4. Abstract of title with attorney's opinion, a title insurance policy, Torrens certificate, and certificate of title. And then highlight, a deed is not proof of title. And then after number 3, Torrens certificate, I want you to write not used in New Jersey. Now, we're not done. There's one more thing I want you to highlight on this page. Abstract of title with attorney's opinion. I want you to highlight an abstract of title is a brief history of all the instruments appearing in the county records that affect title to the parcel in question. And after you highlight that, then we could go back to page 21, and I will fully explain this through the slide that's in front of you. So, title is just a word that means ownership. Deed is a document that's used to transfer that ownership, but it's not proof of ownership. What does that mean? I could have a deed here. As a matter of fact, I do have a blank deed. I'm going to show you guys a blank deed. I have a blank deed that I'm going to show you. And because I have a blank deed, there we go. We'll pull up a blank deed. Come on, Zoom. There we go. Do you guys see the deed?
Yeah.
It came up?
Yeah.
Okay.
Yeah.
So here's a blank deed here that I could fill out. All right. And because I have a deed, does that mean if I fill this out for your property, does that mean I have the legal right to sell your property?
No.
Okay, so there's your proof that a deed is not evidence of title. A deed, by having a deed for your property, it's not proof that I own your property, right? There you go. So let's just say I have a deed and I have it filled out. It does not mean that I am the one that has the legal right to sell that property. That's the only message I wanted to get across here by showing you a blank deed. But let's say that I have this deed. And I do have the right to sell the property. Okay. I sign this deed as the seller. I'm the grantor, the seller. I'm granting my ownership to you, the grantee, the buyer. And I have you named in the deed as the buyer. Deeds do not need to be dated or signed by the buyer to be valid. I, the seller, just need to sign this deed, and I have to have you, the buyer, named in the deed as the one who's receiving it. Transfer of ownership of real estate takes place upon delivery and acceptance of the deed itself. This is why deeds don't need to be dated, because whenever I hand it to you and you have accepted that deed, you now became the owner of the property. Do you need to record this document in a public record to be the owner? You don't. I just told you, when I hand it to you, if you accepted it, you now became the owner. It's always a good practice to record documents in the public record so that the world is aware. If they do a search of the public records, they could see that whoever's holding this is registered in the public record as the owner as well. If they never recorded it, people who search the public record are going to see that the last person who owned it is still reflected as the owner. That could be a bad thing for the buyer, for the new owner. It could be a bad thing for the old owner. What do I mean? If you're now the owner of this property because I sold it to you and I gave you the deed, if somebody trips and falls on the property, who are they suing? if you never recorded this ownership in the public record? Who's that
The
person?
old owner?
The old owner.
No.
They're the one listed as the owner still in the public records. Even though technically you're the new owner legally because you have the paperwork, but you never recorded it, so nobody else knows that, right? Now here, so how could it negatively affect the new owner? Well, let's say that the old owner has a lawsuit against them and somebody wants to put a judgment, gets a judgment against them. Could they put a lien against any property that they're listed as the owner on? Even though you own the property now, you never officially changed your name as the owner in the public records. So therefore, they could attach that lien to your property now because the old owner is the one that's still listed there. Okay, that's why it's in both parties' interest to transfer the ownership in the public record as well, even though legally you're not required to. Okay, so title is a word that means ownership. Deed's the document to transfer ownership, but it's not proof of ownership. Let me ask you a question. I sold my property to you this morning and I signed over the deed and I gave it to you. Are you the owner? Even though you didn't record it in a public record, are you the owner?
Legally, yeah.
Yes, you are. Legally, you are the owner. All right. Now, let's just say I'm kind of a scumbag. I'm a thief. I'm a crook. I really own that property. I sold it to you. I signed a deed and I gave it to you. But you know what? I got a blank deed here. I could fill out another one and I'm going to sell it to somebody else in the afternoon. And I give them a deed too. Is that deed valid? Which deed is valid? How
The
about that? Let me
first
word it.
one.
Let me word it a different way. We got. I'm the legitimate owner, and I give a legitimate deed to two different people. Are those deeds valid?
They're both void.
Or the-
They're both valid.
Yeah.
But only one person can be the owner of that property. Because I didn't sell a partial interest. I sold the complete interest on each one of those deeds.
Okay.
I just did something that I should not have done. I sold the same property to two different people. So my intent was illegal to begin with.
Mhm.
Who's the owner?
They're roommates now.
No, somebody will be an owner. They both have a valid deed. They both have a deed that names them as the new owner, as the buyer, and it was signed by the seller, the legitimate seller. But that legitimate seller signed two of those deeds with two different people. So which one is the owner?
The seller's gonna get
The
sued.
seller. The seller.
No, I
Isn't
gave
it
up my
both?
ownership when I signed the deeds.
The first
Which one of those?
person-
Which one of those buyers is the owner?
The first
The
buyer?
first one.
Why? The seller's deed, the other deed is just as valid.
It's both of them.
You're
Because
50-50.
They didn't say that. In the deed, I gave full ownership to whoever had this deed.
So
And I
none
gave
of
that
them.
when
same
you
deed that
transferred
said the
the
same.
ownership the first time, you owned it and then you transferred it over to someone else. You can't
Why the-
transfer it twice. So that person didn't transfer the ownership over to the second person. After they're legally the owner, they now own the property. Only they can transfer the ownership again.
Why, was there a date or time on that deed?
Yeah, you can't prove that.
So who's the owner? See, I
Who's
keep
ever-
asking this because I'm getting your wheels spinning, am I? All right,
Who's ever
Yeah.
I'm getting you
recorded
to
in
think.
public record.
Whoever records their deed in a public record first is the
To the
owner.
public record.
The race is on. And then the other one has to
Yeah.
find me. And I'll probably be sipping margaritas in some
Be
island
gone
that
in
doesn't offer
Mexico.
extradition treaties, right?
Oh my gosh. Wow, okay.
All right. See, it's the way it works.
Okay.
So is a deed proof of ownership? Because the other guy now got a deed that's worthless. Because the other one
No.
recorded it
Yeah.
first.
No, it's not proof.
So is that deed that the other person have, is that proof of ownership now? Nope. Ain't worth the paper it's printed on. All right.
Nope.
So how do we prove ownership then? Oh, so Recording a document means that you add it to the public record in the County Hall of Records that stores all the ownership documents of land records. So why do we record documents in the public record? It's to put the world on notice of our interest in that property now. Now there's 4 evidences of title, 4 proofs of ownership, and they are an abstract of title with attorney's opinion. All right, let's break that down. What the hell is an abstract? I actually had you highlight it before, but I had you turn the page too. When you guys get insurance on your cars, does the insurance company want an abstract of your driving record?
Yeah.
What does that mean?
They want to see if you have any violations and different things to assess how much they're going to charge you.
So they want to
for
see a
insurance.
complete history of your driving record. Is that what you're saying? See if you were in any accidents, speeding tickets, things like
Right,
that.
exactly, yeah.
Okay, so what's
Yeah,
an abstract?
Right, right.
An abstract
right.
is a condensed history of something, to break it down, right?
Mhm.
I'm just showing you guys how you could figure this out on exam. Like
Yeah.
if you forget what these things are, how you could translate
Mhm.
them in your head into English. An abstract is a condensed history of something. I just showed you by comparing it to your
Right.
abstract for your car insurance.
Mhm.
Title means ownership. So an abstract is a condensed history of all the ownership documents. And where are ownership documents kept? In the County Hall of Records, in the county courthouse, wherever the property is located. And with an attorney's opinion. All right, so an abstract is a condensed history of all the documents that could be found in the public record related to the ownership of that property. That list is all those documents are written on a piece of paper in chronological order according to their date that they were filed in the public records over the years. Somebody called an abstractor goes down, searches the public records and puts all that information here. Now they turn this paper over to an attorney who will then examine the documents and then give their opinion of whether you have good ownership or not, free and clear of any liens or issues. Okay. Now, what they do is they match things up. Like if there was one owner on the property and the property was sold, they'll see one owner sold to this owner. Let's look up the next owner. Okay, shows that owner sold to this owner. They had a mortgage loan for an amount. Okay, there was a satisfaction of mortgage filed for that mortgage. Okay, so it's good. There's no liens anymore on the property. So this is the way they match up things to make sure that the title is good, free and clear of any liens or encumbrances. A certificate of title is similar, except the attorney doesn't hire an abstractor to search the public record. They may search the public record themselves. And certificate of title is done verbally, where an attorney just says that, hey, you got good ownership, but they don't put anything down on paper. All right, well, who would accept that in their right mind? A lender. So the lender for the buyer is always going to reach out to the attorney and ask them if they did a title search or if they have some kind of evidence of title, some kind of proof of ownership. And the attorney says, yeah, I searched the public record myself. There's no liens or encumbrances. They got good title. So just going off of the attorney's word, which is often verbal, just a verbal statement, would be accepted. And then the bank releases the funds to purchase. Now, I wouldn't want to rely on that, though, because if the attorney made a mistake, you could have issues. And if you have a situation with the abstract, if the abstractor missed something in the public record, well, they carry errors and omissions insurance. They could be sued later. If the attorney made a mistake in going over that abstract, well, you'd have to sue the attorney for satisfaction. Good luck with that. Certificate of title, you'd have to sue the attorney. Good luck with that. Title insurance policy, this is more common. This is what we do in New Jersey. A title insurance company would search the public records to make sure that in no time ever in the past has there been any wrongly transferred ownership of property, or any where maybe one of the owners didn't sign the deed, or any liens that have not been paid off and the property was still transferred. That person's truly getting a property free and clear of any claims of anybody possibly saying, I'm the rightful owner of the property, or there's liens on the property that have never been paid off yet. All right. So title insurance policy is what we usually do today. And there's two policies, a buyer's policy and a lender's policy. The buyer's policy would insure the buyer, if anybody ever steps forward and says, I'm the rightful owner of the property, I could prove it. If they can, that current owner has to give up the ownership to them. But they're like, wait a minute, I got a mortgage loan. I paid money to buy this house. Yeah, but if you bought it illegally, buying illegal goods, do you get to keep the goods because you paid for them? If I sell you guys a TV, but that TV was stolen, but you paid me for it, do you get to keep the TV because you paid me? No, because you're buying stolen goods. So it's the same kind of way that it works here. All right. And improperly transferred property is just as good as stolen goods, right? So you would have to turn the property over to me. But where do you stand with all the money you laid out? Well, you know what? If you had a title insurance policy that covered the buyer, it would reimburse any money you put out to buy that property so far to date. And the lender's policy would reimburse any money that's outstanding on the mortgage loan to the lender. That's the way that works. Now, a Torrens certificate is not used in New Jersey. We don't use a Torrens system. This is a three-party system. Anytime that there's a transfer of ownership that occurs, it has to be done down at the public records. All right. But we don't have that type of system in New Jersey. But nonetheless, we need to memorize what the 4 forms of title insurance are. The 4 forms of title evidence. Okay. Now, this is stuff that we're not going to get to until the last chapter, obviously, page 325, but I'm bringing it up now because we're going over the word title, and we're going to need to know what it is throughout this course. And it's not bad because this is a little bit of understanding. It takes a little time to remember all this. And by the time you get to the last chapter, you guys are going to know, you're going to be like, oh yeah, I know that. Title is just a word that means ownership. Deed's the document that's used to transfer ownership, but it's not proof. There's those 4 proofs: abstract of title, attorney's opinion, security, certificate of title, title insurance policy, and Torrens certificate. Boom. All right, you'll have it. You'll have it. Study this slide like this. Beautiful slide right there. Okay. Back it up now. All right, so back to this slide. Coming soon listings. You must have a listing. What are coming soon listings? This was an idea that was gotten from somebody on HGTV. They fix and flip their own properties. So they put a sign out front instead of for sale, and the property's not ready yet. They put a sign rider on there that said coming soon. And all of a sudden that became the rage because they seen it on TV. Wow, that's a good idea. Let's put a coming soon. That'll build up anticipation. And then people can't see it until a certain date. So people are going to be ready, and once we open the doors, they're going to mob in, and we're going to get offers on the property, right? Good thing to do, right? All right. If it's legal, it's legal. Yeah, if it's legal. Coming soon listing is nothing. Can you guys advertise a property that you don't have a listing for?
No.
No. You need an owner's authorization to market their property and to be entitled to a commission. All right. So wait a minute. If you got a listing, doesn't it have to be available to show? Yes, unless the owner signs a delayed showing on that listing because they're not ready to show it yet for whatever reason. They got to finish some repairs or they want to do something. So they give a delayed showing. So a coming soon listing is nothing more than a delayed showing. Well, look, if you're going to delay the showings, can the listing agency show the property?
No, no one can.
No one can. If there's a delayed showing, if it's not available for anybody else to show, then the listing agency can't show it either. That's why we have to put it in the MLS within 48 hours. We got to treat other agencies and other agents fairly. If you got a listing and it's available for you to show, it must be available for other agents to show as well. And if it's not available for them to show, you can't be showing it either. Here, I'm going to pull up this. Garden State MLS came out with a coming soon disclosure for agents. Every MLS, I think, pretty much got one too. I'm just opening it up and then I'm going to put it up on screen. There you go. Let me try to zoom in on this a little bit. Okay, or a lot. So a coming soon listing, this is the coming soon listing form. It says it has to be completed for all delayed showing listings. Listing office, agent's name, address of the property, and when is it first going to be available for showing? Let's look at what they say here. The seller and the listing broker agree that there will be no showings. All capital letters, all bold and underlined. No showings of the property to the prospective purchasers nor any real estate agent for previews or even office caravans prior to the first date of showing. This prohibition against showing previews or caravans applies to the listing broker, all their agents, the listing broker's office, and any other brokers or agents affiliated with that listing company, as well as brokers or agents from offices not affiliated with the listing company. There are no showing exceptions to the prohibitions against showings before the first showing date. The seller can revise the first showing date at any time by providing the listing broker's office with a written request specifying a new first showing date. Upon receipt of such a request, the listing broker must immediately submit this change into the MLS. Now, the initial prohibited showing period and any extensions of the prohibited showing period cannot go more than 10 days. Each extension of the prohibited showing period requires submission of a new executed coming soon listing form. That's one of these. See, this was new as of late 2020. So if it's not available for you to show, it's not available for anybody else to show in that office either. Okay. Free offerings. Can we offer free pizza to anybody who buys the house?
Nope.
No. It's not available for, if you're offering anything for free, it has to be genuinely free, no strings attached, not contingent upon anybody doing business with you. So that sign that we saw with the free pizza for anybody who buys this house, that's actually violation of the law. Now, we didn't go over it yet, but the Real Estate Commission can give us fines if we violate any of these laws that we've been going over. And the fines are to be a minimum of a $250 fine, maximum of $50,000. All right, free appraisals. Can we offer free appraisals? No, we cannot. Why? Because we're not appraisers. We can offer free property valuations to property owners, though, and to buyers. We call them CMAs. It's called a comparative market analysis. We offer those to the public. Sometimes banks or lenders don't want to pay for an appraisal, but they still want a property valuation. So they go to brokers and they ask them for one, but it's a little bit more advanced than a CMA. We call it a BPO. That's a broker's price opinion. That's what we offer to lenders. So CMAs and BPOs are how we as real estate agents price properties. So let's highlight page 21. Any offer of a free item or service must be genuinely free and cannot be contingent upon the purchase or listing of property. Free offer cannot be linked to a lottery, contest, game, or drawing. Advertising that offers free appraisals is also prohibited. Offering a comparative market analysis, CMA, is permissible. You highlighted that too. BPO won't be shown till like chapter 16 or something. And then let's see, the next paragraph says, we cannot discriminate. So what do we got to give to the property owners at time of listing? The Attorney General's memorandum that tells them about the New Jersey laws against discrimination. And if somebody tells us that they want us to discriminate, we're supposed to turn down the listing and not take it. Lastly, we're going to highlight this last sentence. Any advertisement that mentions a specific commission rate or amount must also state that in New Jersey, all commissions are negotiable. All right, so what's that about? You're basically saying that in New Jersey, if you want to advertise that you offer low commissions, you know, you say, hey, we take listings for only 3%. Well, you stated a commission rate or an amount in that ad. Now, in addition to that, you have to write in the ad, in New Jersey, all commissions are negotiable. What is that statement for? It's to say that we don't engage in illegal price fixing. Okay. Title, okay, discrimination, all ads must follow, okay, we cannot advertise in any discriminatory way. Specific commission rates in New Jersey, all commissions are negotiable. This shows that we don't engage in the illegal price fixing practice under the Sherman Antitrust Act and New Jersey law. So, commission rebates, who can we offer commission rebates to?
Buyers of a primary residence.
Thank you. Yes, a buyer of a primary residence only. So rebates must be either they have to be a direct reduction of the commission that's due to the agency. Rebates can only be offered as a credit or check at the closing. And it had to have been stated at the beginning of your business relationship that you were going to be offering a rebate and how much that rebate was going to be. I usually add it into the exclusive buyer's agency agreement. Ooh, you see what I did? It makes it easier. Another way to make it easier to go over the exclusive buyer agency agreement. I say, hey, by the way, if you buy this house through me, I offer buyer's rebates, but you're only going to get it if you sign an exclusive buyer agency agreement, which also specifies, I also added in all the rebate information there because we have to have it in writing on some form. And this is a convenient way to add it into that buyer's rebate. By the way, would you guys offer a rebate to buyers?
No.
It's a direct reduction of your commission. It's lowering your commission before the split with the broker. So it's taken out of both you and the broker's side. So we had one no. Anybody else got an opinion on it? No,
I don't
yes,
think so.
no. Everybody's no?
Nope.
Nobody wants to give any money away?
No.
I could understand why. And that's why most agents do not. Let me ask you a question, guys. Let's keep it real. Bring it in close. Bring it in close. Okay. So let me ask you a question. Anybody here ever been to an open house?
Yeah.
Huh?
Yes.
You've been to open
Yeah.
house, right? What's the first thing the agent has you do when you walk into the open house?
I know.
Take off your shoes.
Sign in.
And
Other than take off the
sign.
shoes, okay. Sign in. Yeah, man, other than take off the shoes and make sure you're wearing a mask these days, right?
Yeah.
They have you sign in. Okay. So you signed into open houses before? All right. Was your name legible?
Not the way I read.
Why are you laughing? Why are you guys laughing? Because you know that it wasn't, right? I've been around the block, Was it even your name that you wrote?
No.
Huh. So why do agents have these sign-in sheets?
Because you're a potential client for them.
Just try to
If it
contact them.
doesn't work out.
All right, so you're potential business for them, right?
Yeah.
What kind of potential business are you if you're writing fake names and making it's not legible, So if you're not even putting your right name, I know the phone number or email address ain't right,
Yeah.
right? Do you know that licensing law requires an agent to have a sign-in sheet? It's not just for, most agents use it for follow-up and feedback for the owner, as well as trying to solicit you as a potential client. But the law requires us to have those sign-in sheets. The law don't give a shit about follow-up or feedback. So why do you suppose we have to have these sign-in sheets? It's for security. What if somebody steals something from the house? We have to have a log that we could then turn over to the police so we could file a police report of everybody that's been in that house. And then they could try to do an insurance claim on the house, on the homeowner's insurance. Okay. This is why we're required to. All right. Now, let's keep it real. We're the real estate agents. We're the ones that, even though we have to do it, a lot of agents don't even know why they have to do it. Okay. You're supposed to retain those records. Wait, how long? Everything for 6 years. You put that in with the listing folder, my friends. So it's supposed to anyway. Most agents don't do that because they don't know why it's even there. Your brokers probably don't even know that. Okay. It's there for security reasons. All right. So I had an epiphany one day when I was doing an open house. Actually, I should say after I did an open house, I seen the sign-in sheet and I was looking at the sign-in sheets because I was wanting to follow up to get some feedback and see if there was any interest from any of those people that saw the property. And I'm looking at the sign-in sheets. You know that I had Mickey Mouse and Donald Duck appear at my open house. And I was like, son of a bitch, what the hell? This is messed up, man. So at that point, I had an epiphany and I was never going to let anybody sign into my open houses again. As a matter of fact, I needed to make sure who you are because you could still lie to me. I require you to show me an ID. You don't need an ID to vote, but you need an ID to come to my open house.
Okay.
Is that illegal?
Different.
Is it illegal? Absolutely not. I'm doing my job. My job is to protect my client's home. I just kicked them out of their house so that I could open it up to the public. My priority is to look out for their property. I need to make sure everybody who's coming in that house says that, I could keep a record of them. All right. So by the way, that's a way that you guys, that's a huge tip I just gave you guys.
That is.
You guys are starting as brand new agents. We have something like 80,000 licensed agents in this state already. We're already over time. We're going to end this in a second. I just noticed the time. We have like 80,000 agents in this state right now. You guys as brand new agents need to find a way to differentiate yourself from other agents that are out there. How do you do it? It could be as simple as something that's free. You ask them for their ID at an open house. Now, let me ask you a question. If you walked into my open house and I didn't let you sign in, I said, can I see your driver's license? I'm going to need to see your ID. What's your reaction going to be to me? Be honest. What would you say to me?
What is it for?
Why?
Why? What is it for? Okay. Why? What's the matter? You never had an agent ask you for your ID before?
Nope.
You didn't? I'm shocked. This is, by the way, this is what I do. I act like this. I overact like this. I say, really? An agent never asked you for ID before? Well, I don't know how other agents conduct their business, but when people hire us to represent them, we represent them in the transaction. And I don't know how an agent can just let anybody sign in, not knowing who they are, and just walk in through the house. What if something went missing? How do they keep track? I don't know how agents do their business. Really? No agent ever asked you for ID? I'm shocked. I really am. you know, but you know what? We represent our clients' interests. What if something gets missing or stolen? We have to turn over this list to the police. We don't just use it for follow-up and feedback. It's if something gets stolen, we need to give that feedback to the police, you know, and this way we have a record, and I've confirmed who it was you are because I checked your ID. So I'm really shocked that no other agent asked for that. That really is amazing, you know. But you know what? If you work with me, are you working with an agent right now? Because if you're not, if you work with me, I could help you search for a home, and I will provide the same level of service to you. Ooh, you see what I just did? I flipped the script.
Yes.
Now, how much did that cost you? How much did that cost you to do that?
Nothing.
Big fat nothing, zero,
Nothing.
right? Now, did it make sense? Did I lie? Did I make anything up there that's BS?
No.
Nope.
I'm just making you
No.
realize what it is that I'm doing, that I am an agent that does something different for my clients when I'm working with them. And a lot of you said, no other agent ever said that. No other agent did, but I am doing something that other agents are not. Tell you what, people who take my class, you know, when they took their class, because I'm starting to see agents out there that I'm getting feedback. They're like, oh no, I went to an open house. They required me to show ID. I was like, who was it? I bet you it was one of my agents. I bet you it was one of my agents, you know? Okay. Now with the rebate, and then we'll get out of here. Okay. I'm sorry I'm holding you late here. With the rebate, if you got people signing in at an open house and they're writing down Donald Duck and Mickey Mouse on a sign-in sheet, is there any incentive to get them to give me their real information if I say, oh, by the way, in addition to me helping you out, providing this great level of service, if you buy a house through me, it doesn't matter what agency the listing is through, but if you use me as your buyer's agent to buy that house, I give buyers rebates. I'll share with you, I'll give you up to 25% of my commission back at closing. Any other agent ever offer you that before? Would you want to be working with me? Would you give me your real information, or be a little more likely to give me your real information then?
Sure. Sure.
So did I just give you a pretty good
Sure.
reason why it would make sense to offer a rebate? Those people, they otherwise wouldn't be your client. Hey, little better giving up a little bit of money, but still making more than nothing.
We're still making
Right?
more.
And here, I'm gonna prove it. If an agent from another state calls you up to give you a referral for a buyer or a seller, would you take that referral, that business referral? You know that they're usually asking for a 25 to 35% referral fee, right? So if you're
Okay.
willing to give it to another agent, why wouldn't you give it to a buyer at an open house?
Why don't you give it to them?
Right? No brainer. Okay. I'm going to close it out here. We're going to be done for the day.